Income Coalition. You just heard from one of my colleagues, a native Washingtonian and resident. Ours is an advocacy organization that advances family preservation through legal and policy advocacy and community engagement to fight poverty and racial inequity. Also, in several days, we will launch a privately funded guaranteed income cash pilot for moms who are involved with the Child Welfare Agency. We've learned a great deal from the design and implementation of our guaranteed income pilot, which along with research informs my testimony today. Our mission is to achieve a permanent guaranteed income, which means regular payments with no strings attached, no work requirements, is to ensure that all DC residents can live above the income floor, the federal poverty line with dignity. 16% of the city's population doesn't. It includes 42% of single mothers in DC, and the Strong Families, Strong Futures program was actually oversubscribed, another testament to this. Chair McDuffie, thank you for your leadership in this region on racial and economic equity in DC and in securing our historic first guaranteed income program, Strong Families, Strong Futures. Thank you for writing legislation to protect the local benefits of all guaranteed income pilot program participants. Our recommendations for the FY24 budget are as follows. We ask that you expand the pilot program to our recommended $20 million funding level with $13.5 million for guaranteed income payments for 750 households above the 132 funded last year to receive payments for over 3 years. And $6.5 million of that would be a hold harmless fund to cover possible benefits lost primarily from housing. We also see additional unfinished regulatory work. And again, you've done a great deal to advance this. However, we ask that you pass a resolution like Illinois General Assembly Public Act 1010415 that requires all agencies in the district to pursue waivers. For example, with DHS and the DC Housing Authority, there needs to be an FNS waiver finalized through the USDA to protect SNAP benefits, and there needs to be a moving to work waiver at DC Housing Authority to protect individuals from increased rent levels and losing eligibility for public housing and vouchers. We suggest for funding purposes that you merge with or take funding from the Career Map program that is proposed. And we also think that the Strong Families, Strong Futures must expand the diversity of groups and neighborhoods in addition to expectant and new mothers. We also want to see the first evaluation of the Strong Families pilot. We know that there will be great results. And we also support the use of funds from this budget to support the proposed district child tax credit and financial support for families with children, bills that are guaranteed income programs for families with minor children. We ask that you hold a hearing if that is what you believe is strategically important to get that funded. And we also ask that DHS and Dmped work together to form.
Your time has expired. If you want to briefly summarize.
No, just thank you, Chair. We look forward to the district continuing to move on the path to guaranteed income for all. I've submitted written testimony and happy to answer any questions.
Thank you for your testimony once again. And I want to take an opportunity just to remind those who have not yet submitted written testimony to committee, we would encourage you all to do so. Next on the witness list is Abca Williams, Executive Director of the DC Fiscal Policy Institute. Good morning to you. Thanks for joining us. You can begin your testimony.
Good morning, Chairman McDuffie and members of the committee. Thanks for the opportunity to testify today. My name is Abca Williams. I'm the Executive Director of the DC Fiscal Policy Institute, where we shape racially just tax, budget, and policy decisions to advance an anti-racist, equitable future. And my testimony today focuses on the proposed expansion to the HID abatement, the Housing in Downtown abatement, and we are calling on the council to reject exemptions from key equity provisions of the abatement, including the affordable housing requirement changes, the TOPA exemption, and the first source in hiring exemption. We ask that you reject the proposed costly increase to the abatement cap in FY28, which could cost over $900 million over the next 20 years. We ask that you add safeguards to this program, and we ask that you consider converting the abatement to a loan program, something along the lines of our Housing Production Trust Fund. Abatements often go to businesses that are already prepared to engage in a particular type of activity, and subsidizing that activity that would have happened anyway. And this has been borne out in the national research on the effectiveness of abatements and other kinds of business incentives. Some have pointed to the NOMA housing abatements made in 2008 as a shining example of the efficacy of tax abatements for this purpose, but the DC has not actually conducted an analysis to determine a causal relationship between those abatements and housing in that neighborhood. And in fact, it's far more likely that development of the New York Avenue Metro station catalyzed the development in that area than the abatements themselves, accompanied by the federal government's efforts to bring thousands of federal employees to new headquarters near the stop. And broader research also confirms that the economic development effects of public investment in transit. So that's supported by research. The shock of the pandemic created an incredible level of uncertainty in DC, like many places across the country. It's arguable that we are just starting to emerge from that crisis, and it's not at all a foregone conclusion that the extreme necessary shift to remote work is permanent. If demand for commercial property remains low or worsens and developers conclude that it benefits their bottom line, then conversions to residential or mixed-use properties will happen without public subsidy, and some have happened already. There's one analysis out there that shows that DC led cities across the nation in office to residential conversions between 2020 and 2021. So we're asking that the council reject the exemptions from TOPA, First Source, and the affordable housing requirement changes. We're asking that you reject the increase to 41 million in 2028. Our estimate is that by 2043, if we spent every dollar under the cap, we'd spend over $900 million. We've laid out some safeguards in my testimony that you can take a look at for making sure that we protect our public dollars and use of them to subsidize this kind of activity. And we do think we have a good model in the Housing Production Trust Fund.
Your time has expired. If you want to briefly summarize.
Yep. So we prefer a more transparent, competitive process that offers low interest loans. And we'd ask that you take a look at that as well. Thanks so much.
Thank you for your testimony this morning. Next on our witness list is Doug Fristenberg, Principal, Stonebridge. Good morning to you. Begin your testimony. You have 3 minutes.
Thank you, Committee Chairman McDuffie and other members of the council for joining. My name is Doug Furstenberg. I'm a principal of Stonebridge Associates. We've been an active developer in Washington for decades. I've submitted written testimony, and I'm just going to provide some other comments based on the testimony and your questions that I've heard so far. First, agree with the opening comments. There's a big concern, and we need big ideas for downtown. And I think one of the most important nuances that I don't want lost in what the mayor's proposed budget included was the term repurposing, such that it's not just a conversion of an existing building, but it is a repurposing, whether that is new construction and not demolition, or actually reusing the existing building. We need to take care of this massive office vacancy that is not going to change anytime in the near future because of the dynamics of the market that people have talked about. So it's time to be bold. And I think we have to look at all the tools in the toolkit. So we need to look at the math. And Committee Chair McDuffie, we're happy to sit down with you. We've done the math many, many times to show what will take to be ultimate viability to make sure these projects can happen. The math is what drives it, as I think Richard mentioned in his question. Most of our capital comes from outside of Washington. They're agnostic. So they're looking for reasonable returns on their investments. We have to learn to be competitive to bring that capital in here that will revitalize our downtown. If we don't revitalize our downtown, we're going to go through a cycle of more safety, revenue loss, that's going to lead to further decline. So now is the time to make these critical investments that will turn the tide that we're facing today so that we can be successful, so that we can build back our revenues. As we saw, that we think the CFO's estimates a modest number of where the commercial office market is going to be going over the next 5 years, so that we need to change that revenue so that the city can invest in these other projects. And just briefly in the last few seconds here, having been there at the beginning of NOMA, I will agree with Ms. Williams that it was many tools that led to the success of NOMA, but it started with the transit station. It was helped greatly by the federal government's office presence in Noma, but that incentive, and I can tell you as a person who benefited from it and saw other people, it greatly increased the speed of which residential development happened in Noma, and that's been the key to success. The mixed-use development of Noma was critical. We're looking for that to come into downtown and help turn it around and really position the city for a broad-based recovery. And I look forward to answering any questions and look forward to meeting with you, any members of council who would like to look at the underlying economics. Thank you for your time.
Thank you for your testimony. Certainly are going to follow up with you about looking at the underlying math. I want to turn next to Gordon Chafin, public witness. Good morning to you. Thanks for joining us. You can begin your testimony.
Thank you, Council Member. I'm a resident of Ward 5, and I'm speaking today because my master's degree is in public policy, specifically the types of financing that you've been talking about. I've been listening to the hearing, and I understand that in order to revitalize downtown, we need to think creatively. I am join the concern of Abca Williams in when we reduce things like first source and mandatory affordability, we're using outdated models of how people choose to live, work, and play. I discourage the council from following with that plan where we use sort of 1990s neoliberalism to incentivize development of what will be market rate units almost entirely, and on the idea that, okay, their market rate, maybe folks who have those incomes will be able to move downtown and free up some of the housing around the DMV to be more to the folks who need the more affordable price point. That's just not how people choose to live. The studies show that when people have higher incomes, they buy more space. And unless you're going to build a bunch of 4-bedroom units for, penthouse style, I don't feel that the downtown will be revitalized by this kind of thinking. I agree creativity is necessary, and count me as a supporter of radical rethinking of public space, K Street Transit way that envisions even less space for private cars. I support congestion pricing. I support low emission zones in all various kinds of revisioning of public space. And I also wanted to speak because in all the talk about commercial to residential conversion, there's not been a lot of talk about more grocery stores, in more healthcare centers, in more daycare centers. I think obviously that's less big project wise as like a $300 million conversion project. But I think that unfortunately, with a lot of the discussion so far, we have forgotten that people need other things than just a house if we're going to envision a place where people drive less. They need daycare and schools also is something that has not been discussed. And if we need a high school like Roosevelt of that size downtown, if we're going to have thousands of people move there. So again, don't compromise affordability, local sourcing, and as you try to do this revitalization. Thank you.
Thank you for your testimony this morning. Next is Hillary Goldfarb, public witness. Good morning to you. You can begin your testimony.
Good morning. I am Hillary Goldfarb, and I thank you for the opportunity to be here this morning. I am Senior Managing Director of Rockefeller Group. I run our DC office, as well as development in the Mid-Atlantic more broadly. We are a developer, operator, and owner recognized for large-scale urban and industrial development. Our portfolio of projects in the DC region specifically includes recently completed buildings, as well as projects currently in pre-development. And this is in both mixed use and industrial contexts. We are currently active in office, multifamily, data center, and other industrial opportunities And one of the things I want to make clear this morning is that we have leased in this region here in DC almost 800,000 square feet of commercial office space over the past several years. And the majority of this has been through the volatility of the pandemic. Now, the question for this committee is how. And I can assure you that we unilaterally cannot manufacture demand. This is because of our longstanding relationships with tenants and with capital partners. And one of our strengths has been an ability to achieve success during all phases of the real estate cycle. Now, that said, in times like today of imminent downturn or challenging economic environments, the key is low regulatory environments. We know that today we can avoid putting DC's competitiveness at risks if we support the housing in downtown that's part of the FY24 Mayor's Budget Support Act. From a capital markets perspective, I'd like to emphasize that this is pretty critical. We do believe that regulations that stress investment downtown can change, and this really will be the key in hurdling past the current and foreseeable future and stresses in an investment downtown. So I'm here today to testify in support of two things. As mentioned, HID, and then also other initiatives currently in progress, specifically like the Vitality Fund, to attract and retain business that makes commitments to locate in DC. I'd also, for Councilmember McDuffie's questions specific to the benefits of removing first source or time limited TOPA exemptions. I really do believe that these are must-haves. They are not nice to haves in today's capital markets environment. And that's sort of how much question that I think threads through a lot of the testimony today is currently we are tracking 11 projects, planned conversions from distressed office. And this is currently in the pipeline. So that means it's filed for permit or is otherwise in planning and pre-development. These 11 projects.
Barb, your time has expired. If you want to summarize very briefly.
Sure. These projects simply cannot and will not start without the HID program. Thank you.
Thank you for your testimony. Next is Tyra Marshall, public witness. Good morning to you. Thanks for joining us. You can begin your testimony. You'll have 3 minutes.
Good morning, Chairperson McDuffie and members of the Committee on Business and Economic Development. My name is Tyra Marshall, and simply I'm a member of the Fletcher Johnson Task Force Committee and a very, very proud resident of Ward 7. My testimony is to encourage a strong support for the mayor's support of her $42 million for the planning of Fletcher Johnson. We are all aware of the esteemed history of Fletcher Johnson. We also know about all of the support that Fletcher Johnson provided the city, such as temporary housing for families, youth for group homes, citizens in needs of service. What I'm asking is that the city provides the same support and give Ward 7 the opportunity to keep pace with the mass economic development that's happening throughout the city. By bringing us Fletcher at the Park, you'll be able to do that. Now, this investment will not only bring us an even the level playing field, but it will also send a message to Ward 7 residents, just as myself, who are proud to be here, that not only are we supported, but we are deserving of that support. I thank you, and I yield back my time.
Just wanted to check and confirm that concludes your testimony?
Yes, it does. It concludes my
All right.
testimony.
I had a little technical difficulties on my side. Thank you for your testimony this morning, Tyra Marshall. Our next witness is Oliver Carr, CEO, Carr Properties. Good morning to you. You can begin your testimony.
Good morning, Chairman McDuffie and members of the committee. My name is Oliver Carr, and I'm the CEO of Carr Properties. And we're an institutionally owned real estate investment company. We've been based in the district for over 20 years. Our firm invests and develops office and residential properties in the DC area, in addition to our activities in other US markets, including Boston and Austin, Texas. In DC, we own about 3 million square feet of commercial office. I've provided written testimony, so I'll keep my comments today in summary form. I'm testifying today to support the mayor's proposed economic incentives to make repurposing of office buildings into residential economically viable. As you've heard this morning, the DC office market is in crisis mode, with the worst market conditions I've ever seen in my career. We have close to a 20% vacancy rate downtown, and utilization of office space currently stands at 46% of pre-pandemic levels. So utilization is how many people are actually coming into the office each day as a statistic. So on top of these demand challenges, office valuations in DC are in free fall due to rapidly rising interest rates and the lack of available financing. As prior speakers have mentioned, more than 50% of office buildings downtown have a value lower than their outstanding debt. That is a really shocking statistic, with billions of dollars of equity value having been completely wiped out. And this is on top of all of the distress downtown with lost restaurants and retail because of workers, not coming back into the city. I think about ways to approach the office market challenges in the near term and in the long term. First, we need to incentivize office to residential uses as a near-term fix. A robust office to residential conversion program will add needed housing downtown and add vitality to the city. And additionally, these conversions will reduce the office market vacancy rate. As a detail on residential conversions, the economic vitality of conversions is extremely challenging. Only with a property tax incentive and relaxation of requirements such as first source can these projects be viable. And I'd be more than happy to work with the committee on an open book basis to go through the economics of office to residential repurposing. Lastly, over the long term, we need a healthy office market downtown. And the only way to make that happen is to have an aggressive strategy to attract businesses to move into DC. In general, large employers are moving out of the city, and we've got to reverse that trend. Thank you for your time today.
And thank you for your testimony this morning. Our final witness for this panel is Robert Swinas, EVP Brookfield Properties. Good morning to you. Begin your testimony.
Good morning. My name is Bobby Swinas, and I serve as the head of the Mid-Atlantic region for Brookfield Properties. Brookfield is actually the largest commercial owner in the district. We own over 5 million square feet of office in the downtown. I'm testifying today in favor of the proposed Housing in Downtown Abatement Amendment Act of 2023. And I want to echo what all the sort of real estate leaders said before me. I also want to address a few of the questions I know Chairman McDuffie brought up a few minutes ago. I've also submitted written testimony as well. I think one thing to point out is at the heart of the mayor's budget and central to sort of her amendment is an unwavering commitment to the health and vitality of the city. We all walk the streets of downtown. It's clear the city needs a visionary plan and comprehensive slate of actions to drive growth, economic growth and job creation, tourism, social services, and housing. I think we're all in agreement there. And the proposed amendments to spur housing creation through conversions and to create a diverse mixed-use downtown are really important. They also increase investment in the city, which drives the tax revenue to sustain all the social service programs that we've all been talking about. But I want to point out, as the largest owner downtown, I want to point out the challenges and what happens if we don't do something bold. Basically, it starts with investment stopping. Values are already down, as people described. I'm betting between 15 and 50%, depending on the asset. As a number of the real estate professionals pointed out, probably 50% of the office buildings downtown are below the debt. So let's say we do nothing. Those assets return to lenders. Lenders do not invest in assets. They don't. So what happens? You have zombie buildings, buildings that there's no investment going into. So what does that mean? That means that there's no capital to bring, I heard someone else say, bring grocery stores to downtown. Very laudable, but without money, that's not happening. So they're not investing. And then you proceed to have a death spiral of some type, where all the challenges we've talked about get worse. So no investment means no one's showing up in the city center. No one showing up in the city center means crime likely gets worse, because crime is really partially a problem based on lack of density. And so safety declines. And then we continue this cycle. And then even viable office buildings become challenged. And then the last piece of that people aren't talking about is tax revenue plummets. So tax revenue plummets and social services, the city relies on get cut. And I think that's the really important element to think about. We need to stop this. We need to stop the cycle that we're going through right now. And that's only through doing some of these amendments as discussed earlier. In summary, in Brookfield, we're committed to the district and look forward to working with the mayor's office, with this committee and the council to pursue programs that lead to a strong, resilient Washington, D.C. Thanks so much.
And thank you for your testimony. Let me ask if Harold Pettigrew is still on, Yvette Banfield. You all testified about a fund, and I don't think we don't have either of your written testimony, and so we'd love to have that for the record. But I wanted to give you, Harold Pettigrew, the opportunity to expound briefly on some insights about this infrastructure fund that you mentioned in your testimony.
Absolutely, and thank you, Mr. Chairman. The idea being that I think for many of the challenges that we see in the small business ecosystem, you have a number of organizations that are looking to make much bigger investments, specifically with bringing online new approaches, whether it is to bring on from maker spaces to co-working spaces. And these are infrastructure projects that are outside of the downtown area, specifically when you look east of the river and other parts of the city that really need additional types of help and supports for entrepreneurs, and specifically, I would say entrepreneurs of color. And so this fund would not necessarily just kind of help the promise of new ideas, but these are actual infrastructure projects that are underway. And the way the idea was crafted was that it would actually be a match. So it challenges the nonprofit to raise private capital that could be a match to this program. And so you would have additional leverage. The imbalance I think we have right now, what's happening across the city is, we have deep challenges downtown. And I know that there is a lot of discussion about that today. But we have over $1 billion worth of development projects that are coming east of the river. And so many of these projects are designed to help blunt any displacement, ensuring that small businesses are equipped with the right information, the right training, the right capital as well. We're a capital provider. And so making sure that there's a new ecosystem in place to support entrepreneurs to be able to take advantage of all the development that actually is coming east of the river. And so that's the basic idea. For us in Wakeif's project, what that looks like is, as I noted, a new business center, a place where businesses know they can get the support and services that they need. One of the challenges we have, however, is private sector being very supportive of our projects. But when it comes to city support, and all of these projects support public service goals, public service aims, the support financially, it just comes in smaller packages. And so this new fund that we're lifting forward through the agenda CNHED is lifting up is really to provide bigger dollars to support bigger ideas. That's the basic notion behind it.
Let me jump in because I want to just ask a question of a couple of the folks who talked about the downtown housing tax abatements. And ask a question similar to what I asked on the first panel about the balance and trying to strike that balance and keeping or trying to inject some vitality back into the downtown. We know there's a number of things that need to happen. And it isn't even a conversation necessarily about the tax abatements. But, you know, and I'll pose this to maybe, you know, Oliver Carr, Robert Swinis, and I think Doug Fristenberg is on this panel as well. But, you know, years ago, there are people who made decisions to invest in office downtown. The market has changed drastically, and we don't have to discuss today all the reasons why it has. But the reality today is what it is in terms of the vacancies, federal government policies around remote work, et cetera. What's the, if you could, for the record, talk about the need for cities to make these sorts of investments rather than, I guess, what the alternative looks like is that, you know, some of these properties go into the vault, banks get the keys at some point, maybe they sell them off. But why wouldn't it not be prudent for a city to allow that to happen and make the investments in some other place or some other part of the city?
I think I'll jump in quickly. I think what you get is, and I'm not going to name cities because I'll get myself in trouble. You'll get a disinvestment from the city that then affects everything else. So we'll use one city. You look at what happens when a major business leaves a city, and that's essentially what's happened with the federal government leaving. And I know the extreme example a couple people have used is what happened when the motor, you know, when cars basically left Detroit. Now they're finally beginning to, you know, over time to begin to figure it out. But think of the cycle down that you have to go through. What I think was being discussed here is an ability to stem that tide and keep that from happening. I don't think anyone wants to get there, but I agreed. And believe me, as we discussed, a lot of people are wiped out equity wise. I mean, it's not like that equity isn't, that the equity folks that made that decision aren't getting wiped out. They will, and they have been. But you've got to stem the tide because the tax revenue from the CBD funds everything else. It's such a huge source of funding for everything else that everyone wants and loves in the city. So I view it a little bit of if you bought a house that's falling down, one of the first things you do is fix the roof. If you don't fix the roof and you redo the kitchen, that kitchen's ruined after a rainstorm. Fix the roof. That's step one. Then you get to everything else.
Got it. I appreciate that. Anybody else want to weigh in? And before I turn to another person on this panel, either of the folks I mentioned.
Yeah, Chairman McDuffie, I would just echo what Bobby Swinis said. I think the office market is in a really tough place, as you've heard from multiple people on the call this morning. And converting, you know, obsolete office into residential does two things. First, it helps to attract people to live downtown, creating more, you know, people in the city, more activity on the street, which can drive retail, restaurants, et cetera. So it adds vitality. But the other benefit of the residential conversions is every building that's converted to residential means there's one less office building. And with, you know, fewer office buildings, vacancy comes down, the market starts to heal a little bit. So those are the moves that we have to make today. And I agree with Bobby's, you know, kind of future state view that if we don't make some bold moves today, downtown is going to be a really scary place. And I don't want to see that.
Yeah.
Thank you for that. Go ahead, Doug. But before you do that, I'm going to just pose one more question. I know my time is over. I want to be mindful of Councilmember Pinto being on here, and I want to also get Erica Williams' perspective in before I pitch it to Councilmember Pinto. So, Doug, I'm going to let you say something, but I want to throw something else out there because the commercial office is taxed at a higher rate than residential multifamily, and there, you know, some people are having discussions now about, you know, taxing multifamily at a higher rate. I imagine that's going to have an impact on capital, you know, that would otherwise support conversions downtown. I'm throwing it out there just to say, you know, that there's a lot of things that people are talking about right now. And I think this notion that we have to sort of shore up our underlying economic fundamentals is an important part of the conversation. So I really want to have this discussion help with the record, because this committee has a lot of work to do. So Doug, you were saying?
Yeah, I'll be quick and then I'll let the other folks chime in. But I think that the 2 points I want to make, one is time. If we take a long time, these lenders will take a very long time, and therefore we'll be sitting here in 4, 5, 6 years and we won't have started the repurposing of these buildings. So it's important to kickstart this effort. Two, from a tax standpoint, and we've done the analysis, when we can fill multifamily buildings, this is all accretive to the district on an overall basis, even at the lower tax rate, because of the various forms of taxes that come in, and we're happy to provide that analysis. So I think the district can net ahead financially through these repurposings, besides all the programmatic benefits and the economic multipliers that they'll receive over time. Thank you for letting me chime in.
Thank you for that. Erica Williams, if I could, you brought an alternate perspective to this conversation around the housing downtown tax abatement. I wanted to give you one other brief opportunity before I pitch it to Councilmember Pinto for a round. You've heard what others have testified to, how important it is to fix the roof before you renovate a room in a home. What's your perspective about how important it is to do some of these things now versus put some of the money, and it's not a great deal, but we're talking about a tighter budget this cycle. So just want to give you an opportunity.
Yeah, thank you. Thanks for asking the question. I think it would be great to see the analysis on the revenue impact that I keep hearing people quote, but we haven't actually seen numbers on what people think the revenue impact will be, because we are moving from a commercial property tax rate to residential when we're converting. We don't actually know what assumptions are going in about how many people are going to move in and why we're confident that that's going to happen. So, I think some of that analysis being shared would be really great. I do think there's a lot of assumption here that just because we build residential units that people will want to live downtown. I think we heard from another person on this panel that, just having units won't make people want to live downtown. I think there's a lot of reason to think that market rate units aren't going to be super attractive in our downtown right now. I know Councilmember Pinto has a new bill that she's put forward that at least acknowledges that there are other things that are needed to make downtown attractive. I think there's a little bit of a chicken or egg conversation there. But I wanted to also just say that there are kind of multiple layers to this conversation. One is about just the question of whether and how much we should subsidize these conversions and residential units downtown. Another is whether we should exempt developers from important requirements that we have for receipt of public subsidy, and that other kinds of developers and folks engaged in economic development will have to comply with. It's a dangerous precedent, I think, to say that this narrow slice of businesses should get exempted because we're in a crisis. We have an affordable housing crisis.
I'm going to jump in I'm sorry to jump in, but I'm going to jump in because I'm way over my time, and I imagine
still require those provisions.
Right.
So I think there's multiple layers.
Erica Williams, I'm gonna pitch it to Councilmember Pinto. I imagine she might touch on some of this, and there may be another opportunity to expound in greater detail. Councilmember Pinto.
Sure. Thank you so much, Chairman McDuffie. And actually, Erica, we can just kind of stay on this topic because I think it's really central to some of the decision points that need to be made in the next several weeks around there are goals and values that the city needs to move forward on. And there are investments that we need to make now. And I worry if we try to do them all at once, we won't see an uptick in applications for these types of projects. And so I just wanted to kind of give you a chance to finish your thought on that. And as we think about not just housing, but on using other tools to incentivize more diverse uses, whether that be childcare centers or retail, hotels, grocery stores, why that's kind of so important for the resiliency of the neighborhood.
Yeah, thank you. Yeah, I think that those other things are really important and are part of, if you want people to want to live in a place or you want it to just be a vibrant area, you need a lot of other things in place. And I would say that for public, use of public funds, we should be thinking about where can the city invest in things that are broadly beneficial. And I know there's this kind of down the road economic argument that's being made, but I'm saying, I think the investment in the metro in Noma was a broadly beneficial investment and use of public dollars, right? Versus an abatement that goes to a small slice of our businesses. And so go ahead.
Sorry, I have a bunch of questions that I want to get to, so I'm going to keep moving because this time is going to go fast. I wanted to ask, I was going to start with you, Doug, but Robert or Hillary may have thoughts on this too. The budget proposal includes the $41 million investment in fiscal year 2028. Can you speak to the importance of that timeline, that even though it's outside of the financial plan, what kind of assurance that gives to someone considering a type of project like this?
Yeah, so as we were looking and studying this, it was, trying to find enough to get to the 7,000 or 8,000 units to really get downtown jump started. If someone is going to start a project in the next year or two, their conversion time or repurposing time is probably a year or two as well. So for somebody being able to count on that in, even if it's in the first year, maybe even the second year of their redevelopment, they can factor that into their underlying math. So we're comfortable that we were hoping to get a little bit more money in year 4 of the plan as opposed to essentially year 5. But just being realistic, we were able to get comfortable that we could grow at a few thousand during the plan and then really have that big number out there where we could get that jump up into the 7,000 or 8,000 units. And so I think developers with the financial partners will be able to use that tool and get things started during the plan and realize them right outside.
Okay, thank you. And a number of you touched on this kind of broader climate and some of the kind of considerations going to bringing business downtown. And I know, Hillary, you talked about kind of the regulatory environment. Can you expand on that a little bit, not just for housing conversions, but the types of things that we as a city can do in partnership with the private sector to make relocating a business downtown more attractive?
Sure, and thank you. It's especially my written testimony. I did include support for initiatives currently in progress, for example, the Vitality Fund, that are just so critical, and a muscular economic development effort that really, from a tenant retention and recruitment standpoint, those touches are just critical. I think that we like, and I think from a headline view, the sort of burdensome nature of regulation in general, it doesn't resonate. But I think right now we are looking at a total of 28 different legislative actions or initiatives that for housing, office across the city, that either the threat of or a change to really does impact a capital partner's willingness to make a decision that I'm affirmatively going to invest in our city for the long term. And I think it may have been Doug or it may have been somebody on the previous panel who mentioned, we are all native Washingtonians. We are committed as individuals to the city. We want to be here. We want to do business here. We are raising families here and are committed to our future. But our capital partners are not as ideological, and they can very easily shift allocation priorities to other jurisdictions, other cities. And somebody like Rockefeller, which does take a national view, what is almost which is very consistent across economic downturns, is that in low barrier to entry, low regulatory environments, that's where capital goes in downturns. And so it's why We truly believe that we can avoid putting our competitiveness at risk if we act today. Councilmember, I hope that answers your question.
Yes, thank you so much. And Robert, I want to give you a chance and feel free to elaborate on what Hillary was talking about, but I also, with Brookfield's perspective and thinking about what other markets are doing effectively, if you can touch on that as well.
Yeah, so I would say we actually have a global perspective where we invest internationally as well. And it's not just a low regulatory environment, it's consistency and actually understanding timeframes. TOPA is an excellent example. The timeframe for TOPA is unknown in a lot of instances. It could take you a month to get through TOPA, could take you 18 months. And by the way, it doesn't serve its purpose, which is a whole separate conversation to have. It doesn't serve its purpose in most instances. So it really should be readdressed, period. But yeah, as we look at these sort of environments when we invest, anything that adds uncertainty, it's all about uncertainty. And anything that adds is clarity and simplification is what people are looking for right now. And DC, as Hillary's pointing out, continues to add layers that basically move the ball. It's Lucy moving the ball on Charlie Brown, which is a real problem for investors. They want to know exactly where the barriers are, exactly what they're sort of investing between. And because as Hillary said, they don't care where they put their money. These are, and by the way, these are pension funds, labor unions, et cetera. They don't care. They don't care if they're investing in cities, they don't care if they're in different countries, they don't care. And so they're just looking for the easiest, most straightforward investment. So that I think is really, really important. And let me just jump on First Source really quickly, because I think that local hiring is incredibly laudable and everyone wants to do it. We actually do a ton at the yards where we've developed, but there's just not a big pool of eligible candidates. And so really what the investment should be, it should be in investing in the workforce development. And that should be done separately. And really that should be something that we're focused on, because right now we're trying to create as much housing as possible, as we've all discussed. Housing, one of the ways is supply to allow obviously these conversions in downtown, but also to allow for more affordable housing. Putting First Source on top of it just slows everything down and causes problems. We should be investing in that group. Don't get me wrong, but there aren't enough people. And there's a bureaucratic process that just takes forever. So I mean, we're just trying to simplify all this, which will allow more investment to take place.
Okay, well, thank you so much. I'm out of time this round, but I do think it's a really important part of the conversation is some of the investment decisions taking place with capital outside of DC that's sometimes missing from the conversation of how to get this balance right, but is very relevant to what we're going to realistically see in the next several years. So thank you all very much. Thank you, Chairman McDuffie.
Thank you, Councilmember Pinto. And thank you to the witnesses on this panel. We're going to move on to the next panel, starting with Sharice Mohammed, Eben Allen, Takia Tate, Karna Moody, Lamont Geddes, Greg Leroy, Sharice Crawford, Alex Baca, Patrick Powell, Victoria Gonzalez, I'm pronouncing that wrong, Gonzalez, Kelvin Brown, Kenzie Latoy, Takia Shire, Dorothy Douglas, Dev Myers, Jay Rudell Tabisola, Patricia Stamper, Valerio Johnson, and Babatunde Oluyede. While staff is migrating others over, since we have Sharice Mohammed present, we appreciate your patience, yours and the other witnesses. I know it's been a long morning so far, but thank you for being here. You can bring in your testimony. You'll have 3 minutes.
Thank you, Mr. Chairman. Greetings, Councilmember McDuffie and members of the Committee on Business and Economic Development. My name is Sharice Muhammad. I'm a Ward 7 resident, native Washingtonian, and former ANC Commissioner. I'm here to provide testimony in support of the Mayor's request to provide $42 million to the Dmped for the Fletcher Johnson at the Park development. I would also make mention of my support for ANC 7E as they navigate this project on behalf of the community. I'm well aware of the financial constraints the city is currently in and recognize how critical the examination of each budget item requires. As noted in previous testimony, for the past 15 years, the greater Ward 7 communities have coalesced in favor of the development of the Fletcher Johnson project. I'm particularly elated to know that Greg Cardona partners were awarded the RFP. They have an excellent track record in Ward 7, as I have worked with them directly as former chair of ANC 7D. An example of their work with the communities in Ward 7 with specific focus on community engagement is the upcoming grand opening of the residences at Kenilworth Park Assisted Living, the 155-unit facility for seniors and those in need of assisted living. The mayor's proposed $42 million allocation to Dmped would be a needed investment in the mitigation of an antiquated structural and environmental infrastructure of the campus. Fletcher Johnson at the park is a needed retail and environmental anchor on the Benning Road corridor, which will avail the ward economic opportunities, jobs, and other transformative developments. I appreciate your leadership, Chairman McDuffie, and I hope that Ward 7 can count on your support. I welcome any questions you or the committee members have of me, and thank you for your time and attention.
And thank
This
you.
ends my testimony.
Thank you for your time and your testimony this morning. Next is Eben Allen. Okay, we're gonna move on next to Takia Tate. Good morning to you.
Good morning, council member. Okay, I guess I can start. Good morning, council member again, McDuffie and council member Pinto. My name is Takia T.N. Tate, and I'm presenting this testimony on behalf of the Fletcher Johnson Task Force. As the former ANC for this area, co-founding chair and current vice chair of the Fletcher Johnson Task Force, I urge you to approve an existing line item in the district's operating budget for the maintenance of Fletcher Johnson through the Department of General Services at $300,000. We also request that DGS now work with the deputy mayor for planning and economic development, which manages the portfolio to allocate and utilize these funds. Additionally, we also ask that you maintain the mayor's proposed FY24 request for $42 million over the course of 3 years as a capital investment for the future development of Fletcher Johnson. We're very excited about the proposed amenities and the possibilities of this becoming an economic hub for Ward 7 and for the district, just like our infamous Skyland. Our initial request has been supported by the Councilmember Gray, and the past few budgets, which is for the regular maintenance to prevent ongoing crime and illegal activities, and for our children to be able to use the football space in the interim phase of development. We now also ask that the council maintain the proposed $42 million for the redevelopment of Fletcher Johnson. We need affordable housing. We need more grocery stores, and we would love to have sit-down restaurants and retail opportunities at this space. Although the redevelopment falls under, for Fletcher Johnson falls under Dmped, we do recognize that this site is currently vacant, and under the DGS vacant building protocol, it requires proper maintenance. Again, this should also apply to Fletcher Johnson. The Fletcher Johnson Task Force consists of representatives from every Ward 7 ANC, civic, and citizen association. We've been working together since 2019 to ensure that the development of this site meets the community needs. I want to thank you. I want to thank Councilmember Gray, Director Anderson in his former role for their response to these concerns when I first raised it as the former ANC for this commission and the chair's Fletcher Johnson. Again, we continue to request proper maintenance of Fletcher Johnson site, and we'd like you to keep in the budget the 42 million for the future development of this site. Thank you again, and I'm open to any questions you may have.
And thank you for your testimony this morning.
Absolutely.
Next is Charna Moody, Old Yoga. I don't think we see that person. Lamont Geddes. Or hasn't joined yet. Let's move on to Greg Leroy, Executive Director, Good Jobs First. Good morning to you. You can begin your testimony. You have 3 minutes.
Thank you, Mr. Chairman. My name is Greg Leroy, and I'm the Executive Director of Good Jobs First, a nonprofit, nonpartisan economic development watchdog group based and founded in DC for 25 years. My main message is that HID, as proposed, is costly, risky, and indifferent to market dynamics. Creating a 20-year property tax abatement entitlement assumes the district knows what its housing and office markets will look like in the year 2043. I don't think that's a rational or reasonable assumption. Losing a total of a proposed $909 million in revenue by FY43 at the rate of more than $40 million per year and rising starting by FY 2028 would commit the district to a very large new spending line item. And since it would be structured as an as-of-right abatement or entitlement, it would not be subject to the normal safeguards of annual appropriations reviews. One can easily see an abatement like this playing out more like a windfall in some areas that already have some considerable housing or offices that used to be housing. The forms of office space within DC's downtown range from federally occupied compounds to offices in areas such as DuPont Circle and the West End that were first built as residences. This law would treat them equally, yet the previous residences would obviously be the cheapest to convert. Such an abatement would cause, because downtowns border bisect areas with existing mixed use, perverse situations where two properties within a stone's throw of each other could have wildly disparate property tax bills, and therefore market and profit advantages or disadvantages. That's a recipe for taxpayer resentment and could even prompt some of those with non-abated taxes to appeal their assessments to seek a more level playing field. We recommend instead that the abatements be made shorter and descending, no longer than 3 to 5 years, and maybe a phase down from 100 to 80% in year 2, and so on. It should also be flexible, tied to the market. You have to reduce your risks based on market-based corrections. And there are consultants and software to enable you to do this. The district has to be able to take its foot off the gas pedal to react to market changes in the future. There are tools available. I can send your staff to them, enabling you to monitor the health of the cities right down to the parcel level or subsets of parcel levels, because the one size doesn't fit all. The district downtown area is so varied. And there's also software to enable you to monitor things based on even a payroll or rent frequency basis. We also recommend that the district use this as a hackathon moment for creativity. You should be seeking the ideas of architects and planners and local universities, planning and business schools, housing advocates, especially those who specialize in racially just and affordable housing innovations. In the same way that a cottage industry has evolved to repurpose dead shopping malls, the district should foster the birth of a post-pandemic cottage industry for mixed-use office buildings. Thank you for your time.
Thank you for your testimony. Next is Sharice Crawford. I don't see is joined just yet, so we're going to turn to Alex Baca, DC Policy Director, Greater Washington. Good morning to you. Thanks for joining. You can begin your testimony.
Good morning, good afternoon, almost. My name is Alex Baca, and I am testifying on behalf of Greater Washington, where I serve as DC Policy Director. I will submit to the committee a written copy of my remarks momentarily, because I'm still working on them, and I wanted to be sensitive to what has been presented by some of the development entities today, since that's what we're particularly focused on. I myself am struggling deeply with what the right next step is for the district. I fully grasp the gravity of downtown's current economic condition and have myself repeatedly argued for a more consistent and predictable environment to enable developers to build more income-restricted, subsidized housing and market rate housing. I wish we had in place already the policies that I've said for many years now that I'm confident could relieve some of the tax of the regulatory environment, like changing the HIDE Act or by right permitting or low interest loans provided by the district. We don't have those things, despite me saying that we should. That's not a policy infrastructure that really exists. And so I know that nothing can match the speed of saying to a lender who doesn't live here, in whatever year, I won't owe the district any money for the assessed value of my property. So I'm a reliable investment. GGWash has been the advocate for more housing and more affordable housing everywhere. In the 15 years since we've been around, we've not just written that on the blog that many people read, but we've actively worked to change the zoning code and the comprehensive plan to make more housing and more affordable housing legal, especially in places where it isn't currently. So we're fully supportive of more housing downtown. That's not, at issue. I don't question that, even though I do agree that simply building units doesn't mean that people will move there. But we don't think that should be exempted from TOPA. TOPA is a right. Starting to chip away at the universality of a right is a really dangerous, slippery slope. Exempting first floors, I get it. I worked in architecture and construction. I know the burden that places on a project. I also don't totally buy that that's the best long-term course of action, but I get the need to move fast. And even though we're opposed to a $41 million tax abatement in FY28, I suspect that some form of it is going to go forward. Given that, I'd like to see the conversation around downtown focus on what does it need to be an attractive place, which I think means making it a dense, walkable place with lots of stuff and lots of people. We don't need to capitulate to the demands for both a tax abatement and a TOPA exemption and a first source exemption, and that everyone needs to drive downtown and, which I think is a sort of form of the narrative that is happening. I can riff on this all day. My time is almost up. I hope that this is a conversation that GGWash can continue with the committee and the council members here today. Thank you.
And thank you for your testimony. I know you had already previously reached out. I saw a message that you sent. Obviously, look forward to getting your written testimony as well. Next is Patrick Powell, Chief of Staff, Golden Triangle Bid. Welcome, and you can begin your testimony. You have 3 minutes.
Good morning, Council Member McDuffie and Council Member Pinto and members of the Committee on Business and Economic Development and staff. My name is Patrick Powell. I'm the Chief of Staff of the Golden Triangle Business Improvement District. The bid comprises the west end of downtown area, a majority of Washington's Central Business District. And I thank you for the opportunity to testify. First, I'd like to acknowledge the critical role that Dmped has played and is playing in the Golden Triangle's effort to reimagine our neighborhood. We are working closely with them on a host of initiatives, and they continue to be a steadfast partner in the critical work ahead. Today, however, I want to address the committee about the recently introduced Recovery Act, and more specifically, the Safe Community Corridors Grant Program. As currently outlined in Councilmember Pinto's bill, the Safe Community Corridors Program would be administered by Dmped and provide eligible community organizations grants to promote public safety and health within commercial neighborhoods. COVID has presented many challenges for the downtown, as we've heard on today's conversation. For us, with the loss of over 130 retailers and occupancy rates around 40%, dead spaces bounded by vacant retail spaces and little foot traffic continue to leave residents, workers, and visitors with concerns about safety. While the proposed Safe Community Corridors Grant Program will not replace the need for a well-trained, well-organized police force, nor will it replace the business beat officers we've lost through shift changes, through staffing changes, and through the staffing shortfalls from MPD, such a program could fill a gap and provide a much-needed service, especially in the Golden Triangle. Through COVID, the bid has heard repeatedly from our members about public safety in the neighborhood. Many of these concerns are very much founded, and some are perceived issues caused by not seeing any sort of public safety presence. Like many neighborhoods, the bid has seen an increase in many of the crime categories. We have also seen a very significant increase in calls for our Golden Triangle Homeless Outreach Team and for the district's community response team in response to medical health emergencies. Establishment of a neighborhood-based safety program would help bring a more immediate initial response to these mental health issues, helping to address CRT's availability issues and providing harm reduction for drug overdoses, de-escalation for potential conflicts, potential to provide escorts and more. This program would also be a huge benefit for our small business owners by helping connect them with district resources, providing guidance and advice on improvements to safety systems, plans, and more. The program could also help identify safety-related public infrastructure, bike and pedestrian issues that could be put into 311 and escalated with agencies. And in closing, the Recovery Act Safe Corridors Grant Program would provide a unique approach to public safety at a time when we think we need to think outside the box and look for alternatives to traditional policing and crime prevention. Thank you.
Thank you for your testimony. Next on our list is Victoria Gonzalez. Good morning to you. Thanks for joining us. You can begin your testimony. You have 3 minutes.
Good morning, Councilmember. Thank you for the opportunity to speak today. My name is Victoria Goncalves. I'm a project manager at Mi Casa and a tenant in a rent-controlled building in Ward 3. Mi Casa is an affordable housing nonprofit dedicated to providing quality, affordable housing to DC residents at very and extremely low income levels, the majority of whom identify as immigrants, Latino, or Black. Mi Casa believes that housing is a human right, and we work to increase the supply of affordable housing to ensure that low-income residents have a future stake in the neighborhoods they call home. The mayor's budget includes the Housing in Downtown plan, which would facilitate the conversion of office space into housing in downtown. Adding much-needed housing to this area of the city is an important goal that we support. We understand the importance of a revitalized downtown that is accessible to district residents, which is why we believe that this new housing should have strong affordability requirements as well as tenant protections. I'm here to express our disagreement with the TOPA exemption proposed by the mayor's office for these projects. We believe that TOPA is a paramount tenant protection, and we are opposed to any attempt to subvert this right. Almost all affordable housing preservation projects in DC are facilitated by TOPA. TOPA gives tenants the rights to protect their homes and their families from displacement. When successfully leveraged, TOPA is the most important tool we have to preserve affordable rental housing, providing opportunities for home ownership for low-income tenants, minimizing displacement of existing tenants, and encouraging the formation of tenant associations. TOPA's public benefits are maximized when there's also funding available to help tenants exercise their TOPA rights. We urge the council to pass the Recovery Amendment Act of 2023 proposed by Councilmember Pinto. This act supports the goal of creating housing in downtown without stripping critical requirements of TOPA. We additionally support the goals of increasing critical services such as childcare, urgent care, and grocery stores to be included in these plans. Lastly, I would like to repeat some of our additional budget asks. We believe that we need robust funding dedicated to preserving existing affordable housing. With that, we urge the council to restore funding to the Housing Production Trust Fund to at least $200 million. We support ERAP levels at least $36 million and the local rent supplement program at least $53 million total. Thank you for the opportunity to testify, and I look forward with engaging with your office on these issues.
Thank you for your testimony. We really appreciate you providing it to the committee. The next person on our list is Kelvin Brown, ANC Commissioner 7B and also Chair of 7B. Welcome. Thanks for joining us, Commissioner. You can begin your testimony.
Thank you so much, Chairman. Good morning. I thought I'd be on in the afternoon, but good morning, everyone. And thank you so much for holding today's budget oversight hearing on this most important matter. I would like to extend greetings to the Chairman, Councilmember Kenya McDuffie, other attending council members and committee members and their staffs, and to the participating residents from across DC. My name is Kelvin Brown, and I proudly serve as the ANC Commissioner representing Single Member District 7B06. I'm also the Chairman of Advisory Neighborhood Commission 7B, board member for the Marshall Heights Community Development Organization, and a senior housing professional. And I'm here to provide support for the mayor's budget request for Fletcher Johnson. At the heart of the Marshall Heights community lies an abandoned, dilapidated, and unsafe structure of what was once a thriving school and recreation center. It was the heartbeat of the community, an oasis that offered programming, after-school activities, and learning opportunities for our youth. These days have long passed us, but now we have a real opportunity to bring prosperity, opportunity, and equity to our neighbors in and around the marginalized community. This is a real opportunity to provide good jobs, safe and stable housing, retail development, small business incubator space, and outdoor recreation areas for an entire community, to name a few amenities. And as we know, the site has a number of challenges, whether it be topography, site contamination, asbestos, and lead paint, and other needed infrastructure requirements. But with these changes and challenges, it brings about opportunity. Currently, the project team is working to understand and disposition the site, but to do so, it requires a minimal investment as requested in the mayor's FY24 budget of $42 million that has been allocated. This potential is enormous for the site, and together we can work collectively to reimagine what the new site could look like for one of the largest remaining land tracts in Ward 7. I would also mention that we must look into the funding for wraparound supportive services that will help keep our people housed, healthy, and able to stay in the community. This investment is more than just about investing in brick and mortar, but better yet, it is a clear opportunity for us to invest in our people and the people of Ward 7. Economic empowerment has been lacking in Black communities historically, but the Fletcher Johnson project has a catalytic ability to ignite increased economic prosperity. And so we must find an equitable approach to providing housing that includes an anti-displacement policies supported by the necessary funding levels, opportunities for small businesses to grow, local jobs, and support for our working families. So I implore this committee, the office of the mayor, and all of the DC council members to stand with the residents of Ward 7, business owners, learners, and fully fund our commitment to our communities. Now is the time to fully fund this project. And so let's work on the benefit of all of our residents. Redevelopment, investment, and equity are long overdue east of the river, specifically in Ward 7. So, Chairman,
just so that you know, if you can summarize your testimony.
Yes, absolutely. So thank you so much for scheduling today's hearing. I implore that the committee work to secure the requested $42 million to reimagine and redevelop the Fletcher Johnson site. And if we're truly interested in investing in all 8 wards, we need to ensure all of our communities have a fair shot. So thank you. I'm available for all questions.
Thank you for your testimony. Next on our witness list is Kenji Latoy, who doesn't appear to be with us at this point. Takia Shire. I also don't see Dorothy Douglas. I do see. Good morning to you. Thank you for joining us. You can begin your testimony.
Good morning. Can you hear me? Good morning.
We can hear you, but we can't see you. I don't know if you're playing.
I don't know why you can't see me, but that's all right. God still got my back, and so do you. You see me now?
We can see you now.
Okay. Well, congratulations, Councilman McDuffie.
Thank you.
You're doing well, and I'm glad. I hope your family all is doing well. I'm Dorothy Douglas, a former ANC commissioner for 7D03, and also currently DC State Committee woman for Ward 7. And I'm also the former State Board of Education for Ward 7. I was a member of Marshall Heights Board for over 20 years. And so Marshall Heights, we all did a lot of development, Parkside, Mayfair, Hunt Place, where we got the new clinic and all. So I just want to talk on, and how you doing, Ty, Sugar, with everybody. I just want to say thank you so much for giving me this opportunity to speak. But I wanted to say I'm here to support the mayor's $42 million budget for Fletcher Johnson, and also Mr. Greg Gagana, Greg, I can't pronounce it right, but you know what I'm talking about. Greg Cardana, over there in Kenilworth, who built the senior citizen property over there. And also, I wanted to say he hired 40 local residents in the community, and that's so important that we do keep that process, that first source agreement. You're supposed to hire people that's within your area, and that's very important because it's a link that's missing, that we're hiring other folks from other states and countries to come here to work and don't get the benefits to those that are here, and also return citizens. I am not against anybody. I think fair hiring, should be for all. And I just wanted to say too, the workforce agreement, the workforce that you all have too needs to have those people hired as well, because they're already in the community. And sometimes you have persons that's already been through that process. And I think they don't need to go through it again. They need to research and make sure that they have those qualifications that's needed in training. I just want to say, I thank you all for giving this opportunity. And I wish everybody a happy Easter, belated Easter. And God bless everybody. And I'm supporting what the mayor would, and also Greg Agana, our property, Hazik. So thank you so much for giving me that opportunity. I'm sorry I'm not pronouncing it correct, but you know who I'm speaking of. And thank you again and again, and God bless.
Thank you very much for your testimony this morning, Dr. Douglas. We're going to turn next to Deb Myers. Good morning to you. Begin your testimony.
Yes, good morning, Councilmember McDuffie and members of the community. I am Deb Myers. I come before you as a resident of Ward 7. When the mayor launched her Family First initiative, I was the center manager for Benning Terrace, Benning Park Family Success Center in the fall of March 2020 during the height of the COVID-19 pandemic. The center serves as a first-stop shop to provide preventative resources and refers them to services throughout the CFSA network and the DC government. During my tenure, and as it currently stands, the biggest needs in these communities are food, jobs, and housing. I currently serve on the Community Advisory Council as a member for the Benning Terrace, Benning Park Family Success Center, because I am proud of the progress we continue to make with the residents there. We vigorously engage with our youth, we host monthly events for our residents, and we have weekly programming for families such as art and social emotional learning. Like other neighborhoods in DC, there are also many challenges facing this community, such as public safety, affordable housing, lack of access to health and wellness resources, and nutritious food. This is why we must fully fund the redevelopment of Fletcher Johnson. Neighborhoods east of the river live without nearby basic necessities, even though residents for decades continue to ask for these amenities. Sit-down restaurants, grocery stores, early childhood education opportunities, critical services, and community spaces will be provided through this site and will greatly benefit Marshall Heights and the surrounding communities like Benning Terrace and Benning Park. It is crucial for the DC government to fully fund the $42 million in raising and preparing this site for development. We talk about equity in our conversations. We know the history of our city when it comes to the treatment of Black and brown families and how east of the river continues to be left behind while the rest of the city prospers. So this will be one step closer to righting a wrong and building healthy communities in our city. So I ask again for the DC Council to fully fund the Fletcher Johnson redevelopment so all our families can thrive. And I thank you for allowing me to testify.
And thank you very much for your testimony this morning. Che Rudel Tabisola is the next witness, and not on. Patricia Stamper, Commissioner ANSI 7C06 is on. Good morning to you. Thanks for joining. You can begin your testimony. You have 3 minutes.
Good morning. My name is Patricia Stamper, and I'm a Ward 7 resident. I request that the Business and Economic Development Committee fully support the mayor's request to fund the $42 million to Dmped to raise the Fletcher Johnson building and prepare the site for development. Fletcher Johnson was originally the site of Payne Cemetery and repurposed as a school in the 1970s. The school closed in the 2000s, but was used as H.D. Woodson swing space until 2011. Since then, the building and site have remained vacant. The surrounding community utilizes the fields, but the site has no official uses. The Marshall Heights and Ward 7 communities would like to see the site bring much needed economic development and other amenities to the area. However, the site is challenging to develop due to the topography and requires heavy investment and commitments from the District of Columbia. In March 2023, the mayor released her budget, where she identified over $42 million for the Office of the Deputy Mayor of Planning and Economic Development to raise the building. Fletcher Johnson at present is 15.3 acres, is the fourth largest undeveloped property in the District of Columbia. As a Ward 7 resident, yes, I live in the Deanwood, Burville community. However, let me be frank. I shouldn't have to drive 35 to 45 minutes just to go grocery shopping for quality food and entertainment for my family. I should be able to prioritize and patronize the businesses here in my Ward 7 community, such as the ones coming to the Fletcher Johnson development. Therefore, In my role as commissioner here in ANC 7C06, I'm requesting that the $42 million for the Fletcher Johnson development to stay in the budget to ensure that my children and my constituents here in Ward 7 can enjoy the Ward 7 community and patronize Ward 7 businesses. Thank you for listening to my testimony, and I can answer any questions. I yield back my time.
Thank you for your testimony this morning. We're going to turn to our next witness, Valerio Johnson, President, Hillcrest Community Civic Association. Thank you for joining us. Good to see you. Begin your testimony.
Good morning, Chairman McDuffie, committee members and staff. We want to thank you for this opportunity to speak on behalf of economic development in the Ward 7 communities. Can you hear me?
Yes, we can hear you.
Chairman McDuffie, we just want to give you a special shout out for your work in closing the wealth gaps, your commitment to development communities in wards 5, 7, and 8, your commitment to job creation and business development for local communities, residents, and natives in particular. You also have the distinct privilege and unique experience of being a Ward 7 resident, especially in this area in which we're here to talk about today. I am here as a request from the Commissioner Natasha Dupree to echo the sentiments of Ward 7 residents around the $42 million that the mayor has set aside to get the Fletcher Johnson project rolling. As the president of the Hillcrest Community Civic Association, I am not here with a formal endorsement from the association, but I'm here with experience living in the Pennsylvania Avenue corridor for the last 2 decades and have an involvement in the development of the Skyland Development Task Force, which we see as a model and a foundation for what can be done with the Fletcher Johnson Task Force. In fact, the Fletcher Johnson Task Force has way more potential and greater impact to transform the whole of Ward 7, specifically the central parts of Ward 7. Specifically, Councilmember McDuffie, if some of the things that we were successful with Skyland over the last 20 years can be implemented into that project, a task force, of course, which is already established, but more of a job development center and a business incubator, as already spoke on. Ward 7, specifically in Skyland, Penn Ave, we have the ability to boast of 1,000 jobs created as a result of the Skyland Development Task Force. The Fletcher Johnson project has great impact to do more, exceedingly more for that community. Councilmember McDuffie, we would ask that you and your staff set aside resources to look and analyze the impact of Skyland and to take what you learn and apply it to the Fletcher Johnson Task Force, the Fletcher Johnson project. Specifically, if you can continue to provide us support and cover to make sure that that development is all that it can be. As someone already mentioned, it is the 4th largest potential land project in the city, and we want it to be transformative. I definitely want to thank you for your time and your commitment to Ward 7 and your commitment to hosting this opportunity for us to speak on this project in particular. Thank you.
And thank you for your testimony this morning. Greatly appreciate it. We're going to turn next to Babatunde Oluyede, President, CEO, Marshall Heights Community Development Organization. Good morning to you. Appreciate your patience. You can begin your testimony.
Good morning. Can everyone hear me?
Yes, we can hear you.
Good morning, Chairperson McDuffie and members of the Business and Economic Development Committee. My name is Babatunde Oluyede, and I am the President and CEO of the Marshall Heights Community Development Organization, also known as MHCDO. The Marshall Heights Community Development Organization is a nonprofit community-based organization that has undertaken community development activities in Ward 7 of Washington, D.C. since 1979. MHCDO's mission statement is to help grow Ward 7 into the District of Columbia's most welcoming, prospering, livable community for everyone. The organization provides opportunities and services designed to increase affordable housing opportunities, expand economic opportunities, and improve the quality of life for individuals and families. MHCDO has 5 components that comprises economic development model, health, education and wellness, small business development, housing services, real estate development, and workforce development training. For over 44 years, MHCDO has provided economic resources and opportunities for improving the community and has launched several initiatives aimed at improving the lives of Ward 7 residents. It is with this perspective that MHCDO confidently supports the mayor's proposal for allocating $44.2 million for the Fletcher Johnson site and also $5 million for the Nonprofit Small Business Infrastructure Fund. MHCDO supports the Fletcher Johnson project because it aligns with several MHCDO initiatives. By aligning with these initiatives, the Fletcher Johnson site will create economic opportunity and value for the community. MHCDO looks forward to collaborating with Grad Cardona to ensure that Ward 7 residents participate in the following project components: home ownership opportunities across all income levels, rental housing opportunities across all income levels, small business opportunities, employment, and career opportunities. The Fletcher Johnson site has several unique factors that justify the $42 million budget allocation for FY24. These factors include environmental cleanup, demolition of existing structures, and infrastructure improvements. The site has significant contamination issues, including asbestos and lead paint, which will require extensive remediation work before construction begins. Due to the topography of the site, the project will require extensive design and engineering to ensure that the new buildings are safe, functional, and meet modern building codes and standards. In addition, the site needs new infrastructure, including roads and utilities. Without this investment from the District of Columbia, it will prove extremely difficult to unlock all the site's full potential in a timely manner. The Fletcher Johnson redevelopment presents an excellent opportunity for the District of Columbia to deliver on its promise of equitable development across all 8 wards. Funding this project would go a long way to delivering on its promise of equitable development and reducing inequities. Thank you for the opportunity to testify. That concludes my testimony.
And thank you for your testimony this morning. I want to thank each of the public witnesses on this panel for providing valuable testimony to the committee. I want to just make a call to see if any of my colleagues are on. I saw a couple of people on. It does not appear that any council members are on at present. And just I'll note that there are multiple hearings occurring simultaneously at the council today, which is why folks are popping in and out. So I don't have any questions for this panel. I will like to say we really appreciate it. I noticed the ongoing theme on this panel, as was the case for the first 2 panels, in support of the Fletcher Johnson allocation within Dmped's capital budget. And so thank you all for your advocacy there. I'm going to turn to our witness list to move on to the next panel of public witnesses. Lawrence Davin, Gary Bradley, Maria Jackson, Tanika McEachin, Karen Harris, Tiffany Blakeney, Cynthia Smith, Delia Housel, Commissioner, Becky Strauss, Brianna Wright. Jaren Price. We're going to just take a moment to see who is available to testify before we move on to our government witness. This is going to be our last panel of public witnesses before we transition to our government witnesses for the Deputy Mayor for Planning and Economic Development Office. We're going to begin this panel with the only public witness I see who's made it to the participant panel thus far. We definitely want those who are waiting to be included in this last panel, but we don't want to keep Cynthia Smith waiting since she is here, Survivor Advisory Board member, Sisters of Hope. Good morning to you. You can begin your testimony. You'll have 3 minutes.
Thank you. Good morning. Good morning, Council Chair McDuffie, community leaders, and fellow advocates. Thank you for this opportunity to testify. My name is Cynthia Smith. I have been a resident of Washington, D.C. since 2015, and I'm a member of DC Guaranteed Income Coalition. The coalition has its mission to build permanent guaranteed income in Washington, D.C. while preserving existing social insurance and safety net programs. Guaranteed Income report that from 2020 to 2022, guaranteed income have expanded across approximately 29 states and have allocated over $200 million in grants for pilot and existing program. This program recurring unrestricted cash payment to participant for a set period. DC has 2 GI pilot program. In an analysis of the Stockton Economic Empowerment Demonstration, a popular guaranteed income program in California, researchers found that monthly cash assistance help provide food and housing stability for participants. Participants also experience greater emotional health and ability to find quality employment. While critics say that GI pilot program are too new to assess their long-term impact for years, analysts who have looked at a long-standing social benefit program have said that cash assistance is crucial. Cash assistance through programs like Earned Income Tax Credit, the Child Tax Credit has been linked to boosting long-term school achievement and lifetime earning, and has been effective at permanently lifting kids out of poverty. The district's FY 2024 budget should demonstrate its commitment to communities of color disproportionately harmed by policies and practices that place their families at economic risk. On behalf of survivors of domestic violence in DC, we would like additional guaranteed income for survivors. Thank you, Melody Webb, for the leadership in Guaranteed Income Coalition. And finally, we thank Council Member McDuffie, Chair, for the work it has started doing to protect benefits. But the work is not done, and we hope that you will ask for any waiver needed to protect other benefits that may be at risk, such as housing and SNAP benefits. Thank you so much.
Thank you so much for your testimony this morning, Cynthia Smith. The next person on our witnesses that we see available to testify is Maria Jackson, Legal and Advocacy Fellow, Mothers Outreach Network. Good morning. You can begin your testimony.
Good morning, Councilmember Duffy. My name is Maria Jackson. I'm from Ward 2. I'm going to try to keep this as short as possible. I have 3 kids, aged 18, 15, and 11. I'm looking for a job right now, part-time, and I'm in school. I receive Social Security. I used to have 10, but they cut it off. It doesn't make no sense why, because it's been the same amount that it was for the last couple of years. I joined, if I was to join a pilot program, it would cut my Social Security in half. With the district's FY 220 budget demonstration committee, I'm hoping that you will help with what I'm asking for all families is that these council will fund for guaranteed income programs 15 13.5 million for GI pilots and 6.5 million to hold a harmless fund for if they try to raise the rent for 750 households over 3 years. Over 3 years, and paid 500 monthly to hold harmless funds and primary housing costs. I'm asking for a guaranteed income program to be open at who receives benefits and for the program to be exclusive to more parents and to more parents of color, not just the young parents, but the older parents also. I also ask that DC Council protect the families who participate in a pilot from their funds being taken just because they receive the pilot. They will cut their funds like SSI, TANF, They cut it. They will cut it. Medicaid. I'm asking DC Council to pass the DC Child Credit Amendment Act also, which will provide up to $500 per child tax credit for lower income individuals. This will help provide for families even more if they pass this bill. I'm also asking the council to pass a financial support for families with children Amendment Act, which will provide $1,000 cash payment per child in the family living in deep poverty in the district. I'm asking this because it will help. I'm asking that because it would not only help provide uniforms, new clothes for children, but also help pay the bills in it for the utilities. Sorry, Mr. McDuffie. And I'm asking the council also for requirements for my program, which would be 13 million. The mayor budget is which provides cash only. TANF people who get TANF who are employed. This program is for people who get TANF that are employed. They are the only people that can receive this. I don't think that should go that way. It should be considered for people who does not receive it also. It should go both ways. Even if they doesn't have a job, I think it should receive money also. I'm asking the council to explain the ability of strong families and strong furnitures program, which currently open only for mothers in Ward 5, 7, and 8. If I'm correct, that the mothers from around the city can only access the programs. I strongly suggest that they take a look at the city because there are more people that need help than just Ward 5 and 7 and 8. Why are you just looking at Ward 7 and 8?
Maria Jackson, if you
Yes.
could just summarize, I gave you a couple minutes to.
Okay. I'm just asking why y'all just looking at Ward 7 and 8 and just giving them help when there's more people out there that need help, Mr. McDuffie. You remember me?
I do remember you. I appreciate you testifying again before the committee. Your perspective is unique and really valuable to the work that we do here. And so I thank you once again for taking the time to put your voice on the record for these important issues. So thank you for that. I'm gonna turn next to Tiffany Blakeney. Good afternoon to you, and you can begin your testimony. You have 3 minutes.
Good afternoon. Thank you for your time. Give me 1 second. My name is Tiffany Blakeney. I have been a resident of Washington, D.C. All my life. I am a member of the DC Guaranteed Income Coalition. The coalition has its mission, among others, to build a permanent guaranteed income program in Washington, D.C., while preserving existing social insurance and safety net programs. The district's fiscal year 2024 budget demonstrate its commitment to its communities of color. I believe that it should be for all wards of the city. For all district families, I'm asking that the DC Council fund an additional guaranteed income program, $13.5 million for GI pilots and $6.5 million for, 1 second. Thank you, I'm sorry. $13.5 million for GI pilots and $6.5 million for a whole homeless fund for 750 households over 3 years and pay $500 monthly. The whole homeless fund will primarily cover housing costs. I'm also asking for the guaranteed income program to be transparent about who receives benefits for the program, to be inclusive to parents of color. I'm also asking that the DC Council establish a fund to protect families who participate in GI pilots. I'm asking the council to pass the District Child Tax Credit Amendment Act, which would provide up to $500 per child tax credit to low and middle income individuals. I'm asking the council to pass the Financial Support for Families with Children Amendment Act, which would provide a $1,000 cash payment per child to families living in deep poverty in the district. I'm also asking to remove the work requirements for the Career MAP program, which is allotted $13 million in the mayor's budget and would provide cash only to TANF recipients who are employed. I'm asking for the council to expand eligibility for Strong Families Future programs, which is currently open to only mothers in wards 5, 7, and 8, so that mothers from around the city can have access to this program. This is important to me because I currently live in Ward 6. I've been living in Ward 6 all my life. And there are some programs, but there are a lot. And I'm also a working parent. I do not receive TANF. I do not receive SNAP, but I have at one point in time. And I know how crucial those benefits are to people. So if we allow them to have more income, or myself to have more income, I'm asking for you all to protect some of those benefits as well. Like, let these programs coincide with each other so that everybody can live and feel equal to the community that they live in, not just because we live in this ward, we don't have that, or that because, you know, we're over here, we want this, but we have to travel over here to get it. So just being universal with some of your policies and your criteria and the money that's been dispersed overall. I would like to thank you for your time and sorry for the mistakes and the mishaps. I appreciate it.
Thank you so much for your testimony, Tiffany Blakeney. We really appreciate you providing it. We're going to turn next to Delia Housel, Commissioner NC 7006. Thanks for joining us, Commissioner. You can begin your testimony. You have 3 minutes. You're muted. If you want to take yourself off mute and begin again.
Okay, awesome. Can you hear me now?
Yes, we can hear you and see you. Thank you.
Awesome. So good afternoon, Councilmember McDuffie and other members of the Committee on Business and Economic Development. Thank you for the opportunity to provide comments on the recently released fiscal year 2024 budget proposal submitted by Mayor Muriel Bowser, My name is Dr. Delia Househill, and I'm an advisory neighborhood commissioner for Single Member District 7E06, chair of ANC 7E, and co-chair of ANC 7E's Committee on Economic Development. My single member district is located in the heart of Marshall Heights in Ward 7 and is roughly bounded by Southern Avenue, Central Avenue, D Street, and 51st Street. Since becoming a commissioner in 2019, I have worked alongside my colleagues and other community members to advocate for the Marshall Heights community to have equitable access to amenities such as grocery stores, restaurants, public recreational spaces, high quality housing, and other basic amenities. While significant, and as one can imagine, we were excited about the possibility of utilizing the Fletcher Johnson site to secure many of the basic amenities that other communities throughout the district are fortunate to have. While significant progress has been made towards realizing this vision in Marshall Heights, the dilapidated building located on the Fletcher Johnson site remains an eyesore in our community and for now a dream deferred. And so because of that, we recognize that there's much more progress is needed, and that the investment proposed by the mayor represents a significant step forward in the right path. So I'm here today on behalf of my constituents in the Marshall Heights community to offer my full support for the $42 million proposed by the mayor to support raising and preparing the Fletcher Johnson at the park site and pushing the needle forward towards achieving real economic growth and development in the Marshall Heights community. I would also like for the committee, though not in your purview, to consider adding additional funds in the budget to support the development of a small area plan that not only looks at economic development opportunities at the Fletcher Johnson site, but the surrounding Denton Road corridor. Again, thank you for the opportunity to testify. I welcome the opportunity to answer any questions or comments that you or the other committee members might have. And that concludes my testimony this afternoon. Thank you.
Thank you so much for your testimony this afternoon, Commissioner. We appreciate you providing it. I'm going to turn next to Brianna Wright. Good afternoon to you. You can begin your testimony.
Good afternoon. My name is Brianna Wright, and I'm a Ward 7 resident, and I'm here to provide testimony in support of the mayor's request to provide the $42 million to the Deputy Mayor of Planning and Economic Development for the Fletcher Johnson at the Park development. The Marshall Heights community has advocated tirelessly for the past 15 years for the development of the Fletcher Johnson campus. And as you're aware, the mayor's proposed $42 million, which could be used for would be used for the demolish the current structure to mitigate environmental concerns and to build the infrastructure needed for the development of the campus. I'm a product of the DC First Time Home Buyers Program, and I bought my home that I'm in today, 2 blocks from Robert Fletcher Johnson. I walk through it every day. I see the vision and the potential of this place. Fletcher Johnson at the park is slated to bring desperately needed housing and amenities to Ward 7, such as recreational spaces, an early childhood education center, workforce development, sit-down dining, neighborhood retail, community spaces, and fresh food access. This investment is essential to increasing the capacity of Ward 7 residents to improve our quality of life and create stronger, more connected communities east of the river. My request is that you maintain the $42 million investment that the mayor has funded in her fiscal year 24 budget for this site so that my community can enjoy the same prosperity felt across the city from other transformative developments. I appreciate your leadership. I appreciate your time. And again, I hope that Ward 7 can count on your support. Thank you.
Thank you so much for your testimony. We appreciate you providing it to the committee. I know the Marshall Heights project is extraordinarily important, and a number of you all have taken time to provide testimony about it. So thanks for that. I'm going to turn to our final public witness for this panel. It's Jaron Price with the Downtown DC bid. Good afternoon to you. You can begin your testimony.
Thank you. Good afternoon, Chairman McDuffie, members of the Committee on Business and Economic Development, and staff. My name is Jaron Price, and I'm the President and CEO of the Downtown DC Business Improvement District. It is my pleasure to submit testimony today and to offer the bid as a resource to you and the committee staff. The Downtown DC bid comprises of 138 blocks of the city's central office district, as well as the Walter E. Washington Convention Center. It's the home to many of the district's most dynamic cultural and economic entertainment venues and its hospitality sector. Additionally, the bid is particularly proud of our Downtown Day Services Center, which serves hundreds of our unhoused neighbors each day. For the past 26 years, the bid has worked to keep downtown DC as clean, safe, and economically viable as possible. Based on key data, which I provided to the committee in addition to my testimony, for FY24, the net fiscal impact of downtown is projected to be $300 million lower than it was pre-pandemic in FY 2019. Now more than ever, bold investments are needed to rejuvenate downtown and protect it as the economic engine of our city, maintaining downtown as a strong source of employment for all DC residents and generating a tax base that supports the district's exemplary progressive agenda for many years to come. We're encouraged by the support of city leadership, both the mayor and members of this council, for recognizing the significant role that downtown plays in the overall financial health of the city and stepping up to the urgency of the moment. We applaud the mayor for prioritizing the reimagination of downtown in her 5-year economic strategy, DC's Comeback Plan. I'm testifying today in support of several budget provisions that align with downtown recovery efforts. With respect to the 2024 budget, the bid supports the mayor's increase in funding for the housing and downtown tax abatements up to $41 million, which is up from $6.8 million. Based on feedback from our stakeholders, we do suggest adding some clarifying language in the final Budget Support Act to make it more effective and financially efficient. Specifically, we want to state affirmatively that these tax abatements are available for all residential development in downtown, not just for conversions or repurposing of buildings, and to allow it to be applied to more than one building, as well as thinking about how we can award the tax abatements upon filing of the building permit, with some clawback provisions in place to ensure that it can be effective. Additionally, the downtown bid supports the investments proposed in Councilmember Pinto's recently introduced Recovery Act that would provide support for additional public safety efforts and help to retain and attract new businesses and retailers into downtown. I do want to thank Councilmember Pinto for her tremendous partnership and leadership. I did have a chance to hear her remarks earlier and really appreciated just the insight that she offered around what's needed to ensure that we have a comprehensive vision for downtown. But specifically, we support funding and supporting the Safe Commercial Corridors program, as a few others have testified about, with between $5 to $8 million in FY24 that would create a program to help enhance public safety in downtown. We also support funding the Vitality Fund, which has shown some promising results thus far, and are asking for $5 million per year for the next 10 years that could be awarded through a competitive process, as well as the $5 million of property tax abatements in a new retail fund, with 40% dedicated to attracting 2 or 3 small grocery stores to downtown, again, focused on creating the full gamut of residential supporting retail that we know is necessary for downtown to thrive. The bid also wants to just share that we are working closely with our neighboring bid, the Golden Triangle Business Improvement District, and invite the DC Council to join us, our partners and other stakeholders in our work in creating a 2023 Downtown Action Agenda. This will be released sometime later this year, but will involve extensive stakeholder engagement to focus on what recommended investments, policies, and projects will help to create a reimagined downtown that is diverse, equitable, livable, economically sustainable, and resilient. We want to stress that there's no single idea, investment, policy, or project that's considered the silver bullet to ensure downtown's recovery and reimagination. We believe the district and federal government, as well as the private sector, have to work intentionally and collaborate on several priorities at once to make this work successful. I want to thank you for the opportunity to testify today and happy to answer any questions you may have.
Thank you for your testimony, Jaren Price. I don't have any questions for this panel. I will recognize all the witnesses who testified in this panel about support for the guaranteed income program. We worked hard and closely with a number of witnesses who testified this morning and this afternoon about the guaranteed income pilot. We talked and heard from a couple of folks who are intimately familiar with the Strong Families, Strong Futures program that was implemented by the executive based on the pilot that we established a couple of budgets ago. And so I really do appreciate your advocacy, your continued work and diligence on this. I also want to recognize on this panel, we had more support for the Fletcher Johnson project within Dmped, and we finished it out with testimony from Jaren Price of the Downtown DC bid about our downtown area and the need for some of the supports to enhance the vitality in that area. And so before we transition to our government witness, the deputy mayor for planning and economic development and his team. We're going to take a recess. We have to attend to something briefly at the committee. And so we're going to take a recess for about 30 minutes. We're going to reconvene right here at 1 p.m. For anybody who's looking to join and view the testimony of the Deputy Mayor for Planning and Economic Development. We will be right back in approximately 30 minutes at 1 p.m. So we're going to recess right now. The time is 12:26 p.m.
Okay, is your seat of choice? Yeah. All right, so I'll go here so that I can be like. Documents across. I'm left-handed. It's erosion. I have. All our hearings were in here. I remember all our hearings in here. Sit all over there. Brian, you sit all over there. I'm sitting here.
There's more grand conversation than anything else.
Have to scoot over. a little
Yeah,
bit, 'cause
no,
you know my elbow.
Yeah, no, I'll, here.
You're funny. This is making a lot of noise. No. That's all. No, no. That's all. That's hot.
This is Councilmember Kenyon McDuffie, Chair of the Council's Committee on Business and Economic Development, and at-large council member. We are reconvening earlier recess hearing. The time is now 1:10 p.m. and I'm calling to order this hearing of the Committee on Business and Economic Development. We left off after having completed our public witnesses who testified about the Office of the Deputy Mayor for Planning and Economic Development. We're now going to hear from our government witnesses, including Interim Deputy Mayor Keith Anderson and his team. It is a policy of the committee to swear in all government witnesses. And so if you all don't mind raising your right hands to be sworn in. You each swear or affirm on the penalty of law that the testimony you're about to provide before the Council of the District of Columbia and this committee is the truth, the whole truth, and nothing but the truth? I do. Thank you so much. I appreciate it. Good afternoon to each of you all. Thanks for joining us. Deputy Mayor Anderson, you can begin your testimony whenever you're ready.
Thank you, Mr. Chairman. And good afternoon, Chairman McDuffie, members and staff of the Committee on Business and Economic Development. I am Keith Anderson, and I serve as the Interim Deputy Mayor for Planning and Economic Development. I am pleased to provide testimony today on Mayor Bowser's fiscal year 24 budget and financial plan for Dmped. Just a few weeks ago, the mayor presented her Fair Shot budget to the council that makes significant investments across all 8 wards with a focus on DC's comeback. As stated in our comeback plan, we strive to be a city where neighborhoods offer its residents the chance to achieve their full potential, an urban center that is a destination of choice for innovators, job creators, and visitors, and a place where people choose to live, work, visit, and thrive. The mayor's FY24 budget for Dmped includes investments in programs that will advance equitable economic development across the comeback plan's 3 pillars: our people, our neighborhoods, and our businesses. Dmped's budget includes funding for programs that invest directly in our residents, things like housing stability, workforce development, family supports, and wealth building opportunities. In 2022, Dmped launched a $1.5 million unconditional cash assistance pilot program for new mothers in wards 5, 7, and 8. Strong Families, Strong Futures provide over $10,000 to 132 low-income mothers, giving them full autonomy to spend the cash in the best way for them and their child. 6 months after receiving cash assistance, mothers report lower stress levels, increased housing and food security, and more energy and time to spend with their children. We are thrilled that Dmped's FY24 budget includes $1 million in funding for this program. Homeownership as both a path to stability and wealth building is another component of our Thriving People strategy. In September, Mayor Bowser adopted a goal proposed by the Black Homeownership Strike Force to create 20,000 new Black homeowners in the district by 2030. To advance this work, we are working to launch a Black homeownership marketing campaign to raise awareness of available resources as recommended by the Strike Force, and are conducting a feasibility study to inform the structure of the Black Homeownership Fund, which aims to increase the supply of homes available for purchase. Investing in our residents also means investing in our neighborhoods and making sure all neighborhoods, regardless of zip code, have the amenities they need to ensure our residents can thrive. Things like affordable housing, high-speed internet, grocery options, and healthcare facilities. Increasing the supply of affordable housing and ensuring it exists in all areas of the district remains a priority for Dmped. As of March 2023, we are over 60% of the way towards our affordable goal and 80% of the way towards our goal of 36,000. Through our capital budget, Dmped will continue to advance transformative, large-scale economic development projects. Dmped's capital budget includes over $350 million across the capital improvement plan for projects across the city that will bring an estimated 5,200 new homes, including 3,000 affordable, to the district. These projects include McMillan, Hill East, Capitol Gateway, Fletcher Johnson, St. Elizabeth's, new community initiative projects, and more. Access to grocery stores and other food options is another critical component of our work for FY24. To date, through the Food Access Fund, Nourish, and other programs, we have supported the expansion or creation of more than 35 food businesses and provided technical assistance to many more. We're pleased that Dmped's FY24 budget includes an additional $3 million in funding for the Food Access Fund. Dmped's budget also includes investments that will help transform another neighborhood in the coming years, our downtown. Our downtown has historically been the district's economic engine, the home of 35% of our businesses, about a third of district-wide jobs, and over 37% of property tax revenue, despite making up only 2.3% of taxable properties. Sustained telework and an oversupply of office space require that we take bold action now to reinvigorate our core, preserve our tax base, and ensure our downtown serves our residents. Commercial vacancy rates have doubled since 2018, leaving nearly 20 million square feet of office space vacant. Housing is an important part of creating a resilient mixed-use downtown neighborhood. Earlier this year, Mayor Bowser set a bold goal to bring 15,000 new residents to downtown in the next 5 years. Dmped's Housing and Downtown program, updated in FY24, in the FY24 Budget Support Act, will help deliver 90% of the homes needed to reach this ambitious goal. The Housing and Downtown program incentivizes residential development through financial and regulatory relief. Now is the time for bold action, and this program will help to catalyze viable transformative projects to create a downtown neighborhood for residents as well as workers and visitors. Beyond housing, business attraction and retention, and the jobs these businesses provided is another essential component of downtown revitalization strategy. We continue to use the Vitality Fund to help businesses make long-term commitments to DC. Downtown vibrancy is also fueled by visitors from around the city, region, nation, and the world. Dmped's FY24 budget includes $1.5 million to support festivals, which will enable us to continue to help locally organized events that draw people through the Special Event Relief Fund. The district's comeback plan also sets a bold new goal to increase the share of minority-owned businesses to 33% of all employer businesses by 2028, up from 27% in 2019. To that end, we are pleased that the mayor's budget includes an additional $6 million in funding for the Popular Commercial Property Acquisition Fund, a program that provides down payment assistance for equity impact enterprise eligible businesses for the acquisition of commercial property in the District of Columbia. The FY24 budget also includes $10 million in funding for great streets and small business initiatives like the Neighborhood Prosperity Fund and the locally made manufacturing program that will support the district's small business economy and further encourage community development and economic growth. The mayor's FY24 budget for Dmped demonstrates her leadership and commitment to our shared DC values. The budget will allow key projects and initiatives to move forward and ensure we continue to invest in the longevity of our local businesses and residents. I'm thrilled to have joined Dmped just last month and look forward to working with the committee in the coming fiscal year. Thank you for the opportunity to testify. My team and I are available to answer any questions that you or the committee may have.
Thank you for your testimony this afternoon, Mr. Anderson. I do have some questions about Dmped's budget. And I generally begin each budget oversight hearing asking the executive about initiatives or allocations within their budget that are specifically designed to address racial equity and economic opportunity in the District of Columbia. In your testimony, I think in many ways tees up a few initiatives that I'd like to discuss a bit further, some of which you mentioned in your testimony. Strong Families, Strong Futures Cash Assistance Pilot. You mentioned that in your testimony. We had some witnesses who testified about that in support of the initial pilot, which I'll acknowledge is something that this committee created and funded with the $1.5 million allocation. And I have a couple of questions related to that. So will the FY24 program, as you all are contemplating it, consist of the same number of participants, or is it too early to sort of know how many folks you plan to include in that type of program?
So the Strong Families, Strong Futures program was a very successful program that Dmped embarked in. I believe the pilot, which was in FY22, served approximately 132 families.
Okay.
What we budgeted for in FY24, so the budget in FY22, I believe, was $1.5 million. What we budgeted for in FY24 is approximately $1 million. So what I would expect to not serve as many of the residents with the FY24 budget. We do intend on serving residents though. And as you heard in the testimony, that program has worked wonders for new mothers in wards 5, 7, and 8, reducing stress levels and ensuring they have a fresh start. But I do expect to not be able to serve as many residents in FY24 as we did in FY22.
A couple of follow-ups. In terms of the $1 million that's proposed in FY24, is there any way within Dmped's current authority to leverage private investments to augment the $1 million that you all are proposing, if that remains at that level?
Correct. I think the short answer is yes, and I think the team did do that. Did you want to elaborate on how we leverage those dollars?
Sure. Sharon Carney, Chief of Staff. So our partner, Martha's Table, for the Strong Families, Strong Futures program has been successful in securing some philanthropic investment. They continue to explore additional opportunities for that. And so we're optimistic that this 1 million additional will help to further advance the private investment in the program.
Okay. And is there the funding that's in the proposed FY24 budget, the $1 million that you mentioned, is that one-time money or is that recurring funds?
It's one time.
Okay. Okay, and is the Direct Cash Assistance Program BSA subtitle that is included in the mayor's proposed budget intended to make permanent Dmped's ability to fund cash assistance programs of this sort?
Our ability to fund them, yes. We have to work on making it a more permanent program.
Okay, but it would give you, the BSA subtitle would give you the authority to be able to do it permanent.
That is correct, yes.
Black homeownership. It's something that I think has gotten a lot of interest. I know the mayor's been doing some work on this. I was just on a Zoom with Delta Sigma Theta Sorority Incorporated. And this is one of the things that was referenced in that conversation. When will the feasibility study that you mentioned in your testimony be completed, and what entity is actually authoring the report?
So the feasibility study should be completed, I believe this summer, this fiscal year. So we look forward to completing that feasibility study this summer. Sharon, what is the entity that's completing that report?
We've contracted with CSG to help advise on that study. And as part of that process, they are interviewing a number of stakeholders and potential partners to inform the approach.
Okay. I don't know if you're prepared to comment on this, but if there's any insights, I know it's fairly early on, but I'm sure you all noted, as many have, the recent report that suggested that this program in particular racially discriminates and may be subject to legal challenge because it seeks to remedy past discriminatory practices that have adversely impacted Black people's ability to purchase homes. Has the task force discussed this potential legal challenge, and is there anything you can share at this early juncture about it? I'll leave it there and just see if you have a response to that.
So I am aware of that concern about this being legally challenged. And I believe the district tried to go in this direction before and was legally challenged. I think the difference today is that we've recently, and as of last Friday, released our disparity study in the district showing we did a disparity study on women-owned business and businesses that are owned by people of color. That disparity study will give us a legal basis to move forward with minority programs. So it's something that the team is looking at or looking into internally. We're also going to look into ensuring that whatever we set forth moving forward is legally defensible.
Yeah, no, I appreciate that. The 1992 O'Donnell construction case is the one that was responsible for the MBE program that we had previously being overturned. And I think the disparity study is yet another example of this committee's work in prioritizing minorities, women-owned businesses. We initially funded that study and collaborated with your office and the mayor specifically to increase the funds necessary to complete that study. I'm excited that you all have published that study as of Friday. I think it does show the significant disparities that exist across the District of Columbia, and I think will help provide the factual predicate necessary to be able to have programs that go outside of the typical race, gender neutral programs that we have today.
Right.
So I appreciate you referencing that, and hopefully we can keep moving forward with creating an NWBE program that will withstand legal scrutiny that inevitably will occur at some point. So opportunity neighborhoods, you also mentioned in your testimony. And I think it mentions that the mayor, in your testimony, you say has achieved 80% of her 36,000 housing units by 2025 goal, in addition to 60% of the affordable housing aspect of the goal. Doing performance oversight, I know you weren't here for that, but the team was. During performance oversight, the office noted that the administration would fall short of its affordable housing goal within the Capitol Hill, Rock Creek West, and near Northwest planning areas. Can you share the administration's rationale for passing on the opportunity to acquire, I think, significant larger properties like the Wardman Park Hotel, and how you plan to achieve that goal in those high need areas? I know it's been a priority of the executive. I think now's a good time just to chat about ways you think you can achieve the goal in those areas where have been most challenged with the lack of affordable housing.
You're absolutely correct, Mr. Chairman. And I'm very pleased by the team's work of getting to 80% of the goal of 36,000 households and 70% of those being affordable. I know we had a lot of conversations about the performance hearing and specifically to the I think the Wardman Hotel you mentioned. Unfortunately, that in order for the district to purchase that property or acquire that property and then make it affordable, it was cost prohibitive, that project. That project closed in upwards of $100 million. So for the district to acquire that property to make it affordable, it would not be financially feasible. But for the areas where I think we are falling short, I believe you mentioned
Capitol Hill,
Rock Creek Park, and near Northwest. We're making investments in those neighborhoods to ensure that we stay on track with meeting our goals.
I think it's a good time for me to recognize Ward 3 Councilmember Matt Fruman, who I know is bouncing between hearings. And so I want to give him an opportunity for a round. Welcome back to the committee, Councilmember Fruman.
Thank you very much, Chairman McDuffie. And it is a pretty good segue. I'm going to start with greetings to Deputy Mayor Anderson and coming up Director Muselli eventually. Deputy Mayor Anderson, it's always been a pleasure to work with you in all of the different capacities that you've played in the district government, including most recently at DGS. And one big focus for you is going to need to be the mayor's significant investments to support recovery downtown, and I share those goals and am supportive of those investments. I mean, there will be discussion about some of the terms around them, but the idea that we need to bring downtown back, that's obviously the case, and I'm glad that you'll be on that project. There are other neighborhoods in the city also that need focus, and as Chairman McDuffie was talking about in Rock Creek West, much of which I represent, there is a need to get more affordable housing built, and I want to explore that with you during the hearing. We have a couple of significant things that are going on in Ward 3. There's the Chevy Chase Civic Core, which could combine a state-of-the-art library and rec center with ample green and play space and new affordable housing. There's some complexities that have come up around that. I'm going to want to ask you about those. Friendship Heights is a giant opportunity. There's the WMATA bus garage and the Lord and Taylor site, and how can we achieve many goals there, including building affordable housing. The broader projects on the Wisconsin Avenue and Connecticut Avenue corridors and the framework studies that are moving forward there. One of the things that the mayor didn't fund, and I suspect that, in some ways you'll fall back to what you were saying about the Wardman, is the purchase of the Whittle School, which is another one of those giant opportunities. The Wardman, the city took a pass on, and then there was a push to try to do it through eminent domain, and it clearly wasn't going to happen through eminent domain if the city had already taken a pass. But the Whittle Intelsat site is sitting out there as a giant piece of property very near the metro, and I hope you will be looking at it and thinking about it, and I'll be curious to ask you about those things. Maybe I'll start with the front burner affordable housing project in Ward 3. One of them is the Lisner home, which I was involved in my private capacity before joining the council, but the other is the Chevy Chase Civic Core. And I'm sure you're aware that it's been discovered that there's a restriction on the deed prohibiting building of an apartment building on the back half of that property, which obviously complicates things. I'm wondering what your office's thinking is about how we deal with the presence of that covenant. Are you thinking about going into court to challenge it? Are you thinking about trying to work around it? How are you all thinking about the role that covenant will play in this process?
Yes, Mr. Chair, Council Member, I am aware of that covenant, and my team has been working very hard to address that issue. I'm going to turn to Sarosh, who's our Director of Real Estate, to delve into that a little more.
Thank you.
Thank you, Deputy Mayor. Sarosh Opadwala, Director of Real Estate. Good afternoon, Council Member. To your question about the restrictive covenant, the covenant covers the back portion of the parcel, but it does not encumber the majority of the parcel. And given that the back portion of the parcel would be stepped down anyway, as it abuts single family homes, the covenant does not actually negatively affect the overall feasibility of the project. So that said, I do understand that you have requested that we look into whether the covenant can be removed in any way, and our attorneys are looking into that as we speak.
So, and I hear you. I mean, there's a decent amount of conversation in the community of people who think, well, try to lift the covenant and do something on the site that takes advantage of more of the site, and others who think, well, it could make sense just to work around the covenant in this setting. I don't know whether you have followed it, Sarosh, but apparently there are covenants on many of the properties in that part of Connecticut Avenue that actually probably more severely impact the other sites because they don't, that it may fully cover them. And so there is a question about what do we do about these covenants up and down the corridor. And I don't know whether your team is looking at that, but these are things that worry me. They come from 1909, and we know what animated the creation of this community and what would have driven these covenants. And we don't want to be bound by 1909 covenants, but figuring out how we deal with them is another trick. But are you guys looking at the covenants on other properties on Connecticut Avenue in that same area?
Well, right now, our attorneys are trying to understand the makeup of the covenant and what kind of mechanisms could be used to potentially remove it. And so any mechanism that could be used at the Chevy Chase site could be used on the other sites. We are aware that they do run up and down the Connecticut Avenue corridor. And, I think that, as I said, it doesn't negatively affect this project. And so I don't want people to sort of see it as a red herring in some ways, but I do understand your concern that it could affect other projects. And so, as I said, our attorneys are looking into it. And I do have an email from you talking about other solutions, and we will respond with, what we determine.
Well, thank you for that. I mean, let's just stay together on this. I am honestly not sure what is the right solution here. I'd like to work with you to settle on it and do something meaningful on that site. As you may know, one of the things that has been a concern for me is that I want to make sure that whatever gets done on that site, on the Civic Core site, has appropriate setbacks to the residential neighborhood behind. Ironically, the covenant may do that. And so there could be a good thing about it. But a concern that I have, and I think a concern that folks in the community will have, is that if all we have to work with is a narrower area, that temptation to try to go higher will be strong. And you can get to heights in that neighborhood that really would be out of whack with what's there now and what's anticipated in the future. So this is going to be an ongoing conversation, and maybe we don't always have to do it in a formal hearing, but I didn't want to let this hearing opportunity pass without asking the question. My time is up, but I'll circle back on other topics in the next round. But thank you very much, Sarosh, and thank you.
Thank you. Absolutely.
Thank you, Councilman. I want to note that we've been joined by at-large council member and member of this committee, Anita Bonds. So I'm going to turn to Councilmember Bonds for a round. Thanks for joining us in person, Councilman.
Thank you very much, Councilmember McDuffie. And I was listening to the first part and then got switched to a couple of other I was wondering why? Because I thought that each committee hearing would be continuous. So then when I turned back on, and there you were, I said, let me rush up here. So it's a pleasure to join you all. It's very important committee and a very important subject matter that you're discussing. I just have a couple of questions. I wanted to talk about the opportunity neighborhoods and specifically about housing. And I wondered if we could talk about, one, if you would remind me of the number of affordable goals that is as it relates to housing. What is that number? Is it 12,000 or is it?
So the goal is 36,000 units by 2025.
Okay.
We are 80% there with that goal, 12,000 of which would be affordable. We are 70% there with that goal.
Yeah, 60, your testimony says 60%
That's
there.
Sorry, 60,
Yeah.
60, my apologies, 60% there.
70,
No.
okay, all right, got it. And what I wanted to know is the number that have been, when we count this, can you explain how you count these? Are all subsidized residential projects included that have been produced over the last 3 years? Or how are we counting the 12,000?
Thanks for the question, council member. So the 12,000 count is counting just net new units. And basically it is based on a covenant. So if there is a new covenant added to a property, then that counts as a new unit. And so we take into account new deliveries. We also take into account any demolitions to make sure that we are counting just net new.
Okay, and so when you say covenants, tell us what that really means, because some of us remember the covenants that were restrictive as to where certain populations could not live.
Right. So when I say covenant, I'm talking about a contractual agreement that limits who can live there based on income. So it would be restricted based on income to ensure that people who are earning below median income are able to live there. And we include units under 80% of median family income in that count. And our baseline starts from 2019. So net new units under 80 MFI since 2019.
All right, and so are these units that come through the projects come through the Housing Production Trust Fund? Are they also IZ units?
Yep. It
So
includes
it's
all of those.
any unit that has been built, new construction, or major, I guess, renovation with a covenant, since I guess since we began this process of.
That's
When
correct.
did this begin? What year did this begin?
So Mayor Bowser set the goals in January of 2019. And so we use that as our baseline. And you're correct that it includes all of those sources: inclusionary zoning, Housing Production Trust Fund, any level of tax abatement related property. So we look across all of those sources.
Okay, so any tax abatement, okay. And so where are these projects located? In what parts of the city? And I really want these answers out so that the public can get a grasp of what is really taking place in the community.
Yeah, so the 12,000 new unit goal is actually distributed across all of the 10 planning areas of the district. And the planning areas are just permanent boundaries that align somewhat with the 8 ward boundaries. We include a count every single month at 12k.dc.gov. So any members of the public who are interested in following along can visit that site. And the numbers, the targets for each of those 10 planning areas were based on the amount of new affordable housing that was needed there. Because part of what the mayor was doing in setting these goals was working to ensure that we have an equitable distribution of affordable housing across the city.
Okay, and I guess these are those high housing areas that we identified a couple of years ago during the pandemic.
That's right.
Thank you very much for that. I wanted to ask very quickly about the, again, opportunity neighborhoods downtown. Particularly wanted to understand, why is it that TOPA is being excluded from the deals? Give me a real explanation, because we fought for that for many years.
I understand and respect that, but as we know, our downtown is suffering. Almost 200, about 190,000 people are not coming to work, given longstanding telework each day, and that we're really now feeling the effects of long-term telework. So the goal is to increase investment downtown. And make sure our housing investors are investing in our downtown properties to convert them from their current use to residential. And one way to encourage those investments, especially when you're given times of high interest rates, high property values, and things of that nature. The team did a tremendous amount of community engagement on this very subject, engaging property owners, residents, businesses. There was a tremendous amount of community engagement that helped us inform this decision. And one of the biggest things for investors to invest in our property downtown, there was the concern of TOPA, especially when it comes to recapitalizing that property in the out years. And so in order to encourage investment, we heard from the business community, we heard from the development community that two of the biggest concerns were TOPA. And again, we're not talking about existing residents. There's no one living in these buildings right now. And there is a precedent, and I'll let Sharon delve into that a little more about taking away that TOPA on a limited time basis. That has happened before with some LIHTC deals, and I'll let her explain that. And also first choice. Again, I'm very supportive of that program, but when we're looking to make investments in our downtown, when we're looking for investors to make investments in our downtown, First Source also maybe increases a project by about 10 to 15%. So the goal to remove the TOPA on a limited time was to encourage investment in our downtown.
Okay, well, can I also then ask, and maybe Sharon can answer this as well, when you're talking about limiting, the possibility of limiting the time frame for doing away with TOPA?
Only for 15 years. It's not forever.
Okay.
It is for the 15-year time frame.
Okay, I see I'm out of time.
Yeah, this is a very hot topic,
Yeah.
Councilmember, and so we're gonna have multiple rounds. I imagine you heard, I think you said you were around for some of the initial witness testimony. A lot of the public witnesses testified about housing and downtown tax abatement. And so we're gonna definitely come back to that. I wanna pick up where I left off last round, talking about opportunity neighborhoods, specifically HANTA, and thinking about it as one of the tools that the executive is looking to use to provide affordable housing in opportunity-rich neighborhoods. Also, the Affordable Rental Covenant Initiative, the Rental Accessory Apartment Program, and a faith-based initiative. That said, looking at the budget, maybe you can point us at the committee to where there is funding specifically for some initiatives that support housing affordability across the District of Columbia beyond the one that I just named, HANTA. So is there specific funding in some of these other initiatives?
There is, Mr. Chairman. I believe there's approximately $10 million budgeted to support some of these initiatives in I believe that would be in our operating budget. For HANTA and some of these other initiatives.
Can you tell us where to find that in the budget? Is it specifically around a program that's named in the budget that we could see within the budget book where the dollars are allocated?
So in the Budget Support Act, there are some changes proposed to HANTA. The budget would be increased from $4 million in fiscal year 25 to $10 million in fiscal year 25. And it would retain the 4% increase each year after that, as it currently does. For the residential accessory apartment program, which would provide a financial support to homeowners to create accessory dwelling units, there is $1 million in DHCD's budget. Where exactly I can't point you to at the moment, but it is within the DHCD budget.
Okay. We saw the HANTA funds, but we weren't sure whether there were additional funds somewhere that you could point us to. And it sounds like the additional $1 million is in DHCD's budget. You mentioned, Deputy Mayor, the Capital Gateway project in your prepared remarks. Are there concrete plans for the development of retail and housing at that site? If so, what are they? And when might this committee anticipate being asked to consider funding proposals for these other uses?
So the Capital Gateway project, there are plans for housing on that site. The good news is right now we are working very hard to bring a grocery store to that site, which is much needed. And so I think there's $25 million in the capital budget that's budgeted for the infrastructure of that grocery store. And I will turn to Sarosh about the additional plans for housing at that site.
Yes, thank you. So as the Deputy Mayor mentioned, there are 3 parcels that constitute Capital Gateway, and the center parcel right now, we are focused on bringing the grocery store. And to your question about when this committee would see something, we would like to bring the DFA and the LDA to council in the fall. And then after those documents are provided, we will be going out to issue RFPs on the remaining 2 parcels. One of them has been identified for housing and the other one has been identified for retail.
Got it. Thanks for that update. Significant decrease in the budget as proposed by the mayor for FY 2024. And looking at the budget book, it looks like the near 50% decrease is primarily because of less federal funding. Is that accurate? Your mic's not on.
My apologies, Mr. Chairman. That is correct. Reduced funding, what we call relief funding and one-time funding for tourism. So that is the lion's share of the reductions that you see there.
Okay, so how many FTEs does Dmped presently have in FY 2023?
We have 99.
Okay, and it looks like what's proposed is 90 FTEs. Is that accurate?
There will be an amendment, I believe, in the errata letter. So the current proposal shows the reduction of 2 locally funded FTEs. Those are not intended to be reduced, so it would be a reduction of 7.
7, and that would bring the FTE count to what number for fiscal year 2024?
I believe that would be 92.
Okay. And how, if at all, would the decrease of 7 FTEs impact the office's ability to fulfill its mission, particularly since we've seen over the last few years, particularly given the support of federal funding, steady growth with the staffing that you've had. And I'm trying to see which division this is, but, oh yeah, business development efforts.
Well, it's always hard to do the same amount of work with fewer people. And our staff has been stretched pretty significantly for the past 3 years. The pretty substantial reduction of federal funding will help in terms of not adding significant new programs like we've already experienced. And I believe that there is a new FTE proposed, a grants associate to augment our contracts and grants team, which will be a huge help since we'll need to continue to monitor and ensure compliance of the past grantees.
Okay. And staying on the topic of FTEs, how many vacancies does the office currently have?
So we currently have 17 vacancies. However, I believe 7 of those are essentially filled because we'll be shifting some of the folks from the eliminated positions into some of those existing vacancies. Or in some cases, we have new people starting in the next week or so. And then 3 of those existing 17 vacancies are on that list of elimination. So, besides those that are moving into the locally funded vacancies. So really we have a true 7 vacancies at the moment, and all of those are in active stages of recruitment.
Okay, and what's the current vacancy savings?
Is our AFO on? I believe it's 1%, but I'd love for Mr. Lewis to confirm.
Yeah, this is Curtis Lewis, AFO for Dmped. So that it's budgeted at 1%.
What's the amount? What's the actual amount, Mr. Lewis?
It's about $162,000.
Got it. Okay. Thank you for that. I am out of time in this round. And so I'm going to turn to is still on. I'm going to turn back to Councilmember Fruman for another round.
Thank you very much, Chairman McDuffie. I want to go back to the Whittle School, the Intelsat site. And I was struck by Councilmember McDuffie's, Chairman McDuffie's comment about the Wardman and the missed opportunity at the Wardman. I wonder if you have been looking at the Whittle School as a possible opportunity, and when it is a very large site right on Connecticut Avenue, very near the metro, strikes me that it could be used for lots of different purposes and including in concert with UDC. Can you walk me through how Dmped would look at a project like that, or has been looking at a site like that as a prospect for purchase or whether there's other vehicles that you could use to get control of the site?
So I am very familiar with the Whittle site, both in my former DGS capacity, now Dmped capacity. We've had teams walk the building. We've looked at the site for various uses. The unfortunate reality is that building comes with a very hefty price tag. And so we have to think about acquiring the property, then changing the use of the property and putting it back online. When you look at that, it becomes very cost prohibitive for some of the uses that have been recommended. So I'm very familiar with that property. Our teams have walked it on numerous times. We've looked at it for several uses, but unfortunately, given the cost to acquire that property, then the cost to convert it to another use, it just does not make sense financially.
I mean, can you speak to the kinds of uses that you've looked at it for so far?
We've looked at it to add to our education assets. We've looked at it from possible shelter use, several uses. Nothing definitive, but the reality of it is, the last I looked, Sarosh, I might be incorrect, it was approximately $80 million to acquire that property, and probably just the same price, if not more, to convert it into another use. So once you start talking about those numbers, it just becomes cost prohibitive.
And did you say that you were thinking it was on the order of $80 million? It struck me that it was probably a higher number than that, but that's the kind of number you're thinking.
It may be higher, but for some reason, 80 million was in my head, but it could be more.
So I'll just say on the Whittle School site, I mean, for me, bringing that site to life is really important for the Van Ness corridor, and seems like it could have a lot of good uses for UDC. And as you said, there's lots of education. And I hope it's been clear. I'm going to continue being out there looking for creative ways that I can pitch to you and to the mayor and the administration to keep an open mind, and perhaps we can get control of that site at some point, because it
absolutely
sites that have as much potential. I'm sorry.
Yeah, and I look forward to working with you. And I was just informed on that site alone, it sold in 2012 for $85 million. So I'm certain the price tag is much higher at this point.
Yeah, there was a recent story in the Washington Business Journal that cited that figure, and then I think also cited that maybe there was $112 million already invested in the site. So I would expect, well, I don't know, I don't want to negotiate against ourselves, but I would expect that the people who control the site would be thinking more in the 200 million range than the 80 million range, given the amount of money that they put into it. That said, for that much property on Connecticut Avenue, that can still, there still can be a good deal there if there's a creative way that we could get it done. I want to turn to Friendship Heights. Friendship Heights, a lot is happening in Friendship Heights, and thank you for the support of the Deputy Mayor's office in helping to make that happen. The two big remaining parcels are the Western Bus Garage, which is controlled by WMATA, and the Lord and Taylor site, which WMATA hopes to control and have it become the site of a new all-electric bus garage. The air rights there in Friendship Heights over that bus garage could offer a lot of opportunities, including affordable housing. And the Western Bus Garage site, obviously, right on Wisconsin Avenue, lots of opportunities there. WMATA is not in the affordable housing business, and WMATA has its own financial constraints and can't be giving up value to the city or anybody else for a different goal besides being a transit agency. How's your office thinking about creating incentives that could enable WMATA to put much of that property to use for uses such as affordable housing?
Yeah, thank you, Councilmember. So Dmped has been in talks with WMATA for probably about the past year on this site and a variety of their joint development sites across the city for exactly the purpose that you mentioned. And, you know, we've been going through a number of different underwriting phases with them, but we haven't come to any definitive conclusions about either what is their need or what it could produce, or therefore what the district would want to participate in.
So, yeah, I hear you on that, and you want to be careful in whatever it is that you do. I'm sure there are other WMATA sites in the district. This one is, this is going to end up being 2 sites and going to be, I think, the heart and soul of a future of Friendship Heights. So I'm going to want to stay close with you on this and be a part of the consultations about what kinds of things can and should be done, because I want to seize this opportunity to accomplish a lot of goals. It's another one, you know, that people talk about different opportunities in Ward 3, and there's the big fish, and one big fish was the Wardman, another big fish is the Whittle Building, and another, maybe even the biggest fish, is the Western Bus Garage and Lord and Taylor sites. So let's stay together on this and try to make something positive happen.
Yes, absolutely. We look forward to working with you on it.
Thank you.
Thank you, Councilmember Fruman. I'm going to turn to Councilmember Bonds for another round.
Thank you very much. And again, thank you all so much for being here with us, talking about this important subject. I certainly agree that the creation of a viable neighborhood in downtown DC is the right direction. So please help me understand what amenities would be provided to the estimated 15,000 new residents. And if you have anywhere within your budget indication that we're going to provide these families, these households with amenities, and would it be done by age groups?
That's a very good question, Councilmember Bonds. Right now, our downtown is replete with a lot of amenities for all age groups and people. And so as we bring this housing online, we will continue to look at what amenities are available or what amenities we need to include as we welcome the new population of folks that are moving downtown. We've done some good things for the downtown corridor. We've activated parks like Franklin Park for people to enjoy. There's money in the budget to invest in another park downtown in recreation space. So as we continue to move forward with this effort, we will certainly address and look into the amenities that folks need or would want in their new neighborhood.
All right, and so the new neighborhoods you are thinking it would be pretty much people that we currently have, and what I mean is it would be incomes of 120 to 200% of AMI. Is that what you're thinking? Because that's who lives downtown now.
Right.
Okay.
Yes, Councilmember, you're correct that the current population, the 25,000 folks or so who currently live downtown in general have above median income compared to other areas of the district. The housing in downtown program that is proposed in the fiscal year 24 budget would require that any project that is granted the abatement provide affordable housing as part of that development. So there is a requirement of either 8% of units being affordable at 60% of MFI or 15% being affordable at 80% of MFI.
All right, and since you have pulled the plan together, I should assume that there was cooperation, negotiation in deciding 8% affordability.
Yeah, so we've done pretty extensive stakeholder engagement since the end of 2021, starting with a public request for information. And then more recently, since last year's budget was approved, have talked quite a bit with housing providers and others in the housing community to really understand what's financially feasible. A lot of those folks open up their books, shared financials, and that's how we settled on the 8% at 60 or 15% at 80.
All right. well, opening up the books is like magic because they don't like to do that. So I therefore will hold on that point for a minute. Wow, that's amazing. I think they can go to 20% without a, absolute pain. And so I'm hoping that we will see some housing that is 20% affordable. Maybe I'd like to go to 60% and below, but I'm pretty sure it'll be 80% and below. Because we want the community, as you are building these neighborhoods, to really, grow and thrive. So that leads me to, where else in the city are you looking to also build a viable neighborhood with a commercial strip? I know we have strips all over the city, but viability is what neighbors want. And there are neighborhoods where they currently are left out, not just east of the river, but just think about this city. Those of you who are familiar with, the neighborhoods and how many blocks away from a grocery store you may be. And I'm particularly concerned about our aging community. You'll be there if you're lucky, as you well know. And so because you'll be there, I want to know exactly what we're really planning as we are becoming more of an older community, because the young people can pick up anytime they like and move to a new community. But most of our aging community will be on fixed income. And so this is their home and they should be able to age here. So as you're looking at neighborhoods, where are you looking to also create some commercial hub?
Councilmember, I couldn't agree with you more. In this budget, we focus on the three pillars of the comeback, which are our residents, our neighborhoods, and our businesses. And I think one thing that's very important, that as we look at the entire city and understanding that downtown is our economic engine, we really have to make bold investments there. But you're right, we have to look at the entire city. And one thing I'm very excited about in this budget is that we're addressing food access. We still have residents in the city, to your point, that live more than a mile from a grocery store. And we have two projects that Dmped is working on that will bring grocers east of the river, reducing that number of about 40,000 residents that live more than a mile from a grocery store, reducing that to 10,000 or less. And we still have work to do there. So we look at the city as a whole, but we do know that there are areas of the city that we have to address and address those matters quickly, like our downtown area. But it is about the neighborhoods. It is about the people. DC has a very rich culture. We want to continue to ensure that our residents continue to live here, work here, thrive here, and continue to live here. So we're making those investments in our neighborhoods, like grocery stores, like affordable housing, to ensure that everyone is included as we move forward.
So have we looked at the cost of smaller grocery stores? I grew up in this city and we had smaller grocery stores and they were everywhere. And that's, was good eating, good living, we were able to make it. And I'm just wondering if we need to think more about the convenience of those who live in the city, as opposed to the economics.
Right. No, I think you're absolutely spot on. I mean, it's more than just the big box grocery stores. It is the smaller grocery stores, which we have made investments in. It's also ensuring that we have restaurants that residents can walk to. So it's more than just the big box grocery stores. It's having access to healthy food, which means you can walk to a restaurant, you can walk, or you live less than a mile from a grocery store. And there are also other options that are smaller stores. So those are things that Dmped has invested in on all fronts. And we're going to continue to make those investments.
So have you all developed a plan, a 10-year plan of 5-year plan. I'll take that if there is such a thing.
Councilmember?
I know, that's
Okay.
it. I'm done on this round.
Yeah, I appreciate it. We definitely want to get to that. I think that's a very important line of questioning. Let me just ask about your communications office, Deputy Mayor. When we being the committee and the Office of the Deputy Mayor chatted during February performance oversight, around that time, staff noted that there might be some areas where Dmped could see some improvements in terms of engagement with the public. And I think they described efforts, in fact, to engage a communications and public engagement consultant, in addition to a marketing effort to contact residents that have left DC to query them on their reasons and what it would take to make the district more attractive. And so when I look at your office's proposed fiscal year 24 budget, it includes a cut to the communications budget. So reconcile what I heard in February with what I'm seeing in the proposed budget in terms of that office. And also, if you could, the proposed budget also makes a significant cut to your office's public-private partnerships work. So tell me more about the work that team does and what impact that cut is going to have on the PPP office.
So unfortunately, Mr. Chairman, as we all know, this has been one of the toughest budget cycles in over 10 years. And we had to make some tough choices, and some of those were in our communications. However, I will say that doesn't mean that we're not going to continue to engage the community at the highest levels possible. As a matter of fact, going back to the Black Home Ownership Program, we actually have an RFP on the street right now to attract a marketing firm so that we can let Black homeowners or potential Black homeowners know what's available now. What resources can you tap into right now? So I'm very excited about that, and that RFP actually closes tomorrow. But we're going to continue to ensure that we engage the community on a myriad of subjects, as we have been engaging in the housing and downtown program. That took a tremendous amount of community engagement from various stakeholders, from tenants to housing providers and on down. So while we did have to make some tough choices there, we're still moving forward in terms of communications, and I'm going to continue to work with the team as we do that. So I do not expect any hiccups there, but we will continue to move forward from a marketing and communications standpoint.
What about the PPP office?
The PPP office, Sharon, do you have an update on that?
Sure. So the most significant recent project from that office was a partnership with DDOT last year to implement a streetlights contract, which is progressing. The P3 office is within the real estate office. And so from a contractual services standpoint, they've been able to find some efficiencies. And we don't anticipate any significant negative impacts from that reduction, since they can continue to work with the real estate resources there.
Okay. I mentioned a little earlier, I think, the office's business development program. And I think one of the most significant cuts this year to Dmped's budget was within that office. The program and its portfolio, as I mentioned earlier, have grown over the years. With the recent release of the mayor's comprehensive economic development strategy, as well as the disparity study that we noted earlier, both which focus on increased investments in businesses of color, how will this specific cut impact the programs that I mentioned, and just the efforts of Dmped to be able to really, I think, administer some of these strategic initiatives that a lot of people have developed interest in since you all have announced them?
Good afternoon, Sibungali Cook, Director of Business Development and Strategy. As you talk about the investments specific to minorities, what we're seeing now is how can we strengthen the existing programs that we have. We have DCAP, which is our DC anchor partnerships, which supports MBEs and encouraging anchor institutions to increase their minority spend. When we think about CPAC, which is Commercial Property Acquisition Fund, another opportunity that the mayor's budget is proposing an increase because of the excitement around this opportunity to also help entrepreneurs purchase their own building. On top of that, our longtime Great Streets program, which is another equity opportunity to create and build more incentives across all neighborhoods, 13 retail priority areas as well. And so as you layer those opportunities on top of one another, and on top of the fact that the Great Streets line item budget has been increased, it gives us an even greater opportunity to think about how we can continue to innovate and tap into the existing programs that we have that are being successful, and how we can continue to enhance those, and then maybe innovate and think of some other opportunities where there may be some gaps as well.
Are there specific programs though that are gonna have to essentially take a back seat, where there will be either just no longer administered by Dmped or reduced significantly in terms of funding, given the amount of funds that are being cut specifically in this program?
Right. What we're seeing is an opportunity to collapse some programs into one another so that we ensure that we're not duplicating efforts.
Okay.
But thinking a bit more smarter about how we deploy some of the opportunities that we currently have.
If you could though, I mean, if you could follow up with the committee specifically and let us
Absolutely.
know where they're essentially being collapsed. Any consolidation of programs, things that you have been doing, perhaps where the small business community has sort of gotten used to some of these supports over the course of the pandemic, which perhaps don't even make sense to do anymore because, you know, we're coming out of the pandemic. I don't know.
Right.
I don't want to put words in you all's mouth, but I would love to see specifically where that consolidation is occurring.
Right, we'd be happy to provide you with that. As you guys were having the conversation, I was thinking about the bridge fund that would be going away. And that was, again, relief funding. And we're coming out of the pandemic. So we'll be happy to provide that with you.
Okay,
to the
no, I
committee.
think that's a great example and probably some of the most significant funding that resulted from the pandemic and a lot of the federal support that we had. I want to just, if I could, talk about CBEs. We talked about it during performance oversight. And what is the office's 2023 spend goals, and where are you in terms of achieving that goal today?
The 2023 spend goals are still being calculated by DSLBD, is that correct? I do know that office has the goal was $22 million in 23, and that is still being calculated by DSLBD. What I will say is that I believe since 2012 or 2015, the agency has hit the CBE goals or SBE goals every year. So I do not anticipate that to change. But we are finalizing 23. The goal was $22.4 million.
And when you say finalize, you mean for any exemptions, which would
that is correct.
Change that amount and ultimately what goal you have to meet. Got it.
That's correct.
Okay, all right. I'm over my time. I'm gonna turn to Councilmember Fruman. Is he still? Yes. All right, I'm gonna turn to Councilmember Fruman for another one.
All right, thank you very much. I'm getting close on mine. I'm glad to see that there's an increase in the Great Streets grants, which in my ward have enabled small businesses along the Wisconsin Avenue and Connecticut Avenue corridors to make very meaningful investments in their physical and operational infrastructure. Do you know how this additional funding is going to be allocated on the different corridors in the Great Streets pot?
Good afternoon, Councilmember. For the Great Streets retail program, we don't identify a certain amount for each corridor. We roll it out and there's an opportunity for all businesses to take advantage of it regardless of corridor. We don't put a budget for all 13 retail priority areas.
So it's a pot for the whole city and the application process is for the whole city.
Those that qualify in the corridor, yes, sir.
All right, wonderful. You know, I've heard as great as the grants are, I've heard reports that they can be delayed and making it difficult for businesses to hire contractors and to implement in the funded projects. Is there anything in the works to try to streamline the process or improve the process, or do you feel like it's working as well as it can be?
We're always in workshop mode, always thinking about how we can increase efficiencies across all of our teams, all of our departments, agency partners as well. So that's something that's an ongoing challenge and activity, given in light of the staff that we might have, other teams and their staff, because we don't do this by ourselves. And so while we are the team that is administering the grant, we also have other teams and other agency partners that we rely on as well. So that's an ongoing thing that we're constantly trying to improve.
Well, I mean, this is one where, I want to be grateful because the investments have been really important. And I've seen it with, a number of different businesses where the grants have made a real difference. But I do think, like anything, focus on improving efficiencies would be useful. Your proposed operating budget includes an increase of 1.5 million in support of 2 large technology companies. Can you explain that entry a little more fully?
Are you talking about our 2 companies, Fiscal Note and Everfi? They're recipients of the COSM grant. So that allows us to fully award those 2 recipients.
And say again the companies.
Fiscal Note and Everfi.
And what do they do?
They're 2 tech companies.
I mean, what sort of tech companies? A pretty broad thing.
Yeah, so fiscal, actually, I'll go to Everfi. Everfi does a variety of fintech and ed tech and civil education technology. That's the work that they started off doing. They're continuing to expand, but they're in Georgetown. That is one company. Fiscal Note is more, what's the best way to explain? They use artificial intelligence to do a lot of tracking and information.
And what kinds of things would they be doing for you using artificial intelligence?
Who, Fiscal Note?
Yeah.
Well, they're nationwide now. I think they've also expanded and gone public. So it's a rather large company, but what they're doing for us here in DC is hiring residents as a part of their COSM grant that they're receiving. We're tracking how they're working with DOES in terms of hiring new employees, internship programs as well. So they have a community benefit agreement that we're continuing to track on a regular basis.
All right, well, thank you very much. I'm going to spend a little bit of time on downtown. I know it's been covered, a lot already, but I think, am I right that the tax abatement that's proposed is 29 million? And I guess, first, is that right? And second, how would that number have been arrived at?
I believe that, Councilmember, I believe that number is closer to 40 million.
Oh, okay.
Tax abatement, and you want to talk about how we arrived there?
So the way that we arrived at the proposed $41 million as the cap for fiscal year 28 was through a lot of stakeholder engagement and analysis. I'm sure you remember that in January, Mayor Bowser set a goal for downtown recovery to add 15,000 residents to the downtown population over the next 5 years. They, of course, will need places to live. And so when you look at how much new residential we would need to get there, that is about 7 million square feet new. So based on some of the financials that we looked through, that $41 million would be enough to support about 90% of the new residential. So about 6.3 million square feet or 7,900 units.
Okay, well, I was asking for how you found the number and you gave it to me. Can you explain to me, there's talk about that TOPA wouldn't apply, but as I understand it, it's a 15-year exemption from TOPA. What are the mechanics of the proposed exception to TOPA for downtown?
That is correct. So you have the $40 million tax abatement. We are waiving the first choice source agreement, as well as giving them a limited 15-year TOPA exemption.
So that if somebody converted a building and then had tenants, if they didn't have tenants, TOPA would not apply. So if they sold the building before they had tenants, they'd be free to sell the building before they had tenants, without. But once the tenants, if they sold the building within 15 years, they would
not be subject
TOPA
to
would
TOPA.
not apply, and they could sell it without TOPA rights. But if they sold it in year 16,
TOPA would apply.
TOPA would apply. So how did you come up with the 15 years? What's the rationale behind that, and what scenarios are you anticipating when?
So I think it's important to just clarify that there would be no existing tenants affected by this, because the abatement and the program in general would only be awarded to properties that are changing use. So it could not be existing residential to be eligible for this program. And it would be a competitive program. Every single project would be evaluated for financial needs. So this is not a by right incentive program. The 15-year exemption that would take effect following the issuance of the certificate of occupancy. And that time frame is very similar to an existing exemption for LIHTC projects. So when those projects recapitalize and you have some changes to the ownership structure, there's a similar 15-year exemption from TOPA. So we just modeled it after that. And the intention is to eliminate a barrier to capital investment at the front end of these projects, which is right now being deterred by some concerns about the uncertainty imposed by TOPA.
So, and then it's just, and I know I'm over.
Councilmember Berman,
what's that?
Your time has expired. You're about a minute and a half over. And so I'm going to turn to Councilmember Bonds for another round, but also note that we've been rejoined by Councilmember Brooke Pinto, who will follow after Councilmember Bonds. Welcome back, Councilmember Pinto. Councilmember Bonds for a round.
Thank you again. And so I do want to talk about the, let's talk a little more about TOPA. You were beginning to give us some more information about TOPA. My question is, 15 years is a long time. Especially when members of the real estate community have said on a number of occasions that, usually their rents come in and after 7 years, they've satisfied that mortgage. So I'm just wondering if 15 years makes the good sense that we're aiming for. Should it be shorter?
I don't know if that it should be shorter. Most of those commercial loans have a 15-year term. And so I think, what we've heard from our housing providers and our business community, that it's all about mitigating that risk and encouraging the investment on the front end. I think by making it shorter, you would discourage the investment. So I think given that most of these commercial loans have 15-year terms, I think, and given a tremendous amount of community engagement and what we've heard from the community, I think 15 years is a good time frame, and it also jives with some of the other LIHTC deals that are there as well. This is not a new precedent. We actually are modeling this from another program, so I believe 15 years makes sense.
Yeah, I'm aware of another program that. Okay, and so you're saying that this 41 million tax abatement complements the 7,900 new units, correct? All right, well, correct. Now you indicated in your testimony, Mr. Deputy Mayor, that there were 20 million square feet available.
Vacant. Our vacancy rate it hasn't been this high since the 90s. It's actually higher than the 90s, which is very scary. We're going to go from empty buildings to empty blocks. This is why we're proposing these bold steps to ensure that we create a mixed use downtown.
All right, so the 7,900 units will take up what of the 20 million square feet?
We estimate that we'll need approximately 7 million square feet to 6.3 million square feet in order to provide housing for the new residents.
Okay, so, okay, let's say 7 million. So you've got a little bit of left over. You've got 13 million. What happens to that?
We're going to continue to engage with the community and figure out the best way to change those spaces. One thing is that we want to make sure that the people come back to that additional space and come back to work. So our goal is to fill the space, change the space, and bring the people. And part of that change the space is to build that housing. But we want to continue to work with our businesses, especially our larger employees, to ensure that we're making sure folks are coming back to work. And anecdotally, I think we're starting to see that a little bit. But there's more to come.
All right, so you're seeing this movement to the vibrant downtown being more temporary. In other words, we're not thinking all of downtown will be torn down and replaced with residential.
No, we're not thinking
Okay.
that. We're thinking mixed use. We're
All right.
thinking more residential than we have now. And I think we have a very healthy sports and entertainment district downtown. We have a healthy restaurant industry. So we want to add to that new residents to make up for some of that daytime traffic that
Right.
we're losing.
I think it's important for the public to understand that the goal is not to just transform all of downtown.
No, it is
into-
not. It is not.
Okay. all
No,
right.
but we
Thinking
want to transform some of
cows and
downtown.
pastures
to
and all of
residential.
that. Yes,
Yeah.
thank you. Thank you so much for that. The first source agreement, in my committee, I would be very concerned about that. So tell me really and truly, why is that necessary?
Again, the goal is to attract investment in downtown. DC was once a place that was almost -- in this country to invest. We're not there anymore. And so in order to attract investors to build housing downtown, given the amount of community engagement we did around this, we felt that it was reasonable to remove first choice for this particular program to again encourage investment in our downtown. First choice, I know I do support that program. We do want to make sure Washingtonians are working, but we also want to make sure that we are able to continue to provide core services to our residents. And in order to do that, we have to ensure that we have our economic engine moving downtown. So first source is something that we felt would make sense to remove from this project. It is something that does increase costs. But for this particular project, we felt that if we remove first source, if we give a limited TOPA exemption, that we can invite or we can attract investment to our downtown corridor.
And we're also doing $40 million in tax abatement.
We have to make bold decisions. Again, our vacancy rate downtown is higher than the 90s.
Okay, it's all right. In your comeback plan, you make reference to you're going to increase the share minority-owned businesses to 33% of all employer businesses by 2028. That's 5% increase in 5 years, 1% each year. What is the current number of minority businesses as you are counting them today?
I believe there are approximately 490 minority businesses in the city as we count them today.
All right, so you're going to do 1%.
And I'll get you the exact number.
Okay. All right, well, I have 1 second. Thank you very much. Thank you.
Thank you, Councilmember Bonds. Councilmember Pinto, before you start, just note that we've been joined also by Ward 1 Councilmember Brianne Nadeau, just in terms of coordinating the times. I know everybody's jumping between committees. Our lineup is Councilmember Pinto, Bonds, Fruman, and Nadeau. Not necessarily in that order, but we're going to Councilmember Pinto now for a round. Thanks.
Great, thank you so much, Chairman McDuffie. And hi, Deputy Mayor Nice to see. I want to kind of pick up on the conversation that you were having with Councilmember Bonds around the need for a mixed use downtown. And I'm really excited to see investments in your budget around downtown conversions for housing. But I think it's kind of one piece of the puzzle. And as you know, I've introduced a bill called the Recovery Act that does some similar things in terms of building out the downtown housing tax abatement fund to use for conversions and for the inclusion of affordable housing, but also other uses for retail, green space, hotels, restaurants, grants for minority-owned and women-owned businesses and retail to locate downtown, for grocery stores, urgent care, child care centers, additional subsidies for employers to provide child care to their employees, and also safety grants, because we know that's so central to the needs that we're seeing downtown and really all of our business corridors throughout DC. And so kind of putting aside the differences in our proposals for the housing abatement piece, does Dmped support the Recovery Act?
I think we would like to work with with the committee on the Recovery Act. I think there's some aspects of it that need more study, and I'd like to have those conversations with you as we move forward. So if I could have the opportunity to work with you on the Recovery Act moving forward, that'd be greatly appreciated.
Absolutely, and would love to work closely with you on it and with Chairman McDuffie. But as we think about, we only have a couple weeks for this budget to get passed and mobilized. So are there pieces of it that you think would be most useful in supplementing our shared hope to bring a mixed use and revitalized downtown, or pieces of it that you're particularly supportive of or not are concerned about or want more study on?
Council member, I think that we share a lot of the aspirations that are articulated in the Recovery Act. One concern that we have is around the need for housing. We know that resources are limited, and that we as a city, not just as downtown, but a city as a whole, desperately need more housing. So that would be one concern. I think we found very interesting the incentive for family-sized units. I believe that the proposal includes some relaxation of the tax liability for family-sized units that are delivered. And so we know that is also a strong need. We are in the process of contracting to do a housing needs assessment to better understand the need for family-sized units, senior housing, and much more. But that's an area that I think offers a lot of potential.
Okay, great. Well, I look forward to working with you all and Chairman McDuffie on that in the next couple of weeks, because I think you are right when you say we have to make these investments now, because inaction will be really detrimental, not only to downtown, but to our entire city. And so it's very important. These are conversations that we were all having several years ago together about different investments that we could be making downtown. And we're seeing the need even more strongly now. In terms of the public safety need, this would be a slightly different approach in having public safety grants be dispersed through Dmped. And I know that's not traditionally something that Dmped is directly involved with, but our hope here is to have some flexibility for our business corridors on what they may need. We've heard from some that they may just want more lights on the street. We've heard from others that they may want to contract with private security to have more eyes and ears on the ground patrolling, especially in a challenging hiring year with MPD. And so just want to get your thoughts on that piece specifically of the Recovery Act proposal.
I am aware of that piece of the Recovery Act proposal. I do have some concern, but nothing that I would like to speak with you in the committee about. My first reaction was, that may not be in our bailiwick, but hearing you describe it in terms of how it relates to business, I'd like to have further conversation about how that would look moving forward.
Okay, great. And in our limited time here, just want to ask you about Great Streets in Ward 2. Several years ago, we expanded the Great Streets boundaries to include some business corridors in Ward 2 that businesses are really benefiting from all over the city. But I was very concerned to see a reduction in this proposed budget of the expanded Ward 2 Great Streets program, particularly in spite of the growing need. And I hear all the time from folks about wanting the boundaries to be expanded even further or the fund amounts to be increased. What motivated the decision to reduce this funding, and how else can this budget support our small businesses both in the Great Streets footprint and outside of it?
Hi, Councilmember. The budget right now, there is no reduction for Great Streets. It's a $10 million line item. So it's actually an increase in the Great Streets line item for 24.
Oh, great. All right. Well, I'm wrong then. And I'm so glad to hear. I'm so glad to hear that. Thank you so much for clarifying that. I misread that. Okay, great. And I think if I have time to fit in one more. Childcare. This is part of the Recovery Act. Is this budget proposal supporting increased access to childcare is one of the needs that I continue to hear about, especially as we've seen the exodus from traditional workplace environments for working parents and especially working moms.
Councilmember, the mayor's budget does increase the eligibility limit for the childcare subsidy from 250% of the federal poverty line to 300% of the federal poverty line. I have not had a chance to compare what's in the Recovery Act, but would defer to our counterparts at OSSI for a view on that.
Okay, great. Well, that's one other piece of the Recovery Act I'd love to work with you all on that I think is an important part of our efforts to get people to come back to in-person work. That's not going to work for everybody. It's not going to work for every business, but it is part of the effort, and helping make that easier for employees and employers to cover those costs, I think is a step in the direction that we all would like to see.
We agree and very much support that.
Sorry.
We agree and very much support that.
Okay, great. Thank you so much. Thank you, Chairman McDuffie.
Thank you, Councilmember Pinto. Deputy Mayor, last fall, obviously before you joined, the council approved your office's ability to receive $26 million in federal funds to support a new SSBCI venture capital program. The federal application was developed in partnership with Dmped, and we asked Commissioner Woods some questions about it in oversight last Friday. Where in your office's proposed fiscal year 2024 budget would this sort of federal allocation for this venture capital program be located?
I believe you will not see it in the budget as it stands today. We have not received the grant, but once the grant is received, I believe you'll see it in our operating budget or in special purpose revenue.
Have you all done everything you need to submit that application? Has it already been submitted?
So the application has been submitted. We have been working with Treasury on some legal nuances and procedural nuances, which we think we've come to a conclusion on just in recent weeks. So we are optimistic that we'll be moving forward with that.
Okay, and then when assuming that the funds are awarded, they're going to be in Dmped's budget, and you all are going to be the lead on administering that, or how's the structure between Dmped and Dmped?
The application that we submitted would split the district's allocation evenly between Dmped and Dmped. It's $52 million, I believe, total, and there's 3 tranches. So the first tranche for each agency would be about $8 million.
Got it. Okay. The FY 2022 budget that the council approved included $6 million for Dmped to make grants to local CDFIs and MDIs to increase their capacity to fund small equity impact enterprises I didn't see a similar investment by the office this current fiscal year and don't see anything for 2024. Is that accurate?
I believe so, Mr. Chairman. I believe that was one-time funding in FY22, which we do not have currently in FY23 or 24 at this point.
Okay, so no plan to invest in the equity impact fund in
Not
24.
at this time.
Got it. Obviously, tough decisions have to be made, but just in terms of that decision, what's the underlying premise for not investing in that? Was it not any success? Did you not see the return on the investment? Any thoughts on why that's not included in this proposed budget?
So I think we saw great success out of the Inclusive Innovation Equity Impact Fund. As you think about the plus up in the Great Streets line item, that'll be the opportunity where we can continue to build an even greater program. We've had a great relationship with 1863 that's been our administrator of that program, and they've also been able to raise private dollars as well to match the fund. And so that's been wildly successful. So we're thinking about what that could continue to look like with the plus up in the Great Streets line.
Now, I'll note though, this equity impact enterprise designation means that there's certain criteria that a business will have to be eligible. It's not the same criteria for Great Streets.
No.
So the focus that I've seen in the Mayor's Comeback Plan on attracting and supporting Black-owned businesses is a different mission and focus in the Great Streets program. So I'm not sure that you get the same impact by focusing on Great Streets that you did by focusing on the Equity Impact Fund. Would you disagree with that?
So it would not go into the actual Great Streets retail program. This would be separate and apart, but that's under that line item. That's a bucket of different funds.
So there would be funding to do something that has more of a focus on Black-owned businesses?
Yeah, because right now the Great Streets line item has Great Streets Neighborhood Prosperity Fund and locally made.
Okay.
So it has a suite of different opportunities in it.
Got it. I might circle back. I have a line of questioning that I have toward the end of my questions, and I know my colleagues are sort of addressing some of the things that I plan to talk about later, but I want to revisit that. Let me just ask more generally though, before I lose this thought. There were some questions earlier about sort of attraction and retention. And a number of members have touched on that, including myself. But I'd love to know if you could, somebody could talk to, like, how are you aligning your workforce priorities with the business attraction and retention efforts through Dmped right now? In other words, I've said this all the time, sometimes the government, both executive branch as well as the council, I think in some cases, operates in silos. And workforce development is extraordinarily important to being a city of opportunity to people who don't currently live here. I think it also is extraordinarily important to people who do live here, who are not gainfully employed, but seeking to really see the benefits of some of the more recent prosperity, notwithstanding the tough budget that we have currently. So talk about your workforce development and how that's aligning with your attraction and retention efforts.
I think one of the goals for Dmped is to increase the amount of employers over the next couple of years. We've noticed several sectors that are high growth sectors, education, hospitality, some other sectors of that nature. And I think the Vitality Fund has been a very good tool to use to ensure that we're aligning those. Would you elaborate?
Absolutely. I agree with the deputy mayor. Right now with Vitality Fund, as you all are aware, council members, is that one of the major prongs of that is job creation and job creation for district residents, for residents here. And so what we're seeing as a part of this fund is that we are tracking job creation, and that's very important for us. And we do that also in coordination with our workforce partners, with DOES, with WIC, as well as we think about how we want to make this a really strong incentive program that does create jobs for our residents. And so what we've seen just lately in our pipeline right now with the current projects that have been approved, we're seeing upward of 708 new jobs being created as a result of the Vitality Fund. And that's just a few that have been approved. We know that if we were to approve the 15 different prospects that are in our pipeline, that we would see 3,000 new jobs. And so
let me just jump in a little bit because my time is running low. Great Streets, I started to ask a question about that. I would love for you to be specific about the $3 million enhancement proposed for 2024. How much of it is going to specifically to the Great Streets program that so many businesses have come to understand that they can apply for it and get awarded versus, some other programs that might fall under the same bucket in your budget, but be utilized for some other program?
Each year it varies. On average, we do anywhere from $2.5 to $3 million to the program. In the past, it had been upward of $5 million, but that's when it was just Great Streets. It wasn't an NPF. There wasn't a locally made. And so there've been a lot of innovations over the last 5 to 6 years. So as we think about what could Great Streets look like next year in funding, I think we usually base that on the performance of the previous year as we work with Main Streets and other stakeholders to determine what is the number that we need to be thinking about in terms of investment for Great Streets versus Neighborhood Prosperity Fund versus locally made. And so that's something that we continue to review year over year to determine what the budget allocation will look like for each program.
It's something to think about. I'm not going to ask for a response right now because my time has expired, but I'd like to know how much was spent specifically on Great Streets grants in FY 2022 and FY 2023 to date, and what other programs fell under that broad Great Streets title, but went towards some other named program within Dmped. You don't have to answer right now because I am over my time, and Councilmember Nadeau has joined us, and so I want to turn to Councilmember Nadeau for a round.
Thanks, Chairman, although I'll be interested in that answer as well. So thank you for raising it. I want to start by thanking our colleagues at Dmped for their efforts in support of the African American Civil War Memorial Museum. We are in the home stretch of financing that project, and we thank you for assisting with the gap financing. That's an important, it's an important landmark for U Street and for the history of the District of Columbia. And I do have other questions, but I also want to agree with my colleagues that I'm skeptical of the 15-year exemption from TOPA of projects receiving tax abatements downtown. TOPA is a right, not a privilege, and that's true of existing residents as well as future residents. Of course, if you ask a developer what they'd like, if we want them to do something, the exemption would be the answer you get. That doesn't mean you should so willingly follow that request. That said, moving on. Deputy Mayor, is there sufficient funding in this budget to continue delivery of the new communities project at Parkview, including the Bruce Monroe site?
I do believe there is sufficient money in the budget for this. For the Bruce Monroe site, I believe there's $25 million in the budget, and for Parkview, or Park Morton, I believe $24 million in the budget to continue those activities. Cheryl, did I get that correct?
Yeah, that's correct. It is correct for Park Morton on site. We are fully funded. For the Bruce Monroe site, as you recall, it is currently in appeals court for the zoning. And so when it emerges from that, we will have to do a new set of underwriting. And at that time, we will be able to finalize a firmer budget.
Understood. Thank you for that clarification. One thing that I noted in our earlier hearing at the Committee of the Whole, we're seeing a $25 million reduction zeroing out the project in Dmped's budget for the redevelopment of the Howard University Hospital. Howard seemed unaware of this when I reached out to them. Has that been shifted to elsewhere in the budget, or do we have a bigger issue that we need to solve for here?
Yeah, that is has not been moved to another area of the budget. We are working with the budget team right now to clarify that. And I understand that the budget team has reached out to Howard, and the money was intended to be used for infrastructure, horizontal infrastructure related to their new hospital. And so the goal would be to line it up with when they are ready to do that infrastructure work.
So it's not currently in the budget?
No, it's not currently in the budget.
So what happens if Howard says they need it in FY '24?
Well, Howard has provided us their plans and they're not going to do that infrastructure work until 25.
Got it. So we have to find it next year.
Yes, correct.
I was very happy to see, well, actually, let me pause there. So with the current debt cap and where we are, is that going to mean that we have to reduce spending elsewhere for FY '25?
I mean, I can't answer that entirely I'd have to talk to the budget team, but they are aware that when Howard is ready to do the infrastructure, we would start funding it. But it was also allocated over, it wasn't $25 million in 1 year. It was allocated in 2 buckets. And so again, when you start to do this infrastructure work, depending on their draw schedule, it could ramp up over time.
Okay, thank you. I was very happy to see that Dmped is planning to issue an RFP for developing housing co-located with a new Rita Bright Recreation Center in Ward 1. There's still $21 million in the DPR capital budget for the construction of a new Rita Bright Center. Now that's your intent to co-locate housing with that facility. Should those funds be shifted to Dmped or remain in DPR?
Typically, Dmped prefers that they remain with the agency that is going to actually construct the facility. So that would be DPR and DGS. And then we coordinate with them. And that's what we did, for instance, at Reeves. The money was in Octo and DDOT's budget, and then we coordinate with them.
By allowing for housing on this site, do we get any economies of scale that might allow us to shift some of those Rita Bright funds? For example, we have another Ward 1 Rec Center project in Parkview that's in need of an enhancement, and I had proposed balancing the funds out between the 2 projects, but I don't want to jeopardize anything by doing so.
I honestly can't tell you that right now. We would need to do a full underwriting of the project, but what I would say is that due to the 10801 affordability requirements, we usually use up all of the land value and more on our project. So I would not foresee having extra capital for the facility.
Thank you. Has Dmped developed a strategy for land acquisition based on the proposal in the mayor's BSA?
Council member, are you referring to the BSA subtitle for the DC Land Partnership?
I thought it was land acquisition, but maybe that's what it is. Give that a shot.
Sure. So the subtitle, which I think came from DHCD, would give them authority to purchase land from projects applying to them. They would then ground lease that back to the project sponsor. And the intention here is to reduce the development cost to make better use of other resources that are generally utilized for these projects, namely bond cap.
So it would only be for DHCD? Dmped wouldn't have the same authority?
That's correct. I believe we need to follow up with that, but I believe that's the case.
Okay. And it's not funded? Subtitle.
It's not explicitly funded. The authority would give them, it would enable them the authority to do this with different sources of funding. They're currently able to do this with Housing Production Trust Fund resources.
Thank you. I had recent exchanges with both the mayor and Director Cozart at OP on zoning incentives to encourage housing construction downtown and other places we've had difficulty adding housing supply. Specifically, eliminating parking minimums in certain zones or areas would be the equivalent of millions of dollars in subsidy in many cases. Is this something you can commit to working on?
We can work on it. I'd be happy to follow up with the committee on this.
Thank you. Thank you, Mr. Chairman.
Thank you, Councilmember Nadeau. We're going to move next for another round by Councilmember Fruman.
Thank you very much, Chairman McDuffie. I want to go back to the TOPA tax abatement issue. So where we left it was that somebody who has a proposed project would apply to qualify for the tax abatement and for the TOPA exemption. Can you tell me, is it spelled out what sort of criteria will be used to evaluate such an application?
We'll have to promulgate regulations on how that would work. We haven't done that yet.
Have you spoken anywhere to what kinds of criteria you would expect to include in such an application? Would levels of affordability be what things are you thinking about for those eventual regulations?
I do know that conversations are happening internally. I don't know if we've spoken externally about it, but we would have to take those into consideration, those types of things into consideration. But again, we'll promulgate regulations. We'll have a comment period and we can move forward.
So I would just say, I mean, you know what the skepticism that's out there from different quarters on this, so having some sense of clarity of how it was supposed to work would be important for anybody on the council side who's evaluating it. There would be some who would say under no circumstances would they support this, but others who might be curious to know what are your criteria going to be, and if it's
of course we'll know more about what that criteria is going to be once the BSA comes out and lands.
Well, but the BSA is the thing that the council is going to be considering. I'm wondering whether you're going to be able to provide any clarity about what the criteria will be while we're considering the BSA. I'm hoping that you'll be able to provide some more clarity about what the criteria would be.
That is the goal. Yeah, we will be able to do that.
Okay. All right. Well, with that, I'm going to cede back my 4 minutes, 45 seconds. So thank you very much.
Thank you, Councilmember Fruman. Next is Councilmember Bonds.
Thank you. Thank you very much, Mr. Chairman. I just wanted to sort of in the same community of questions, wanted to go back to the plan for viable downtown and the proposal that you all are putting forth. And since you are eliminating first source, I wondered if an employment of DC residents could be a part of the proposal. Not necessarily first source, but I'm thinking about in other ways, perhaps. First source is usually the construction, contracts, as we know. I believe that if we use certain businesses, they already are required to have apprenticeship programs. So perhaps we could look at the apprenticeship programs and see if some of those apprentices might become a part of the arrangements for, whatever is going to be either constructed, the demolition. I know some of the realty community are saying, we will have to demolish these buildings. It's cheaper to do that and put something new there. And I'm sure you're aware of that as well. So I'm wondering if there is an opportunity to still work with DOES to get some of DC residents into the jobs that will take place during the construction period. And more importantly, as we think about the amenities that my colleague, Councilmember Pinto mentioned, if we can set aside or at least try to identify some minority businesses that would go in the so-called retail space in these communities. I think we have to think about the tools we have and how we can use the tools we have, but also do some modification, almost like a waiver kind of system, so that we can get to where we know we have to be. Racial equity is real, as we all know. I mean, this past week, if anything has spoken to it, it certainly has. And so let's be intentional in what we do. We want downtown to revitalize itself, but we want it to revitalize itself so that all of the people of the district have an opportunity to participate, and particularly those that have been left out. When I think about Fort Reno, and I can go on and on and on, which I won't, but you know where I'm coming from.
I do, council member, and I appreciate your thoughts on this, and I will make sure that I move swiftly to consult with our partners at DOES to see if we're going to waive first source, what other levers maybe we may be able to pull there to ensure what you said.
Because we don't want to do it through legislation, but if we have to, we can.
I understand.
Okay.
I understand.
You know how that goes. You know how that goes.
I do.
This is not your first rodeo.
No,
Okay,
but I
all
think
right.
that's sage advice. And so we will consult with our partners at DOES to ensure that if we're not going to do first source, what else? What are we going to do? So we'll do that quickly.
Yes, whatever this 15-year covenant deal that is struck for this important city, for our important neighborhoods, we want to make sure that more than just the bucks have a say.
Got it.
Okay, thank you. Now, I wanted to ask you about the $115 million, 2 years for repairs of public housing. I'm sure that you are aware that there was a process that pursued a few years ago where a group of us, including the deputy mayor for economic development, sat in with me and the CFO, and we determined that it was about 60 million per year that the housing authority, using the resources it had then, could actually deploy, take through the contracting process and, get construction done in a year. And so I'm wondering, has that plan been updated I'm sure you're still a part of that. Has that plan been updated, which would indicate or inform us that perhaps 75 million could be expended in a year? Just curious.
I would need to consult with the Department of DCHA and OBPIM on where we are with that, and I'd be happy to update the committee as soon as I'm able to have that conversation with them.
That would be great. I think we kind of need to know, because the original plan would have taken almost 20 years to do modernizing of our public housing stock. That's not really fair.
Understood.
And again, I want to ask you about your 10-year plan we started talking about that earlier.
Right. So I will consult with the Housing Authority on what their plan is to get those units back online and quickly. And then
you're going to have a 10-year plan for downtown.
10-year plan for downtown, which started with the comeback plan.
Yes.
So we'll follow with you.
That connects all of the pieces. As I was listening to your presentation about the different layers, and I like that, understanding how we actually have various sources of funding that can ultimately articulate what we see as the vision for, this new part of the city, because it will be a new part of the city. So I wanted to check on that.
So we'll be sure to update the committee on both fronts.
Oh, the wellness centers. You're familiar with the wellness center for Ward 3 and 2. You know what a wellness center is?
Senior wellness centers?
Yeah.
Yes.
Yeah. Okay. I wanted to know, how involved have you been in the planning? We're just beginning the planning process. We have money for the planning process. Not yet.
Not yet. I haven't been involved. Not yet. Normally, I would get involved when it's time to construct the wellness center. But I will follow with the team on Ward 2 and 3 wellness centers and update.
Please, we were thinking at UDC would be the location, but we really need to make sure. I'm looking to your office to make sure that it
right.
moves.
I believe Ward 3 has the highest senior population in the city.
Does.
At least it did at one point.
It does.
So I do know how important that is. And so we'll be happy to update the committee on that.
Okay. All right. Thank you, Mr. Chairman.
Thank you, Councilmember Bonds. Let me stay on the line of question about some of the grant programs. So let me ask it this way. One of the things you mentioned, this is Savangale Cook, who I think mentioned this, different buckets of funding for programs that fall under the larger umbrella of Great Streets. I think you mentioned that food access is one of them. So how much total funding is proposed in FY24 for food access? And if you could break it down by operating in capital, it would help the committee understand it.
So Councilmember, we are expecting a total of about $58 million for the food access fund between fiscal year 23 and 24. That 58 million includes, I believe, 34 million in carryover from fiscal year 22. And the way that we'll spend that is, first, we have existing grantees who've already been awarded food access fund grants. They are receiving their payments in 3 tranches based on meeting some development milestones. So we have about 15 million of that planned to support those existing grantees. We have hopefully about that much for additional future food access fund grantees or grocers. And then we have the rest reserved for the Capital Gateway grocer. So that is the high level breakdown of how we anticipate spending the food access funds in fiscal year 23 and 24. There is also $25 million in our capital budget to support horizontal construction at Capital Gateway to support the grocer there.
Okay. And how much is in operating for the programs administration?
About 58 million.
You said for 58 million. Got it. Okay. In terms of FY23 funding, I want to ask about some of the funds that have yet to be dispersed, and it would be helpful to the committee if you could break down the funding by program.
Sure.
And I'd love for your response to include at least, not limited to, but include all your grant incentive type programs like the Vitality Fund, Bridge 3.0, small and medium business growth, special event relief. You got DC Family Fund destinations, large event and festival sponsorships, reimagine downtown, great streets, creative and open space modernization, etc. It's a lot of names of programs in the budget book, and I'd love to know how much is associated with each of these programs.
Okay, let me give you a quick status. So bear with me. I'm gonna just read down the list. It may not be in the order that you just cited,
Okay.
but for the DC Anchor Partnership, their grants have already been executed and deployed. DC Chamber of Commerce is another one that contract has already been executed and funds have been deployed for that as well. DC Family Fund Destinations, ANOFA is planned to go out and we should see that next week.
How much is associated with that?
With the DC Family Fund,
Yeah.
2.5 million.
Got it.
With Greater Washington Black Chamber of Commerce, currently they're just updating their performance timelines and then that grant will be executed. Hispanic Chamber of Commerce, they've already signed their agreement. And so that's just the packet is being prepared for the deputy mayor to sign off on. Inclusive Innovation Equity Impact Fund, we just, they're on their 3rd round right now. So it's in final review. We're preparing to make announcements about those recipients during Small Business Week. It's like the end of this month, and the first week of next month. Large Event Sponsorship Fund, we're finalizing the MOU with Events DC for this one. Capitol Hill Jazz Foundation, they've received their intent to award. So their grant is currently being worked on with the scope of work. Nourish DC.
How much is the last, you mentioned large event festival, how much is that one?
This one is 750.
Got it. And the jazz festival is?
Jazz festival is 30,000.
Got it, all right.
Nourish DC grants, we just made announcements about those during March Madness. 13 businesses were awarded during March Madness. That was 500,000. SMB fund, that was also announced as well during March Madness. 45 recipients were awarded. We'll be preparing to roll out the 2nd round late this month, top of next month. Cherry Blossom Bus Tour, wildly exciting and popular. That has already been deployed and completed. Now we're waiting for the final report after Cherry Blossom is over.
And how much was the Cherry Blossom bus tour?
This one was $195.
Got it.
Spice Suite grant, that grant agreement was already executed and committed and deployed. Generation USA grant, we're in conversations and working on this scope of work as we speak. Commercial Property Acquisition Fund, it is currently in flux right now. 20 applications or more have already been submitted. One just closed last week. 4 more anticipated in the next 45 days. We've expended about $1.5 million to that particular program. What was budgeted was $4 million.
Okay.
Bridge Fund, that closed. We have received about 500 and roughly about a little short of 590 applications. And about 33 of those were ineligible. Notifications are preparing to go out in the next week. COSM, this is the one that the council member also mentioned, which is a tax rebate and incentive program. EverFi and Fiscal Note, those are the two currently right now. This will just make them whole.
And how much is that, those two?
Right now, $991
And how much is Bridge? How much is left?
for
Bridge.
Bridge Fund.
Mhm.
Oh, for Bridge Fund, it is $8 million.
Got it.
Food Access Fund, we currently closed the 4th round, so applications are under review, and we expect to be making announcements about those at the end of the month, end of this month, top of next month. Small Business Week.
Assuming disbursement of those grants, how much is remaining
This
in food access?
58 million remains in total.
After dispersing to the folks who awarded?
They would be drawing from what remains. So probably no more than 7 million or so.
Yeah.
Okay.
And then locally made, that also closed as well. So that's under review. We expect and anticipate to also roll those out during Small Business Week. And Neighborhood Prosperity Fund, the same. Planning on making announcements about those recipients during Small Business Week.
And after disbursement for Neighborhood Prosperity, how much remains?
Neighborhood Prosperity Fund was a $4 million fund. We anticipate expending it all.
Okay.
Same
Is
for locally
all of it
made
going to be
was-
spent in this current round of disbursements?
In this current fiscal year.
So no more rounds for Neighborhood Prosperity in fiscal year 2023?
Correct. We
Got
only
it.
do one round.
Okay.
For locally made, I'll go back. That was 600,000 for that one.
Okay.
And then for Great Streets, it's 3.2 million. That also include the enhancement for Ward 2 as well.
Okay.
Now in response to your question about last year, when we did locally made last year, it was 500,000 was allocated for grantees were awarded for that one last year. For Great Streets, we did 3.3 million for that amount. That also included the enhancement. 54 businesses were awarded. And then for, let's see, which one do we also have? MPF, Neighborhood Prosperity Fund. We had 7 recipients and there was $1 million allocation for that one.
Got it. Thank you for that comprehensive answer.
I'm sorry, I have one last other special event relief
Sure.
fund. That currently right now to date, we've awarded about 21 different programs.
Oh,
We have a few pending. The budget is $1.5 million. We've already expended 1.1 million.
Got it. Thank you for that. I still have tons of questions, so I'm gonna turn to Councilmember Bonds for another round.
Thank you very much, Mr. Chairman. I was not expecting to get another round, but all right. Thank you very, very, thank you very, very much for that. I wanted to ask a little bit about the workforce plan. I know that DOES is in your under your umbrella. It is not.
It's under the Deputy Mayor for Education.
All right, well, then I will just hold on my question. I had all right, lots of good stuff. I think then I have exhausted what I know about Dmped to date. just would like to make sure that I get a copy of the current projects, those that are under consideration included in especially the Fletcher Johnson location, which there's a lot of concern in community. I think you received testimony today that even spoke to people wanting it to move forward, those in community, and trying to understand how that large tract of land, I think 13 acres or
It's
something.
pretty sizable.
Yes, how it will benefit the community in particular.
So the good news is the project is moving forward. Developers has been selected, and we look forward to working with you, the committee, and the community, more importantly, on building something that will be of good use for generations to come at Fletcher Johnson.
And I understand that there will be several types of housing for seniors on the property, but it will not be exclusively senior housing. There will be retail.
Mixed use.
Mixed use,
Yes,
all right,
correct.
as well. So there will be a grocery or several grocery kind of, and a restaurant at least.
Sarosh, you want to speak to
Yeah, I
development?
mean, we'll certainly be identifying fresh food options for the site.
What does fresh food options mean?
I mean, to your point earlier about a smaller format grocer, something like that.
Yes,
So we would,
uh-huh.
we would want to see a food access point. We'd want to see restaurants. There's over 800 units of housing at the site. So certainly amenities, not just for the neighborhood, but also for the people who are going to be moving to the project.
Okay, I just want to make sure that when we say fresh food, opportunities, it comes in many forms. I didn't want an open air market, exclusively, or just a Eastern market kind of setup, but one that's a little more stable, dependable, year round. Certainly, that would be ideal. What about a drugstore? I know for a fact that that is a community that I believe CVS indicated a few years ago that maybe 4 years ago, that 62% of their customers live in the Deanwood area of the District of Columbia. I thought that was phenomenal and wondered why we were not getting a CVS down off of Nanny Helen Bellerose, but here we are close to Benning, so you ought to look at that data. Shopping center, folks.
Yeah, absolutely. We encourage all of our developers to have neighborhood serving retail and food access points.
Okay, I was just wondering about that. Now, are there a few other locations that you're still trying to shore up, like Walter Reed as another area is that still in your inventory, or has that been discharged to the developers exclusively?
So that has been ground leased to the developers, but we are still working closely with them. And actually, we will be soon cutting the ribbon on the new Whole Foods this summer. So we're super excited about that. The community is very excited about that. There's also, I don't have the numbers, but I can follow up with you, a number of inline retail stores that include coffee and shops and sundries. And as the site gets built out, additional retail continues to be attracted to the site.
Okay, and then Hill East. What's going on with Hill East? I know you still have your hands on that.
Yes, absolutely. So Hill East, we completed the first phase, which was 262 units in the first building, the Park Kennedy, and 100 units of PSH at the Ethel, which we just opened a couple of months ago. And I believe it's at least 75% leased up. So that's great news. And there are a number of restaurants that have come to the Park Kennedy, and the retail space at the Ethel is going to be built out. It's about 15,000 square feet. And so we're continuing to try to attract additional retail. For this second phase, we have 2 bundles, and each bundle had 3 parcels in it. and well, one of them had 4, but it was Park. And those 2 bundles will provide over 1,000 units of housing each. And actually on the second phase, as an homage to RFK, we actually did 30, 30, 30. Well, a third, a third, a third. So a third low income, a third middle income, and a third market rate for the housing. So we'll be getting a substantial number of income restricted units at those sites. And I don't have the exact numbers, but we'll be getting substantial retail in the ground floor of those buildings.
And where do I find in the budget any monies that you will be expending on this second phase?
That would be under the Hill East line item.
Okay.
And we can also follow up with that.
Okay, all right, very good. There were a couple of other areas, but the clock says I have nine minutes.
Yeah, it's essentially subtract the 7 that I used plus the 2 minutes I went over, which gave you about 7. So yeah, I mean, if you want to ask one other question, I'll definitely do that. There's nobody here to object, so.
I bought my book with me. I came only, armed with the testimony that you provided. So I got all of this from your testimony. Okay, so just keep that in mind. So if we bring our books with us, it really takes it to another level. But thank you very much. I do have some other kinds of questions as it relates to working with the other agencies. Economic development is where our focus is now. And because our focus is there trying to recover, from the pandemic, trying to get, businesses back into the community. So I just want to make sure that we somehow, how do I put it? Look beyond the usual mode of operation where we're in our silos exclusively. And it just seems to me that, there's a call to rally on this issue of economic growth development. You heard my colleague, Councilmember Pinto, mention public safety. That has to be number one in many circles at the top of all the pages. So what is your thinking? I mean, because I've had conversations with the development community when they have said something about, safety, public safety. How can we be assured we don't want gear and stuff removed from the premises? And more importantly, we want to feel that our employees are safe and comfortable.
I agree that economic development is a large umbrella. And there are many things that go under that umbrella in order for jurisdictions to be successful, and more importantly, to come back. And the comeback plan outlines some of those avenues that we're going to take for the city to come back. But yes, public safety is a concern. And as we move forward with the comeback plan, and as we move forward with revitalizing DC, we'll ensure that we work with our public safety officials to ensure that we're incorporating public safety measures so that folks can feel safe when they come home, when they go to sporting events, when they go to restaurants, or just have a night out on the town. So we'll be ensured to incorporate our sister agencies, our public safety officials, and everyone else that we need to consult with in order to be successful with returning to a vibrant city.
All right. Well, thank you very much. Thank you, Chairman.
You bet. Thank you.
Very generous.
Councilmember Bonds. I want to ask about there's a subtitle 2, H, Title 2, Subtitle H. Creative and Open Spaces Modernization. If you could talk about that and what's proposed for that subtitle. You already touched on this earlier, but I wanted to just make sure that I asked some
Yeah,
questions around.
the CASM subtitle is simply updating the sectors that are identified there to align with the sectors that are identified in DC's comeback plan, just so we have alignment between our strategy and the incentives that are on the books.
Okay, and obviously, there were a lot of questions earlier about that program. I think it was Councilmember Fruman, so. You all expect to get any sort of readout on the investment that you made for the Cherry Blossom Festival bus tour? Ms. Cook mentioned the amount associated with it, but I'm curious as to how you gauge the return on the investment.
Oh,
I can gauge by the traffic that I've encountered downtown trying to
exactly,
navigate
which is a
this
very good indicator
but I love to
of
hear
the
your thoughts
successful
on that.
bus, and I will let Ms. Cook report out on some of that. But it's still going on. The Cherry Blossom Festival ends on 2/16, on the 16th.
Okay.
So some of that data we do not have, but we do have some initial data points from that tour.
Okay. And when I say traffic, I don't just mean vehicular traffic for anybody who's listening. I mean pedestrians as well, because I was downtown and have been downtown a few times over the course of outside of traditional business hours and on the weekend. And it's a noticeable uptick in traffic. And it's also beautiful. So
Yeah, that part too. Want to give
We're in
some
agreement. Yeah, just wanted to give just a few highlights from the tour, from the bus tour specifically.
okay.
And so in terms of media, we had 42 online articles and 500 million unique viewers reading those articles, 135 broadcast mentions. The ad value of that was $249,000 in terms of data. The viewership of those broadcasts were about 3.5 million across all stories and markets. In terms of social media hits, the hashtag Experience DC, 10.3 million reached. Digital ads, we had over 2,500 engagements, 376,000 impressions, 172,000 people reached. When we look at the National Cherry Blossom website, significant uptick from prior years. So in 2022, when we were in Boston, we saw a 20% increase to the Cherry Blossom Festival website, which was where we were directing people. When we were in Boston, when we were in New York, 127% increase from 1,800 to 4,100. In Philadelphia, 71% increase from 700 to 1,200. And in Baltimore, 26% increase from 1,500 to 1,900. And this is just from those websites alone, and just comparing last year, year over year. So this is just a few of the highlights from just the tour itself.
Okay.
I think everybody has also seen just a lot of the activity, like you all have just mentioned, over the last couple of weeks. It's been exciting. I think also we even noticed some articles saying that we've hit some records in terms of what the activity that we've seen since Cherry Blossom has begun, the entire festival. So we're in the last 2 weeks.
Okay.
So looking forward to what happens there. So we'll be getting a full report after the Cherry Blossom Festival is over.
Okay, give me a sense of, so it's over, you gave a date on that, but generally how long after it's over do you get a full report?
We typically wait at least, 3 to 4 weeks for them to compile all the information that's necessary.
Okay. And do they touch on visitors, or do you all talk with Destination DC, Events
They're
DC?
partners.
Okay, all right. And so when you get that, can you circle back immediately with the committee to
Absolutely.
give us a readout on those numbers? Definitely interested in that. I'm just going to note for the record, I think I've had a lot of questions around the housing downtown tax abatements as well as HANTA. I think it might be given how much interest there's been from the public and witnesses who testified, the engagement that this committee had with the public witnesses who testified, as well as my colleagues asking about this, I think it's going to be better if we follow up with you in writing on some of these specific things, because I think we covered a lot of ground between all the folks who asked questions about it and what we had intended to ask, because some of it has already been asked and answered. So we'll follow up with you on those two items.
Not a problem, Mr. Chairman.
Okay. Let's talk about the capital budget. Your proposed fiscal year 2024 capital budget is $183.6 million, which represents a 44% increase from last year's approved budget. And I want to talk a bit about some specific projects. And it might sound a bit redundant, but I think it might be useful for the record for this budget oversight hearing. East Capitol Gateway Grocer Infrastructure. So new this year is this project, and the project description states that $25 million will be expended in FY24 on road infrastructure and horizontal site construction. We talked about it a little bit earlier. I just want to make sure I confirm that that's accurate.
That is accurate.
Okay. And will construction begin in fiscal year 2024?
Yeah.
Okay. All right. Okay. Is it accurate that the site work and the vertical construction of the grocery store isn't proposed to be funded with capital dollars?
The vertical is proposed to be funded with operating dollars because it's going to be operated by a private entity, and so capital cannot be used.
Got it. And what's the status of any particular private entity that's been engaged? I think it's public who y'all are engaging, right? Can you talk about that?
Yeah, that's correct. So we have engaged Giant Grocery Store, and we announced that in June of last year. And we have been basically negotiating with them, and they have been actually undertaking a series of engineering studies. And basically, the site, as you recall, previously was going to have another use on it. And that use was going to clear the site and actually dig out the site. And so when they demolished the existing uses there, they just dumped everything back into the site because the other entity was going to dig it out. And so now that we have a different use, it's increased the cost for us. So that's basically part of the horizontal cost. And then the vertical cost, the grocery store has basically been working with their construction team to finalize the pricing. And then, as I mentioned earlier, we would like to bring the DFA and the LDA to council this fall.
Okay. What's the status of the Fletcher Johnson project? There was a lot of interest by public witnesses, both frankly, this budget year as well as last year. And the community there has been really active and engaged, I think rightly so, because they have been really clamoring for some positive community-oriented economic development in the community generally, but of that site in particular. So where are we with this site? I see $43 million proposed.
That is correct. That is correct. And that $43 million is for demolition and infrastructure work at Fletcher Johnson.
Which fiscal years?
24. And a developer has been selected and that project is moving forward.
Okay. Is there already a development plan for the project?
There is.
Okay. And what's next for that project? Do you all have a timeline?
So the timeline is basically, we are actually working with DGS right now on an MOU that would be executed in the beginning of fiscal year 24 for DGS to demolish the school, and then work with the developer to do some of the horizontal infrastructure, well, we call it infrastructure, but really there's a lot of site work that the site is very hilly. So, and then the site also has some archaeological constraints. And so there is more site cost than might be normal on a site like that. And the expectation is that we would finalize the development plan throughout the summer and complete the LDA and submit that in the fall or spring next year.
Okay, thank you for that. What about Popular Point? Approximately $14 million proposed for the project, which is an increase of approximately 11 million. And I think it's extended the timeline in this budget. So talk about how you arrived at that decision.
Yeah, so basically, as you might recall, because it came up a couple of years ago in one of our hearings, we were working on a feasibility remediation investigation and feasibility study. And that process has wrapped up. And so now we're ready for the next phase of environmental work, and that's going to be the environmental impact study. And that's going to coincide with the Office of Planning working on a master plan, because the site still has to be planned and zoned. And in parallel to that, we are also going to be doing basically test fits and design work for the National Park Service headquarters and the National Park Service helicopter facility, both of which have to be moved, and the Park Service has to accept them prior to the land actually transferring to the district. That's in the federal law. And so that's basically constitutes the majority of the cost. And then Dmped is also hiring a owner's representative to help manage all of those different processes seamlessly.
Okay. Wharf Fish Market Piers. What's the status of that project? And it appears, and correct me if I'm wrong, that that's also been extended a year and provided additional funding. So if you can talk about the decision to extend it, how much funding is in and which fiscal years is funded.
Okay, and just to clarify, the Popular Point hasn't been extended necessarily. It's just a long-term project. So it's just, we will continue to add money to it as the need arises. In the case of the wharf piers, yes, you're correct. We were not able to spend the money in this year. Basically, what we did is we went out and we had a structural engineer do a study of the piers, and they came back and it was, I wouldn't say inconclusive, but it was a little bit more complicated than we had originally anticipated. And so we actually asked them to go back and do a deeper analysis and do a pricing study. And so they are currently doing the pricing study. And when the pricing study comes back, then we will be able to determine, how best to contract for the work.
Okay. And just to be clear, the Wharf Fish Market piers are located at the wharf area. Is there any other plans or funding for work around that sort of southwest waterfront area that is pretty extensive when you think about where all the new development around the wharf, but also goes all the way up to like Buzzards Point, where you've got some projects going on around there too?
Right. So the fish market piers are basically enclosed by the wharf project.
Got it.
And so the majority of the work has already occurred on the wharf. These were set aside because they actually had barges that were attached to them, and the barges, there was a legal issue with the barges, and that was resolved a few years ago, and that allowed us to gain access to the site. In terms of the comprehensive plan for how the wharf feeds into, for instance, M Street and Buzzard Point, I would have to follow up with you, but I can certainly work with the Office of Planning and get an answer.
McMillan, it appears that capital funding is not proposed beyond fiscal year 2024. And so is it accurate for the committee to read that there won't be any need for financial contributions from the district beyond that?
That is correct.
Okay.
It should be delivering in 24.
Okay, all right. Talk about what the status of that project is. If anybody drives past it on Michigan Avenue or North Capitol Street or First Street or Channing, they can see work occurring across the site. And so what phase is that project in at this point?
Correct. So there is work occurring across the site. So basically the site is bifurcated into two pieces. The northern half is about 2/3 of the site and the southern half is about 1/3. And the southern portion of the site is the public portion. And so that's where the community center is. That's where there's going to be hardscape and water parks. That's where there's going to be, they're basically historically preserving some of the cells, and you'll be able to see into the cells and walk around the cells. So sort of a museum type of atmosphere. There's also going to be a 6-acre park. And then there's going to be a path that, a historical walking trail. And then on the northern 2/3 of the site, the private developers, we closed on that in September of last year. And so they're basically doing their horizontal work. And then the first townhomes should start early next year, and then deliver, I believe, by the end of 24.
Okay. And when does the park and the community center and the other amenities deliver?
So the park and the community center will deliver in 24.
In 24? You have a better sense of when that's supposed to happen?
The month, I can follow up with you on the exact date.
All right. What's the status of the Lincoln Heights New Community Project?
So we continue to work with the Housing Authority on that project, and I believe they are working on an RFP for a master developer, but I would have to get an actual answer from them directly.
Okay, all right. Understanding that the development team for St. Elizabeth's parcels 7, 8, and 9 was recently selected, and that construction it's likely not started yet, but what is the projection for when the RISE facility will be decommissioned?
So we are currently negotiating the LDA for parcels 7, 8, and 9. So I don't have an exact date for that decommissioning, but what I will say, and what we have said previously on the record, is that there will be no gap in services for the community. So a new facility will be built and commissioned prior to the decommissioning of the existing facility.
Okay. All right. And thinking about some of the larger projects that are been discussed more recently, just what's going on at Walter Reed?
So a lot of stuff is going on with Walter Reed. As I mentioned earlier, we are going to be opening the Whole Foods this summer. That will align with the delivery of the town center. The townhomes on the northern end of the parcel, those are currently under construction. All of the
Who's on the townhomes?
The townhomes are toll.
Oh, okay.
And then the Howard Ambulatory Care Facility that is underway. And then and I would prefer to, if I could just follow up with a list, because there's like 5 or 6 other projects that have been delivered. The Brook and Vale, there's over 250 units of for sale home ownership product coming online. And then basically the large hospital building and then 2 other commercial pads are going to be the only sites remaining in the next couple of years.
Okay. And what about the Hill East parcels?
So the Hill East parcels, we completed the first phase, and that's the Park Kennedy, 262 units, and then the Ethel, which we just recently opened, 100 units of PSH. So it's apartment style for formerly homeless residents. And then we have the 2 second phase bundles, and those are going to provide over 1,000 units of housing each. And we decided to, in honoring the legacy of Robert F. Kennedy, that we were going to do a third. So it's a third low income, a third middle income, and a third market rate housing. So that's significantly more than 10801, for instance. And those 2 projects were approved by council last December. And so we are basically taking them through their pre-development, pre-closing. And in parallel, we are working with DGS on completing the infrastructure necessary to bring those pads online.
A couple other projects that were awarded under the equity RFP framework. I think Malcolm X is one of them. What's the status of that?
So Malcolm X was approved by council last December as well. And so we are working through basically they have to go through a funding cycle. So either applying for HPTF and LIHTC. And so we're working with them right now on that. And then the other ones that were the equity RFPs were Langston Slater. So we are currently negotiating the LDI Langston Slater. We'd like to bring that to council in the fall. The other RFPs, Eastern Branch Boys and Girls Club, that one, the LDA was approved in December. So again, we're in the pre-closing phase for that. And then Engine 12, we just announced at March Madness that we had awarded that. That was an equity RFP. So we will be negotiating the LDA and probably.
Remind me of the developer that was awarded to?
So that one, the developer was called Rift Valley Partners, and it's led by Barakat Salasi and another gentleman named Stefan Rodiger. And that one, yeah, we would like to negotiate, if not the fall, bring it in the spring. And then I think that.
What's the status of Reeve Center?
So the Reeve Center, as you know, we reissued it in January under a fairly tight time frame, and so we're pretty close to that time frame. We're a couple of weeks off, but basically we are finalizing the decision, and we'd like to make an award by the summer.
Okay. What about Berry Farm?
So Barry Farm, we closed on, pardon me, we broke ground on 1B, which is the first phase, the senior building, last, I think, September. And we will be closing on and breaking ground on 1A, probably in the fall. And then we continue to do the infrastructure work for the remaining phases.
Okay, and I mentioned it earlier. I think Deputy Mayor mentioned it in the statement, but the disparity study, you all released the study on Friday. If you could just lay out where things are, what's planned, timeframe, anything you can share for the public, for the record.
We did release the disparity study last Friday. Right now, we're working on an internal working group to implement certain aspects of the disparity study. We also need to do more research on other aspects to make sure, again, and we talked about it a little bit earlier, whatever we implement moving forward is legally defensible. So I'm happy to go over this disparity study with you at a convenient time. But again, it was released. We're working with some internal agencies on implementing what we can now and ensuring that moving forward, what we do implement will be legally defensible. So that's where we are with the disparity study.
We're certainly going to follow up. Obviously, I think you know my and the committee's interest in the disparity study, having really championed it, funded it, worked with you all to get to this point. And I appreciate that we are to this point. I know there are a lot of small business owners, government contractors who have really significant interest in seeing this move forward. There are some folks who've been around long enough to have followed the work of the prior iteration of the MBE program before the 1992 decision that overruled that program. And so we want to work closely with you all. And if there is a working group, then we'd love for somebody on the committee to be able to participate in the efforts that you all are engaging in along the way. It's a really important effort, and we obviously want to see it to completion at some point soon.
Certainly.
Go ahead. Yeah.
Certainly, I was going to say the disparity study, the good news about it is it also sets the foundation for whatever program we stand up from here on out to be legally defensible. So I think it was a very good idea to conduct the study, and we're looking forward to moving forward on it.
Okay. There's some things we're going to follow up on. I think I mentioned already, Hanta, some people call it HID, Housing and Downtown Tax Abatement. I think maybe one or two of those projects may be following up on as well in terms of status, more specifically. But is there anything else that you'd like to share for the record before we transition to our next agency?
I do not have anything further, Mr. Chairman.
Okay. All right. Thank you all. Appreciate it. So it was great to have the interim deputy mayor Anderson and the team with us in person. Next, we're going to hear from the Alcoholic Beverage and Cannabis Administration, a new name, formerly ABRA, it's now Abca, in case you wanted to be able to add that to your alphabet soup of government acronyms. ABCA's mission is to support the public's health, safety, and welfare through control and regulation of the sale and distribution of alcoholic beverages and medical cannabis. It oversees licensing, training, adjudication, community outreach, and enforcement efforts to help stakeholders understand and adhere to applicable district laws, regulations, and policies. The proposed fiscal year 2024 operating budget for Abca is approximately $13.5 million. It represents a 24.3% increase from its approved fiscal year 2023 operating budget of approximately $10.9 million. Abca's proposed budget is mainly comprised of special purpose revenue funds. The agency has budgeted for 76.3 FTEs, an increase of 11 FTEs from its approved fiscal year 2023 budget. If you're wondering why agencies have 0.3 FTEs, you should stay tuned because its director, Fred Musali, has joined us in person as well. And he also gives phenomenal testimony that I'm sure would interest public residents across the District of Columbia. With that, we have a few public witnesses who had signed up to testify before the committee today. Hopefully they were able to stick it out. It's been a long day, but we had Risa Hero, the President and General Counsel of the District of Columbia Association of Beverage Alcohol Wholesalers, Sharif Crawford. We had Ryan Ha. Those are the three witnesses who signed up previously to testify. I see we do have a couple of them on today. Okay. We're going to start with Sharif Crawford. I think Risa is on the Zoom, but not yet migrated as a panelist. So I see Sharif Crawford here. It's always a pleasure to see you. Thanks for being with us this afternoon. You can begin your testimony. You have 3 minutes.
Greetings, council member. Can you hear me okay?
We can hear you perfectly.
Wonderful. Looks like I missed you all earlier during the economic development, but I'll be back before the committee of the whole. I did get a chance to hear from economic development. You all have had a very long day. So thank you so much for taking a moment to hear our testimony. My name is Sharif Crawford. I am a third-generation Native Washingtonian, born and raised here in the Congress Heights and the Congress Park community. My testimony today is around racial equity and thanking you for your work on racial justice and racial equity and for Reparations DC. I survived the war on drugs from my front porch. I grew up on 13th and Congress Street. And the war on drugs, I watched how it dismantled our families. I watched how it still, the economic impact and the abandonment still impacts our youth today who are struggling to find their way in our society. And with that said, and now that we have deregulated this industry and decriminalized this industry, it presents a great opportunity for the panel, Interim Director Keith Anderson, as well as the entire council and our mayor's office. I know you all are eagerly looking to create opportunities to restore the generations of harm done. District influencers, we are committed to creating safe spaces. And with that, we are building coalitions around those who are participating in the cannabis industry, whereas folks like myself are completely priced out of the industry. We reviewed the new legislation that was passed by Congress, and it states that you must already have been in the industry for 5 years before you can even participate in the current economic growth. That council member does not present racial equity. It does not allow those who have just been able to build capacity to participate in the industry to do so. So we believe there has to be an amendment and or a new protocol which allows individuals and organizations to partner with folks who have not already 5 years been into the industry to participate in the economic growth. We also believe that there should be a cannabis equity fund established, council member, for those who are returning that cannot have access to housing or food, that have marijuana charges to this day. People are still incarcerated simply for marijuana convictions. We are also looking at an opportunity to simplify the application process. There should be an independent portal for individuals who are just building capacity to participate. And my personal story with battling fibromyalgia, we know that cannabis is health equity and economic justice, council member. And Morgan Freeman has put it best, is that cannabis has been the best solution for managing chronic pain, for managing the brain fog, for managing the challenges that we are experiencing with our personal health, as well as making the transition for our economic growth. And so District Influence is looking forward to partner with those in the cannabis industry who want to build with long-term residents, but also looking to expand on how can we really make this amendment racially equitable. I thank you so much, council member, for your time as always, and for the hard work that you do on behalf of district residents.
And thank you for your testimony this afternoon and for sticking around to provide it. We certainly plan to ask the director about cannabis administration in the District of Columbia, and we'll touch on some of the concerns that you raised. Next, we have been joined by Risa, who's President and General Counsel of the District of Columbia Association of Beverage Alcohol Wholesalers. I want to turn to you to hear your testimony next. You have 3 minutes.
Ooh, technological difficulties. Sorry about that. Well, here I go.
So thanks for joining us.
All right. My name's Risa Hirao. I am the President and General Counsel of the District of Columbia Association of Beverage Alcohol Wholesalers. Founded in 1985, DCABAW is the local industry association for district's beer, wine, and spirit distributors. The district's wholesalers are job creators, accounting for hundreds of good local jobs. These jobs undergird key district industries and businesses, including restaurants, bars, hotels, supermarkets, and local shops. With the launch of the mayor's DC Comeback Plan, we enter a new phase of enduring challenge after the COVID-19 public health closure. How people live, dine, and congregate in all wards will continue to be impacted. The downtown workforce remains a fraction of what it was prior to the pandemic. And as this council addresses a pathway toward economic goals of this plan, important priorities of public health and safety tied to alcohol beverage regulation must not be overlooked. Public health and safety are essential functions of alcohol regulation, and DC's wholesalers are proud to do their part. This council and Abca must exercise restraint against piecemeal deregulation that will weaken the regulatory safeguards that protect consumers and the district's population. A comprehensive alcohol regulatory system enables the district to maintain these safeguards and oversee its local markets in the following critical areas: deterrence of illegal markets and counterfeit alcoholic products, illegal shipping and delivering of alcohol, efficient and auditable tax collection, access prevention to minors and intoxicated persons, and independence of each tier of the three-tier system. Similarly, these very same priorities should be considered in future cannabis regulation. We urge the council to provide Abca, which oversees many alcohol license holders, 2,351, in addition to its expanded role as a regulator for medical cannabis, with critical resources to support its essential compliance and enforcement capabilities. For example, due to Abca's enforcement efforts, unlicensed nightclubs were successfully stopped from operating recently. Continued reports of fake alcohol incidents in the US and the recognition of its dangers further demonstrates the importance of a strong and robust regulated distribution system of alcohol. As we continue to operate in a very increasing taxation environment, I'd like to point out that there are certain programs that are in place that make it hard for businesses to successfully perhaps promote the growth of their business and to have a successful economic recovery. Specifically, these are the DDOT parking cash out reporting requirements and perhaps the ballpark gross receipt tax. We urge this council to exercise restraint on taxing businesses, especially during this recovery period. I urge the council and Abca to pursue policies that uphold the shared priorities of economic recovery and, more importantly, public safety. This concludes my testimony, and if you have any questions, I'd be very happy to help you all out. So thank you very much for this opportunity.
Thank you so much for your testimony this afternoon. We're going to turn to our third and final witness for this panel, Ryan Ha, founder of Dreaming DC. Thanks for joining us this afternoon. You can begin your testimony.
Hello, hi. I'm Ryan. I just want to apologize ahead of time. I might not have the right like proper words based on my upbringing. I really don't understand formal speech that well, so I'll just give it to you as best as I can. All right. But thank you, Councilmember Duffy, for having me. So essentially, in 2016, I created a web app, which what it does is it finds the closest motivational speaker to someone and sends them that way to perform a speech. Now, we were written about in the Washington Post because as far as we understood, it was the most legal way to get cannabis as possible, because the motivational speech would occur, and unrelated to us, cannabis was given as a gift. Now, why I'm here to testify is that based on the laws as written, it kind of we think it has unintended consequences, specifically concerning the BBL portion. Basically, the web app I created, we specifically chose humanities, as in a motivational speech, to not create waste and not have a tangible good. What I noticed was a lot of companies, they would sell like a T-shirt for $60 and then give away cannabis, but the T-shirt creates waste, right? And so it makes sense for like a store or something that's selling a T-shirt to have a BBL. But since the app did motivational speakers, it's like an actor wouldn't have like a BBL to operate in DC, and so like that's why I'm raising the concern. Like after reading the law, like everything sounds good and dandy. I support most, if not all of it, but I just don't think it expands to people who were under my understanding doing the legal way of gifting cannabis, and specifically under the grow portion. You have somebody creating a cultivation center, right? We have a cultivation center, but if you're not selling anything in a cultivation center, why would you have a BBL? You just wouldn't do that. And so like the cannabis is grown, it's then given away, and then in turn that's also given away. So no BBL would be created for the grow. So essentially, like I don't understand how any cultivation center would be created under the current laws, because you'd have to create a BBL for something, for a non-business essentially. So who would get a BBL? So what we've done is we've maintained proper paperwork, paid all our taxes, did all of that stuff. But specifically, since we were in the humanities business, we didn't do we don't have a BBL. And I think a lot of people, especially like the entrepreneurs, they're going to be in the same boat, because they want to get involved, but they can't because of the grandfathered BBL thing cost. I think that's my time, but really, I thank you so much for listening to this testimony.
I appreciate you taking the time to actually provide the testimony and share your insights and experience with the committee. I'll be sure to ask the director for his reaction to the concerns that you raised in your testimony. So thank you for adding that to the record.
Yeah, thank you so much.
I don't have questions for any of the witnesses. I think you all raised important things in your testimony, and we'll make sure that we try to cover that ground in our exchange with the director after he provides his testimony and answers our questions. So thank you each for taking the time to provide your testimony orally here this afternoon. And if you have not already done so, we encourage you to provide your testimony in writing, particularly if you feel like there are additional points you'd like to convey for the committee's consideration. Next, we're going to transition to our government witness, Director of Abca, Fred Musali, who's also joined us in person. And if you all would raise your right hands to be sworn in. Do you both swear or affirm under penalty of law that the testimony you're about to provide before the Committee of Business and Economic Development and the Council of the District of Columbia is the truth, the whole truth, and nothing but the truth? Thank you very much. You can be seated. And you can begin your testimony whenever you're ready.
Good afternoon, Chairperson McDuffie, members of staff and the committee. I am Fred Musali, Director of the Alcoholic Beverage and Cannabis Administration. I have with us today Enu Godi, Abca's Agency Fiscal Officer. I am pleased to testify before you today on Mayor Bowser's fiscal year 2024 budget and financial plan entitled A Fair Shot, the district's 28th consecutive balanced budget. As the district continues its comeback as a result of the COVID-19 pandemic, this budget does more to make Washington, D.C. a place where people of all backgrounds and all stages of life are able to live and thrive by making key investments in infrastructure, education, affordable housing, health and human services, economic opportunity, seniors, and public safety. With regard to Abca, the mayor's FY 2024 budget allows our agency to continue to operate as a customer-friendly regulatory agency that businesses and members of the public can easily navigate. Our agency is excited that Mayor's FY 2024 budget puts our agency in an excellent position to successfully implement the Medical Cannabis Amendment Act of 2022, which recently took effect on March 22nd, 2023. I would like to thank the mayor personally for ensuring that our FY 2024 budget provides our agency with the necessary staff and resources to succeed in meeting our goals. Abca's total FY 2024 budget is $13,518,243 with 76 full-time equivalent positions. Abca is primarily a self-sufficient agency with the district's proposed budget to receive $388,000 in local funds to help support the district's medical cannabis program. Abca's remaining FY 2024 budget relies mostly on special purpose revenue funds collected by the agency. The one exception is that Abca's FY 24 budget does include $1,551,000 in dedicated taxes that will be utilized to fund the Metropolitan Police Department Reimbursable Detail Subsidy Program. Today, I would like to discuss first, Abca's funding for the agency's Sale to Minor Compliance Program. Second, Abca's funding request for the Metropolitan Police Detail Subsidy Program. 3, the addition of 11 proposed FTEs to assist the agency in implementing the Medical Cannabis Amendment Act of 2022. And 4, the one provision in the Budget Support Act that relates to our agency. First, the agency's FY 2024 budget sufficiently funds Abca's Sale to Minor Compliance Check Program. Through this program, trained minors assist Abca investigators with checking license establishments to ensure that they are not selling alcoholic beverages to persons under the age of 21. Specifically, Abca's FY 2024 budget contains $68,000 for the agency to contract with a vendor to employ minors to conduct compliance checks for this program. This represents the same funding amount that was approved in FY 23. This funding level is sufficient to allow Abca to conduct underage drinking compliance checks throughout FY 2024. Second, I would like to discuss the agency's FY 2024 budget for the MPD reimbursable detail subsidy program. Abca's FY 2024 budget would fund the subsidy program in the amount of $1,551,000. This represents $172,000 increase from funding levels for fiscal year 2023. This funding level is sufficient to operate the subsidy program in FY 2024. The eligible hours for reimbursement under the subsidy program for on-premise retailers are between 11:30 p.m. and 5 a.m. 7 nights a week. Abca is currently reimbursing MPD for 65% of the total costs incurred by licensees for off-duty MTD officers to work reimbursable details outside of licensed establishments. Third, Abca is pleased to note that the mayor's FY 2024 budget would provide 11 additional FTEs to the medical cannabis program. These added positions are critical to the agency implementing and carrying out the Medical Cannabis Amendment Act of 2022. The 11 proposed new positions include 3 licensing positions, 3 enforcement positions, a FOIA officer, a public affairs specialist, an HR advisor, an IT specialist, and a social equity officer. Finally, Abca has one provision in the Budget Support Act that would pay the Alcoholic Beverage and Cannabis Board members a stipend of $250 per week and the chairperson a stipend of $350 per week for their service to the board, in addition to the pay they receive for time spent in public meetings. The board was tasked in October of 2020 with the added responsibility of overseeing the medical cannabis program without any additional compensation. The weekly stipend would compensate board members for the numerous hours they spend preparing for their weekly public meetings. The proposed stipend is critical to retaining and attracting new qualified board members to the 7-member board. In closing, the resources allocated to Abca will play a critical role in the district's comeback and will support residents and businesses' efforts to reach and remain on the pathway to the middle class by providing a safe and well-regulated environment. The council and this committee are critical in this effort. I appreciate your work to ensure we operate efficiently and effectively. I look forward to our continued work together to achieve our shared goals and give all residents a fair shot to benefit from Washington, D.C.'s continued prosperity. Thank you for the opportunity to testify today. I look forward to answering the committee's questions at this time. Thank you, Chairperson.
Thank you, Director Musali, for your testimony. I do have some questions for you. And as is been the practice of the committee, I'd like to start it off to give you an opportunity to talk about some of the work of the agency around racial equity, specifically any things that you all are currently engaged in or any plans for fiscal year 2024 that would help to reduce racial inequities through overall spending and regulation of the sale and distribution of alcoholic beverages and or medical cannabis.
Thank you, Chairperson, for that question. As I think you heard, from the public witnesses, we're really, as we talk about the district's comeback and racial equity, we're really excited to implement the Medical Cannabis Amendment Act of 2022. As you know, 50% of all licenses that are issued, other than for testing labs, have to be issued to social equity applicants. We put forward on our website, we're beginning to issue cultivation center, courier, and manufacturer licenses for social equity applicants starting May 1, and that'll end June 30th. We also, with regard to the unlicensed establishments, sometimes referred to as I-71 establishments, the open application period for retailer, internet retailer, and cultivation center licenses will open up November 1st at the beginning of FY24. So these 11 positions are critical as it relates to processing applications from unlicensed establishments. Our budget includes a social equity applicant, a social equity coordinator, because it's imperative that we have someone on staff to work with social equity applicants to navigate the process. As you know, there's a social equity fund, which we've been working with an MOU and working collaboratively with DSLBD on. We're excited, which I'll talk about in a little bit, the way the program's going to have money in that fund later this year. Obviously more money in 24. So it's going to be critical that money be out for, loans, grants, equity to social equity applicants. So we're really excited. This is a great opportunity in terms of the interest for to bring racial equity to the cannabis. And I'll just stop there.
Okay, yeah, let me, we had a few witnesses testify and you were here when they testified and heard that testimony. I want to get your response to concerns raised, especially by Sharice Crawford and Ryan Ha. I don't want to be presumptuous. I'm not certain how they identify, but they both, at least in terms of the appearance on the Zoom, appear to be minorities. Are you familiar with the testimony and the concerns raised? And can you give a response to first Sharice Crawford's concerns that she raised? She mentioned the Social Equity Fund. Perhaps she's not aware that there is a fund that's established by the law, but she also raised concerns about a 5-year requirement for, I think, business having to be in existence or have a certain level of experience. How do you respond to the concerns she raised?
Yeah, I think that's why, outreach is important, kind of talk about what's on our website, what's out there so people know. So as I stated, I'm not aware of a 5-year requirement. I don't know about prior draft, but currently there's no 5-year requirement. So if you're a social equity applicant, basically the qualifications, are that you're a resident, but not for 5 years. You are a returning citizen, or you're the child, or, you have a parent, other criteria. And then there's obviously a financial threshold in terms of to qualify. So that's, what we have. I'm not too familiar with the 5-year, but, we are having at the end of April, which is on our website, several information sessions, including for social equity applicants, to go over the criteria. Many of those webinars will be recorded on our website. So that way we can get questions from social equity applicants, which I think is going to be helpful. And as you stated, the Social Equity Fund, which you helped create, and thank you for that, that's fairly new. So obviously, as money comes into that fund, we'll make sure to coordinate with DSLBD in terms of the availability of funds.
And are you familiar with the concern raised by Ryan Ha, which in summary sounds like he's been operating perhaps as an I-71 and others have been operating. Let's just use others and speak broadly. There are people operating I-71 businesses, perhaps with a certificate of occupancy, but without a basic business license, which is required under law. How do you respond to the concern that his testimony raised?
Sure. So as you stated, the law requires, if you were operating, in order to be able to apply, you had to have a basic business license. I think it's by the end of December, and a C of O. So obviously that may require a change to the law. The other thing, council member, just want to make you aware, which is really important, is the timeline on our website. It has opportunities, not just when the I-71 can apply, for other social equity applicants to apply. So the timeline we have on our website actually has the open application periods for both 23 and 24. So if you're a social equity applicant and you didn't have a BBL or a C of O, you're still able to apply as a social equity applicant later on under the timeline. Give me 1 second here. So yeah, if you look in 24, just by way of example, and that's, I know this is a little ways out, but Friday, March 1 is the application period for social equity applicants for retailers and internet retailers. Under the timeline, the unlicensed operators would be able to start to apply on November 1 for retailers, internet retailers, and cultivation centers. So there are other opportunities in open application periods if they don't apply. Otherwise, we're always open to have a dialogue, with the council in terms of what the law is. But the point I'm making is there's other open application periods where social equity applicants would be able to apply.
Thank you for that. As you mentioned, The proposed FY24 budget for the agency is $13.5 million approximately, which is a 24.3% increase from the approved FY23 budget. There's also an increase in 11 FTEs, which you mentioned in your testimony as well. You, I think, gave us in your testimony some of the positions, but I'd love for you to be able to run down what these 11 FTEs are, what they are going to be able to do. If you could just an overview of the responsibilities of each of the 11 FTEs.
I'd be happy to, Chairperson. So to start, 3 of the positions are in licensing. So based upon the interest in what we know in the timeframe of the bill, there's going to be a significant increase in license applications. So, we've done the legwork of getting information out on the website about the timeline. Testing lab applications already up, among others. But at the end of the day, when applications get filed, they need to be processed. We need to continue to be a customer-friendly agency. I think I mentioned the unlicensed establishments can file starting on November 1, which is the beginning of 24. So it's critical that we have additional licensing positions. Second, we have 3 investigator positions to help regulate the licensed businesses. So currently we only have 1 investigator. In medical cannabis. So obviously, if we're going to significantly expand the number of licensed establishments, whether that's cultivation centers, manufacturers, couriers, testing labs, retailers, internet retailers, we need to add at least some additional investigators. So that's 3 positions there. I think I mentioned 7th position, social equity officer. It's critical that we help social equity applicants through the process. I think that was exemplified in some of the testimony we heard, right? We were going to have to work with applicants, help them through the process, navigate the process. We want to do what we can there. So that's that. 8th position is a FOIA officer. Our current staffing, we don't have the ability to handle the number of increase in FOIA requests we're going to get as relates to these license applications, right? So the more you have from a license application, you're going to get more FOIAs. Keep in mind, as I'm sure you know, all the applications except for couriers and testing labs are subject to a 45-day public comment period. So, we may get records inquiries as it relates to, the public comment period. The 9th position is a public affairs specialist to help with information campaigns, education campaigns. You may remember Councilmember Allen, he was really big on labeling and packaging and getting new requirements out there. So obviously, we want to make sure we get the word out on that. The 10th position is an HR advisor. We only have 1 HR advisor currently. We're going to be adding 11 staff. I think we talked about workforce development, keeping good staff. You need a good HR team to do that. And then finally, the 11th position is an IT specialist. So we have to help the agency build out its infrastructure, make it easier for businesses and the public to interact with our agency online. As we, may talk about here today, but it's critical that we get as many services online, whether that's registering, managers, employees online as required by the bill, tracking data, applications filed online. And obviously, I'm just getting started with medical cannabis patients. The non-resident patients has been a huge success, which I'll just say now. In March, we had the highest sales in the history of the program in March. And I wanted to bring that up because it may tie to your cherry blossom data, because clearly people came from cherry blossoms and there may be a tie, but we have non-residents that over 18 countries, over 49 states that can register. And that resulted in the highest medical cannabis sales in the history of the program. And keep in mind, we haven't had any retailers. We still have the same 7 retailers. So that, that definitely didn't hurt.
Okay. In your agency's non-personal services budget, I'm seeing a reduction in telecommunications and increases in other services and charges, contractual services and equipment. Take a minute to explain the proposed changes in those areas for FY '24.
Briefly, and then I'll turn things over to our fiscal officer. So in telecommunications, we have a cut. About 4,000 of that cut was due to cost savings. The other 59,000 was at the request of Octo to move things over to CSG 40. And did you want to talk about that?
Yes, that's correct.
If you could just state your name for the record.
Yes, good afternoon, Mr. Chairman. My name is Neil Gode. Yes, good afternoon, Mr. Chairman. My name is Neil Gode. I'm the agency physical officer. The actual decrease is really 4,000, which was as a cost-cutting measure. But because of the new process for interagency, the budget was set up based on the seller agency's requirements, the way they plan to spend the money. So they just moved most of the money from the telecom line to other services and charges, and also to contractual services. So it is really no decrease, it's just shifting between the.
So no changes, really, just shifting up some of the funds to other areas.
Yes.
Within Abca's agency management division, talk about the proposed budget fluctuations within the training, legal, and performance management activities.
Sure. Yes, Chairperson. So in training, there's an increase for an MOU with DCHR. In legal, there is 47,000 increase for PS adjustments. And then there's $100,000 increase for the board stipends we talked about. That
When you say PS adjustments, what do you mean by that for legal?
Like COLAs, those type of, things. What was the other one you asked about, Chairperson?
Performance management?
Performance management is personal service increase for COLAs and step increases.
Thank you. Within the investigations program, there's a proposed increase of $224,000, but no increase in FTEs. So what does that increase in that area represent?
Chairperson, that is 52,000 is for COLA and step increases, and then 172,000 of that is the reimbursable detail budget increase that was mentioned.
Okay. Turning your attention to vacancies and contracts. According to the Schedule A that you all provided prior to the hearing, Abca listed 59 field positions, 17 vacancies, as we talked about 11, which are new FTEs, for a total of 76 FTEs plus the 0.3 FTE from the OCFO. I'm sure people are clamoring at home, wondering what the 0.3 represents in your FTE count. But also, if you could, in addition to that, let us know if anything has changed since the Schedule A was submitted.
Sure. Yeah, the 0.3, which is really interesting, I agree with you, Chairperson, is our agency fiscal officer position, because it's a shared position with more than just our agency. Through an MOU with the OCFO, we contract for agency fiscal services. And so that 0.3 equates to having an agency fiscal officer through the OCFO. So that's where that comes. As of today, as the end of the day, we'll have 7 vacancies. So we have 7 vacancies. And I'm gonna plug, since you brought that up, we do have a legal administrative specialist job that's currently posted that closes on the 13th. So I just want to put that out there in case anybody's interested in applying.
Okay.
That job is currently out there. That closes on the 13th.
So in terms of the vacancies, the existing vacancies, are those, do y'all have plans to make hires for the 6 vacancies? Talk about how many, so how much do y'all have in vacancy savings currently?
Great question. So if I could take a step back. So as a result of the COLA approved for FY23, which is 2.5%, because that's not in the budget, we have a PS net deficit of 199,016.01. Through March 23, our vacancy savings were 134,107.72. As a result of those savings, our current PS deficit is $64,908.29. So we intend to make up that PS deficit over the remainder of 23. But that vacancy savings of 134,107.72 allowed us to pay off the 199,016.01. As relates to the positions, 2 of the positions, one of the positions I mentioned becomes vacant after today. So I just included it because it's today, it's going to be vacant. So we're going to be reposting that. We have a supervisor investigator position that became vacant at the end of the month. So we're posting that. Our compliance monitor position actually just closed. So once we get the cert there, we'll look at, doing interviews, but that just closed. And then we have a contact rep job we'll be posting shortly. And then 2 auditor jobs, which we hope to get posted soon. And that's it.
Okay. And the contracts attachment that is included in your pre-hearing responses to the committee's questions from the common budget questions submission, the new Octo IT service and network support contract increased from $15,812 in FY23 to $42,420 in FY24. What's the purpose of this contract and why the increase in FY24?
Yes, Mr. Chairman. So this is what we talked about it earlier. So again, based on how Octo is going to spend the money, they moved it from the telecom line to contractual services part of it, and that's why it increased. So it is related to services provided by Octo.
Okay. They moved it from one line to another. Let me just be, so is it represented somewhere in the FY23 approved budget, an amount equivalent to the $42,000 that's reflected in the proposed FY24 budget?
Yes.
When you combine some areas somewhere in your 23 budget, you get the same or similar amount that you're requesting in 24?
That's correct. So to give you an idea, so FY23, the MOUs with Octo, there was 82,679 under the telecommunications line. Then there was 19,455 under the other services line. And then there was 15,812 under contracts line. So the contracts line increased from 15,800 to 42,420 in FY24.
Got it. Thanks. We may have some follow-up there. Just I appreciate the clarification today, though. There's also a new $200,000 line item for licensing for new computer system for cannabis in 2024 proposed budget. In previous years, Abca included a line item for, I'm quoting here, new computer system for cannabis, close quote. So how does the fiscal year 2024's entry differ from those in 2023? And has the past money already been spent on this activity?
Thank you, Chairperson. So for 24, that's for actual licensing, I guess, if you want to call it software licenses, actual licenses for use by staff. So that's what that is. The other amount is to actually build and make improvements to the system, but the 200,000 is your annual cost, actually for, for actual licenses.
Okay, got it. So is it a contract you already have procured?
It's for a contract we procured in 23.
Okay. And are there any CBs included in that contract or no?
Not for the 200,000, but we've been looking at CVEs for the larger amount.
Okay. What's your CBE spend goal for this current fiscal year, and what's the spend to date?
The CVE goal for 23 is 174,011.43. We do not have yet a report back from DSLBD for 23 yet. We've asked, but we will easily exceed it. If you look at every year, we exceed our SBE goal. In 22, we spent 361.49.97. So we expect it to significantly exceed it.
Okay. And your special purpose revenue funds for the agency grew by what appears to be $2.46 million in FY24's proposed budget. Is that accurate? And if so, what's driving that growth?
So if you look at the growth, it's primarily on the medical cannabis side. So when you look at, we've only, in terms of where the revenues have come, we've only had, 7 retailers, around, I think between 9 and 11 cultivation centers. So obviously the medical cannabis bill reduces the caps. Obviously we're still having open application periods and monitoring growth, but you're creating a manufacturing license. You're obviously allowing for more retailers. An internet retailer category has been created. A courier license has been created. And then as you add more businesses, obviously, greater number of managers. And then obviously, as I talked about, the non-resident registration has been extremely successful. And that's continued to grow and to help promote a successful program.
Are there any fund balances from the special purpose funds or intended dedicated taxes being transferred to the unassigned fund balance of the general fund? If so, which ones and how much?
So at the end of FY22, there were fund balances, but those balances are now certified to support the FY23 and FY24 proposed budget. But the amount is at the end of FY22 where in the dedicated taxes, 590,000.
590,000?
778.
I'm sorry, if you said that number again from dedicated taxes, how much was it in 22?
590,000. 778.
778?
Yes. Okay. For the ABC fund, it was 3,234,024.
$3,234,024.
Yes.
And those amounts were certified from fiscal year 2022 and going to support fiscal year 2023 and 2024.
That's correct.
How much of the 590,000 from the dedicated taxes, if you could just break down where they're going in 23 and 24?
So the 590 would go to 209,000 would go to 2023. And
2023?
Yes.
290,000?
209,000.
209,000.
Yep. And then 381,000 goes to FY24.
381,000 goes to FY24.
Yeah. ABC fund 1.99 would go to FY23 and 1.26 million goes to FY24.
1.26 million goes to FY24.
Yes.
And will that, I mean, redirecting those funds, will it have any impact on your operations?
No, we're able to operate. Well, I think just to be clear, for 23, there's a proposed sweep in the BSA of 366,728. So as we look at 23, the budget was 1,379,000 for 23, the year we're in. The BSA proposes to take 366,728, which would leave us about 1,112,000 left, which is what we would need to operate the program in 23. If you look at what we spent in the first quarter, which is about 225,000, we usually spend a little bit more in the summer. We're gonna, pretty much spend that full 1,112,000 in 23 after the 366,728 is taken. If that helps. And then in 24, that's where the higher amount is budgeted.
Yeah. And just, you may have already touched on this, but just explain why the higher amount is necessary in 24.
So obviously with COVID, the program wasn't in use for a variety of reasons. So we had a little extra money because obviously there was a period of time people weren't open late, closing late, not being open, just kind of getting, coming back. So the programs continue to expand. We've seen people, starting to use the program. We've talked about public safety here today. And so I think to help promote public safety, we've seen, an increase in the use of the program. So we expect that to continue to rise.
Yeah, speaking of public safety, the proposed budget and dedicated taxes for the reimbursable detail officers subsidy program in FY24 is approximately $1.55 million, which is a approximate $172,000 increase. What are the additional funds being used for?
The program there for the Metropolitan Police Department program.
Is it just is it growth in cost, or is it expansion of services?
It's growth in cost.
Okay. How many licensed establishments do you estimate will utilize the reimbursable detail subsidy program?
We can get that number for you, Chairperson. I don't have that with me today, but we've provided it in the past, and that's something we can easily get for you.
And it looks like, just to the staff, we've been joined by Councilmember Matt Frum, so if you can run the clock for me for a round. Okay. Have you seen an interest in an uptick in the interest over the last 12 or 18 months since we were sort of coming out of the pandemic in that particular program?
Absolutely. It's definitely increased. If you look at what spending, I don't know if you remember, but spending was significantly down, in 2021, which we used unspent funds to help with the budget gap in previous years. So if you look at where we were the first quarter of 22, where we spent 225,000, which would, pretty much almost put us on track for $1 million, spending's clearly up.
Okay. And the executive is proposing a $366,000 sweep from the audio subsidy program. Does that impact the target that you have for FY 2024?
Well, the 366 is for 23. No sweep was proposed for 24.
Okay, so there's an increase in 24, but there's a sweep in 23. Can you reconcile the two for me?
Sure. In 23, the sweep, I think they're looking at our current spending, assuming we're going to spend about $1 million in 23, right? So if you take the 366, that leaves you with about 1,112,000. So that's going to, pretty much put us where we think how much we're going to spend in 23.
Okay, and
I think in 24, I think you look at it and you figure the program is going to continue to grow. More people are going to get involved. We obviously, as salaries increase, I think the other thing to keep in mind is the current rate is $71.52 an hour. So as MPD officers get paid more, that obviously, the hourly rate goes up, which happens over time. That's more money that's drawn. from the program based upon an increase in the hourly rate.
Okay. The Medical Cannabis Administration Fund is comprised of all funds received from medical cannabis licensing, permitting, and registration fees. What's the current balance of the fund and how much was deposited into the fund for fiscal year 2022 and fiscal year 2023 to date? The final piece of this question is how much do you anticipate being deposited in the fund for fiscal year 2024?
So for the Medical Cannabis Administration Fund, the fund balance at the end of FY22 was again 220,000.
If you could just, I know you referencing your notes, but I lose your voice on the mic when you are looking down.
All right. The FY22 ending fund balance was 220,000.
220,000?
457.
Okay, 457. Got it. 2023 to date?
So 2023 to date, the fund balances are normally calculated at the end of each fiscal year.
Okay.
Because when the year closes, we will know the actual revenues and then the actual expenditures, and we have the beginning fund balance from FY22.
Okay.
But the revenue so far is 400,000, 230.
400,000
and 230.
And then how much do you anticipate being in the fund? I know you don't calculate it to the end of the fiscal year, but if you're looking at the rate that it's coming in, can you give us a projection for 2024?
Yes. So our estimated fund balance for FY23 is really zero, based on both the fund balance and the expected revenue is anticipated to be spent. For FY24, because of, again, the new legislation, we anticipate the revenue to be 3.2 million.
3.2 million?
Yeah.
Just Canna Business Grant Program, DSLBD. Can you give us any insights to any recent developments that Abca may have had with the Department of Small Local Business Development with respect to that program?
We just met with DSLB in the last couple of weeks, obviously talking about the MOU, also talking about that program. So there is money. We haven't gotten the exact amount, but there is money I did see in DSLBD's budget for that program for 24. We've been trying to work with them now that we have all these new businesses hopefully applying to make those funds available. So hopefully they'll have we've been working on with them. I don't want to get ahead of their announcements, but there's some exciting things they've been working on that we're excited about.
Okay. You touched on this in your testimony, but I want you to spend a little bit more time briefly to talk about the BSA subtitle in the mayor's proposed budget for alcoholic beverage and cannabis board member compensation. What's the need for these stipends and the estimated costs associated with it? The other part to this is what's the revenue source that would be used for the compensation?
Thank you, Chairperson. I appreciate this question because obviously this is about retaining board members and attracting new members. I think what's important to note is for calendar year 2022, if you look at all the board members, what the highest board member made and the lowest, not getting any names, the board made between $14,000 and $16,000. Okay, so for calendar year 2022, they made between $14,000 and $16,000. So, they were meeting once a week doing alcohol. Now you've got this responsibility of medical cannabis. You're working a huge amount of hours, particularly for the chair, doing all sorts of work, policy work, reviewing rulemakings. And so we're asking them to work, a lot. For $14,000 to $16,000 is hard for a lot of people to do. So when you look at the stipend, it's, for board members, it potentially gets you to making, low 30, in the low 30s. It starts to be, a lot more feasible in terms of, retaining people on the board. And obviously we want to keep good people and attract good people. So I think it's critical. And I think, we've talked about, the importance of board members. You have to have cannabis experience and alcohol experience, potentially, or ability to have skills that translate to that.
Sure.
So
I'm going to turn to Matt Fruman, Ward 3 Council Member, for a round. Thanks for joining us again for this particular agency. Councilmember Fruman, floor is yours.
Thank you very much, Chairman McDuffie. Great to see you, Director Musali, in this new role for me and in this context. Director Musali lives around the corner from me, so I see him all the time, but not like this. Director Musali, you might be aware, I don't know if you will have seen it, that a number of children at Key Elementary School got their hands on gummies and had a terrible experience, and the way in which the cannabis gummies were packaged, it looked like candy, and I think they thought it was candy, and a number of them ended up in the hospital, and I'm told that tests were done on the gummies and traces of fentanyl were found in the gummies. So, really a distressing situation. I'm sure you're familiar with the Medical Cannabis Amendment and Comprehensive Cannabis Legalization and Regulation Act that I co-sponsored, and both try to make sure that these kinds of products are only sold through licensed establishments, and that they're packaged in a way that wouldn't appeal to children and that wouldn't be accessible to very small children. In this case, the products that were used came from an unlicensed establishment and was packaged in such a way that it was maximally attractive to children. And I know this is a really tricky area for you because you can regulate in some places and not regulate in others. But I'm curious what kinds of things you might suggest for a person in my position that we could do in order to avoid a situation like this.
sure. Thank you. It's good to see you, Council Member. You touch upon a lot of issues, and this is a issue that's dear to us. We had, in addition to the incident, you mentioned, you may have seen a situation where a 14-year-old was able to buy at an unlicensed establishment. He was in high school here in DC, gave it to some friends, ended up in Children's Hospital, right? So, worked with the Department of Health, FEMS, went out. They were able to, address that at that store. So I think if you look at also the Medical Cannabis Amendment Act that just passed, that I think I mentioned, it also references labeling requirements that Councilmember Allen pushed, in addition to the ones you mentioned, which will be, responsible and tasked for getting the word out and having the ability to issue cease and desist. But I think what you really hit upon is the importance of having a legal market, doing what we can to bring businesses to the legal market, making sure that medical cannabis products are being tested, making sure that individuals are buying from the legal market, getting word out, education, information campaigns, both to parents and kids, in terms of the dangers of these products that can be untested if they don't come from a licensed market. And so absolutely would like to look forward and working with you to the extent, I'm aware of the incident you mentioned, to the extent there's any word of where those gummies were bought, we'd be very interested in that, as we found out in this other location where DC Health and FEMS were able to take action.
And if you find out where, that's what I'm wondering is, in terms of enforcement, where do I go for enforcement? If it's an unlicensed establishment, they're not regulated by you, but do you have the power to step in that context, or do I need to go to the police? Or I'll broaden it even more because, as you know, in Tenleytown, there are now, I'm just using that as an example, there are now a number of places that may be selling these kinds of products or flavored cigarettes very close to schools. And they shouldn't be doing that, but they're in this gray world. And I need to figure out, we need to figure out, how do we deal with these situations where we have the intention for a system of regulation, but it's porous in a way?
Sure. Well, I think as we look, we're trying to strike a proper balance, right? So under the Medical Cannabis Amendment Act of 2022, there's a period where unlicensed establishments have to come in through the legal market, right? So we're trying to set up a legal market. We want to encourage unlicensed businesses to come in. As part of that process, there's a 45-day public comment period with notice to the ANCs. So the ANCs are going to have an opportunity to weigh in. We have to balance that, though. We obviously don't want establishments selling medical cannabis products to 14-year-olds and under. So in those type of situations, we have a couple options. In addition, we have DC Health, because oftentimes there's DC Health violations. In the one case I mentioned, there were FEMS violations. So I think those are two agencies that we've worked collaboratively with. Our agency under the bill also has the ability to issue cease and desist as it relates to labeling and packaging issues, because some of the labels and packages you mentioned are things that we would never approve, right? There's types of products here in terms of labeling that we would not approve. So we're happy to work with your office. This is an issue that we care about, because we want to bring businesses in to the legal market and do things the right way and make sure that we're protecting our kids, and that, you know, that establishments aren't selling, you know, medical cannabis or just cannabis products to 14-year-old kids.
I really appreciate
or
that.
younger.
Yeah, and in this case, in the case of Key Elementary, the kids were significantly younger. That's very helpful. And the idea that you have cease and desist authority over these kinds of packaging issues, regardless of where they're sold, that's very helpful to know. You have a challenge, because we're trying to make a legal market, and we have Congress out there, and we have this gray market, and trying to figure out the path from here to there is tricky. But as we're going down that path, we got to make sure we're protecting our kids. So we will be reaching out and working with you going forward on this. And thank you very much for your work, Director Masali.
Happy to work with you, council member. Good to see you.
Good to see you too.
Thank you for those important questions, Councilmember Fruman. Definitely an important issue. We want to continue to work with you all on. Picking up where we left off about the board positions, in your testimony, you mentioned that the board was tasked in October 2020 with the added responsibility of overseeing the medical cannabis program without any additional compensation. The proposed stipend is critical, retaining and attracting new qualified board members to the 7-member board. We're soon going to have several open positions on the ABC board. And I believe you previously stated that the agency is working on omnibus alcohol legislation that will amend Title 25 of the code. Is this the same section of the code that includes the requirements for the ABC board?
That is correct, Chairperson McDuffie.
Okay. And if you could give us a preview, anything you can share about the omnibus bill, also when you expect the council to receive it. And as part of that omnibus legislation, do you all anticipate updating the board member qualifications of the ABC board to include knowledge and expertise in the cannabis regulation administration?
That is something I'll be discussing with the board chairperson. The omnibus bill is going to be extensive. So I'd say hopefully we can get something through the process the next, 30, 45 days or so. Obviously, we want to get something to you by May. Our legal staff has been working on the bill. And so we've identified the issues we want to include in the bill and be talking to the board about that. Been working very hard on the bill. So been working to get this medical cannabis up and running, and that's been going great. And at the same time, our legal staff has been preparing the omnibus alcohol bill. So I'm very appreciative of that. But there's a lot of issues in there. Obviously, the streetery program I think we talked about is currently at the end of December. So, that's an issue there. We talked about, downtown. So there could be some things in there on that.
Yeah, which
so
I think is important. It's been
yeah.
one of the themes that resulted from this hearing. A lot of talk about downtown, obviously the importance, and I raised this previously about areas throughout the district outside of downtown because they similarly need supports, small businesses need supports, but thinking about sort of the downtown area and alcohol measures, how many licenses? I don't know if you know this off the top of your head, but I'm curious as to how many licenses there are for alcohol in the District of Columbia, and how many of them are like dormant? Are they all being used? When I think about small business activity, and your agency's issuance of licenses, we obviously, I think, want those licenses to be active. We want them to have businesses associated with them. We want people to be hired and work there. We want to see the tax revenue that flows from the issuance of those licenses. Do you have a sense of how many are issued and how many are dormant?
Well, what I would say is, to your point, Ward 2 far and away has the most alcohol licenses in the city by any ward. It's not even close. And a lot of that is downtown. So you obviously have hundreds and hundreds of licenses in downtown, whether it's Gallery Place or other parts of downtown. So we do have a monthly, when a license isn't in use, we call it a safekeeping list. So we keep a list, and the board over the years has done a great job of keeping that list very limited. So either licenses are in operation or they're generally canceled. There's not too many in safekeeping. And then if a licensee is in safekeeping, for more than 2 years, we bring them in for a hearing, and the board, basically goes over their plan to put the license back in use and how they're gonna use it. So that's something we've kind of worked with on that.
I mean, just we can follow up with you all, but to make sure that there's nothing that's creating barriers to people who have those licenses actually utilizing the licenses and helping to contribute to the economic vitality and growth in the District of Columbia as we think about all the different ways that we want to stimulate economic activity. I want to make sure that your agency is being mindful of that the board is considering some of those licenses and what, if any, hurdles may exist that impair the economic activity that I know myself and my other colleagues, particularly Councilmember, I don't want to speak for Councilmember Brooke Pinto, but she has a big committee that she's chairing, but she's definitely showed up here today to make sure that her voice was on the record in supporting some of the efforts at Dmped, and I'm sure if she were here, would want to also similarly make sure that your agency is doing everything it can to support the small businesses throughout the District of Columbia as it relates to the licenses that you all issue. So just wanted to mention that for the record.
Absolutely happy to work with you on that, Chairperson.
Okay. All right. I don't have any additional questions. Is there anything that you'd like to add to the record before we adjourn?
Yes, Chairperson. Did want to make sure, just since you gave me the opportunity, that starting on Saturday, April 15th, is the annual medical cannabis holiday sales tax, where the 6% sales tax is waived from April 15th to April 24th. So I did want to get that on the record. And then, like I stated, on May 1st, Manufacturer Center, Cultivation Center, and Courier applications for social equity applicants is from May 1 to June 30th. So obviously, we're having information sessions on the end of April, doing whatever we can, holding meetings, making sure that that applicants are aware in terms of the application process. And the whole timeline for applying for a medical cannabis license for both 2023 and 2024 is on our website.
It's great information. Thank you for adding that to the record. I want to thank you and your team. I want to thank the Deputy Mayor and his team. Importantly, though, I want to thank all the public witnesses who testified both on the Deputy Mayor for Planning and Economic Development's work and budget, as well as the budget of Abca. This marks the end of today's budget oversight hearing. The committee will convene again on Wednesday, April 12th, 2023 at 9 a.m. For its final budget oversight hearing on the Office of the Chief Financial Officer, the Office of Lottery and Gaming, and the time is now 5:10 p.m. and this hearing is adjourned.